to have a certain ROI? Is it going to happen soon? I mean, I think that's the work in progress that's happening. There are a lot of innovations yet to be cracked. For example, people are creating avatars. Now, how do you create avatars which are real life and can behave real life? And if these avatars are created, then what is the social engagement interaction that they will have? You know, earlier on we were talking about the issue with kids using these platforms and the concern that we have. In fact, some of the biggest challenges that you will see are in the area of ethical behavior, fraud, misuse. Already, people are talking about places where there's being bullying of people, who are on these kind of platforms. So all of the problems that we have today in the real world is going to become multiplied in the metaverse, and many of them, I don't think even we know what are the problems and how do we solve those problems. What about privacy? So, in fact, we don't even know what it means in terms of psychological impact on people who are going to live as some avatar there in a fantasy world. And how are they going to react when they face a real world, which you have to face on a daily basis? So, there are many, many problems and challenges need to be overcome to get to a real metaverse, but there are many components of it which are real, which are implemented today and seeing value for our clients.
Sure. I just want to call out, is Shaurya around? Just want to do a check on him. Okay, I guess he's still not reached here. Uh, so I think the very valid points. I think in terms of the problems and challenges, my own personal view is that I think the Generation Z, okay, and the young people, there's no shying away from the fact that they're going to spend a lot more time in a digital space, okay, and we'll have to obviously solve for these problems. I think how do we kind of give them a more enhanced immersive experience? That's what I think metaverse is about, and there's a lot of potential in terms of how that gets applied. The other thing which I picked up from you, Anand, was that it has to add on to the real life. Okay, it can't be a alternative for what the real life is. It has to add to what our real lives are in terms of whatever you can then get as an experience in the virtual world. Uh, Now, moving on, I think you started picking up, Manjunath, on some of the issues and challenges. But probably, Anand, from your perspective, before I come back to you, Manju, uh, for this new concept, okay, to really scale up and really gets applied to solve some of the real life problem statements, what are the roadblocks or challenges you see which needs to be overcome?
Yeah, so that's so you're very right about this point. See, any technology, when you see our history, when internet was introduced, internet, when the dot-com bubble was there, so everybody, any company which was related to dot-com was enhanced, the share prices went very high. Before then people realized that fine, okay, this is .com, but what do we do on it? That's when this question was also arised, and that's when the burst happened. So from a Facebook, which was the net worth of Mark Zuckerberg around 106, now it's come down to 55. Is this the same process which happens when you introduce a new technology? Yes, for sure the technology is here to stay, but when you introduce a new technology, it rises up because we are a social media world now. It rises up very quickly, but then we also realize that what is in for us? Why do I use this metaverse? What am I going to get out of it? And that's where the correction happens. So today we are seeing a time of correction, and then real companies with real value propositions, okay? Like if I'm taking care of education, somebody else will take care of something else. And these companies will arise, and then we come together, the true metaverse will be created. Now the roadblock, the major roadblock that we are facing in the metaverse is everybody is trying to create their own. Meta has its own platform, Decentraland, you see Sandbox, you see so many of these big names. They have their own platform which is made on a technology which doesn't talk to each other in a little bit of technical terms. Okay. So an avatar which is created on a metaverse cannot go to Decentraland or something like that because they're using a different language altogether. So when this will change, when a true metaverse will emerge, that as an internet. See, internet is you put your website.com, that's it, right? Or whatever. So you can navigate between these sites. But on a metaverse, you have to go to one, you have to install that, probably hardware, pay a lot of money, and then access whatever they have to give you. And this, once this changes over a period of next 5 to 7 years, or when the technology gets more enhanced, more user friendly, it's stop to access it is not too much of cost. You will see a true metaverse emerging, and which will integrate the whole system in a way that it will enhance your today's life and give you a very big experience. That's the potential of metaverse, and it will happen very soon.
No, I think thanks. I fully agree that interoperability is very, very important for achieving a certain scale, whether it's metaverse or any other new technology or the platform. Uh, Manju, I know you started touching upon some of these challenges, which are more on the ethical side, but any other blockers or challenges you want to talk about?
Sure, sure. See, I think the today one of the most fundamental challenge is the user experience, which is coming through the devices. I think Arvind referred to it earlier on that you need to, buy an expensive device that you will need to wear, and if you are to be persistent there, you need to be using it for a long time at any given point in day. So I think there is a significant amount of innovations happening to transform these devices to make them as simple, as easy to use, and as easy to experience, so that the consumers are able to use these devices as easily as they would use the glasses that you're wearing, or the paper or the pen that you're using, etc. I think that's the first degree of innovation that will kind of solve this adoption problem. A device that is very easy to use, consume, and normal. The second one is in this whole area of the software. I think there was a talk about the interoperability of the software, and also our ability to scale building such software for usage. You can imagine today if you want millions of people to be using such a platform in million different ways, there has to be some software to be developed that cannot be developed in the classical way that we are doing today. So there needs to be a new paradigm to engineer these new avatars and new experiences on this metaverse world. I think that is the second big transformation that is required for us to get over. The third is this entire consumer behavior change. See, today I think we are talking about this Gen Z. I don't know now what we'll call the next generation after this, but they may be comfortable doing these games and everything else. But what about rest of the whatever 8 billion or 7 billion population that we have? Even today, you're seeing a lot of resistance to use technology in different fashions. And here you're talking about being in this metaverse almost your life of sorts. So which means a very different experience that the consumers will go through. So they will need to adapt to a different world almost. I think that's the third big dilemma that we need to address before it becomes democratized and before it becomes universal for everybody to participate.
No, I think if I just put yours and Anand's piece together, uh, I think my take is that for the non-generation Z to adopt it, okay, uh, it really needs to add some value to what's the real life already today is, okay? Because I'm sure before iPhones, okay, people were still going on, and I'm sure after iPhone, nobody can just let go of their smartphones. I'm not promoting iPhones here. Sorry about that. So smartphones. But I think it has to be something which adds to the experience. And if it has got value, I guess across generations, people will adopt it. So Shaurya, welcome.
This one I can't hear you.
Okay. Can we just change the headset? Can you hear me now?
I can hear you.
Yeah.
I can hear you. Yeah.
So again, thanks for joining in, Shaurya. If we were having this chat in the metaverse, I'm sure our avatar could have arrived on time, and you would have avoided the whole Mumbai traffic. But thanks for being here. Would you like to talk about what Flam is doing really in this space?
Sure, 100%. I think Metaverse has been talked about pretty much in the last 8, 10 months. But it's very simple if you think about it. everything that we know on internet today will change in the metaverse, but essentially it's going to be everything 3D. So internet in the last 25 years has been completely 2D. In metaverse, it's going to be 3D. And that's a massive change, right? So whatever we are doing on internet today, whether it's like social networking or gaming or e-commerce or advertising, everything will happen in the metaverse. So it's not basically a particular use case of gaming, social education, or e-commerce. Everything will happen in the metaverse, and it's essentially a massive change because we are moving from everything 2D to everything 3D AR VR. So I think when we talk about such a massive change, it's not easy, right? Because we're talking about 4 billion internet users now becoming 4 billion plus metaverse users. So it's a massive shift in the whole way people have been interacting with technology and internet in general, right? So I think what Flam basically is doing uh, is becoming that starting point, right? So we believe that whenever you want to make sure that there is massive adoption of something, the starting point cannot be logical. So this is a little counterintuitive, but like we believe that logic doesn't lead to massive outcomes. There has to be something illogical. So social networking in general, or basically entertainment in general, is illogical, right? Like there is no logic to why people should have cat faces or dog faces or Snapchat, right? But Snap is a large company, right? Like millions of monthly active users. So we believe that when massive adoption is talked about, you have to just keep logic aside for a bit. Like you can talk about education, you can talk about e-commerce and advertising. All these are logical use cases. But we talk about illogical use case, which is like people should have fun in the metaverse. Like how do you really interact with your friends? How do you really create 3D AR VR content? And then that's exactly what we believe in. So for example, internet got massively adopted not because Flipkart happened on internet. Flipkart is a large company, obviously large company. Swiggy is a large company. Ola is a large company. But internet got massively adopted because Facebook happened on internet. Orkut happened on internet. Snapchat happened on internet. And people just want to have fun and connect with their friends, right? So I think in the metaverse, when we talk about Flam, our idea is that how do people socially interact in 3D, AR, VR, and that has to be the starting point for massive metaverse adoption.
I think thanks for that interesting perspective, Shaurya. And being a logical person, I would still say that I actually see where you're coming from. Because 25 years back or 30 years back, when probably somebody would have said that there would be something like an internet or something like a smartphone, okay, it would have sounded quite unreal or illogical. Okay, uh, so today, whatever we've spoken about our metaverse in terms of the 3D world, the avatar, and you kind of sort of living an alternate life, okay, in an alternate world, may sound illogical, but it can be uh, probably a reality. It's there already in terms of some shape or form. It's there, but at a mass scale, when it becomes a part of our life, it's something which is absolutely possible. Okay, and given the pace of evolution, I was talking to Manjunath that there were times when evolution used to happen every 10, 15, 20 years. Probably now that evolution cycle is 3 to 5 years. Okay, so yes, I think the whole metaverse as a concept is quite nascent in its early days, but given the pace of evolution, probably this is something which will become a part of our day-to-day life in probably 3 to 5 years.
100%, and I think, like you rightly mentioned, I think the evolution is going to happen really fast. So if you look at the evolution of content in general, right? So we started with text-based content on Orkut, just talking about social media in general. We started with text-based content on Orkut 25 years back, 20 years back, I think. Then we were on image-based content on Instagram, right? And then we were on video-based content on TikTok. So future of content is going to be 3D AR VR, and it's going to happen pretty fast. And it's already happening. It's already happening in the US. If you look at companies like Roblox, 50 million monthly active users, 100 million monthly active users are already doing it on such gaming platforms. So yeah.
No, absolutely, and my son is one of them as well. So,
Yeah.
uh, I we got just a couple of minutes. Any audience questions?
There
Can we
is
have the
one.
mic there, please?
Hello. Yeah, hi. So, towards the initial part of the discussion, when we were talking about the challenges that our future kids would face, although my daughter is just 1.5 year old, still I would like to know, should we not also look at the regulations in terms of when we are going to a world in terms of metaverse that's going to be 3D throughout, like in the longer run, like you guys said? So as of now, as far as I'm aware, there are no regulations as such to that perspective. So I would like to know the panel's views on what do we think, should we have regulations and how should we go about it?
You like to take that?
I'd like to take, in terms of kids, first of all, regulations is something which is very, very important. You rightly pointed out. But sometimes, regulations and governments come into action once there is a lot of damage which has already been created. Most of the times, this is when they get active. But in terms of, as me, as an owner of a company, okay, I'm building my platform as a father too. So my platform has so many regulations that I foresee that any child who's on the platform doesn't get affected by somebody who he doesn't know, and he's not exposed to things that he should not learn for his age. So I think owners of companies should take this ahead and try and put regulations and not to cash in onto opportunities which the metaverse is creating by exposing our users and try and see their interest to start with. So we're trying to do it, and hopefully other companies will also get into the picture.
Yeah, I mean, if I have to add, first of all, I think the concern is very genuine. And I think this is universal. Pretty much every policy maker is worried about it. Every technologist who's building is also worried about it, like Arvind was mentioning. And it is not like there are no regulations. I mean, today, any data privacy regulation or data management regulation will apply even to the metaverse. So you will see a lot of current regulations being applied or should be applied to the metaverse. But I also think that there will be many more that will come because I don't even know today the real world problem that we have are going to get, amplified out there. Like we were talking about abuse. If there is an abuse on the platform, how do you handle it? Can you ignore it? Say, no, that's my avatar, it's not me who abused. So how do we handle such a situation? So I think there is a lot more regulation to happen, and it will catch up, obviously. But certainly the concern is genuine, and it is being worked on by different governments, agencies, etc. And I also believe if we don't have a sound governance mechanism for such platform, it will fail. It will be some sort of a graveyard where people would then avoid going.
Thank you.
Good morning. Am I audible? So, is there any way that metaverse is going to interface with the real world? Why I said, well, Arvind mentioned that it has to add to the real world. Now, say for example, a banking transaction. Suppose you are doing it in the metaverse, right? Is it going to reflect in the real world in the bank branch? So, if I do a transaction over there, does it reflect in my bank branch? Just a question.
So Manju, would you like to take that?
Yeah. So, I'll give you some examples of what's already happening. And like you rightly said, see, one is living in this fantasy world completely, which may not have anything to do with the real world. So, metaverse gives you that opportunity. So, you as in an individual or a set of people can actually live their fantasy life in that world, which has nothing to do with your real world. Okay. That's a possibility, right? A different set of games are there today. People play a game which has nothing to do with the real world. You kill, they kill, whatever happens, no problem, right? But when you look at enterprises, you will need to look at something today which are physical, leverageable, etc. So today, where you have seen applications is people need to understand the working of a machinery. And let us say we want to understand how an engine is working, and you need to train a set of people about how the engine functions. today it happens through a very complicated, multiple years of aerospace engineers who get trained, etc., etc. But if you want to do a quick enablement and training, people can do it through a simulation of an engine. So now you can split open, the engine parts. You can easily see which goes where and what is this part doing, what are the dependency. I mean, similarly, medical students. Today people are able to train medical students slightly better and faster because you can simulate or at least, give a real life experience of a human body, right? And these are all real and physical and, you're learning. So these are the kind of applications that you will certainly see growing forward, becoming more and more, relevant and implemented across the world.
I'll just add, since you mentioned banking, I'll take a bit of a shot at it. Because what we are already seeing, as an application is, let's say, a front office or a branch. Okay. Imagine you're a non-resident Indian, sitting, you're not in India, okay? Yeah, today there are certain communication channels with which you can connect with the bank branch where you have an account, let's say back in India. But imagine a more immersive experience, okay, where sitting somewhere outside of India, you can still pretty much visit the branch, sit across the table to a financial advisor or anybody you need to interact with, and have a conversation and interaction which is immersive in nature. And yes, I think as a step forward, which is where technology will have to catch up, that can you have a verifiable digital identity, okay, in that immersive experience in the metaverse, where if you have to sign a particular paper or authorize a transaction, you can actually do that, okay? So it's definitely a possibility, and it's something which obviously needs to be solved for, with the further enhancement of how you integrate digital identity, which is verifiable, into that immersive experience of just interacting in a virtual branch with a financial advisor, which is already happening. Okay, one last question, because this Time's Up has been there for quite some time. So maybe we'll just take one last question.
Morning. So when metaverse is spoken about in conjunction with NFTs, something that's widely spoken is interoperability between the metaverses of two companies. What do you think about interoperability being a critical thing in the widespread adoption of metaverses, and how company collaborations could happen in future?
Yeah.
I think he's very right on that. That's when the future will start. Yeah.
No, I think, if metaverse has to happen in its truest sense, there has to be interoperability. Just like the way we interact on an email today, we can send an email from anywhere to anybody across any platform. You may be using Gmail, somebody is using Outlook, somebody is using something else, but we're still able to interact and communicate. That is because in the behind the scenes, there is interoperability across these systems. So very similarly, you will see, or rather, it will happen where people, avatars, and experiences, transactions are able to happen across these platforms. Today, it's a challenge. Today, it's not happening as the way we would want it to. But that's the roadmap capability that you will see soon to make it really adoptable worldwide.
Actually, I'll just like to add, it's a race, to be honest. The race to metaverse. That's what everybody is doing. If Meta has changed, Facebook has changed the name to Meta, is because they know that the platform which gives access to everyone and all users can come and interact, that would be the way. So they're trying to make a platform rather than to solve solutions. The connection between both of these platforms or any other, it might not be possible in the next 10 years because they're on very different languages. But yes, eventually one will succeed and people will adopt. So wherever our users will go, I think that is the platform that should succeed. Yeah.
Thank you. I think we'll close the panel here. Thank you, Anand, Manju, and Shaurya, for an interesting conversation. And thank you, audience, for your time early in the morning. I hope this was a useful conversation, giving you a bit of a perspective on metaverse, its applications, and closing our conversation from my perspective, I think whatever I've heard, I hope you agree that as a concept, it's new, but the underlying technologies have been around for some time. It's definitely something which has potential in terms of applications going forward, opportunity for innovation. Definitely not a hype as far as I can see and based on whatever I've heard today. So thank you for being a fantastic audience. Thank you.
Thank you, Siddharth. Thank you, panel, and thanks, audience. Bye.
Again, I know it's a silent conference, but ladies and gentlemen, can we give our panel a big round of applause for their very practical, pragmatic, and most importantly, experiential take on the future of metaverse. We are at Global Fintech 2022, where we're discussing and deliberating the disruptions, the trends, everything in and around to do with fintech, and also figuring out ways and mechanisms to showcase India's unique, equitable, inclusive, affordable, and sustainable model for global fintech leadership. And to do the same, we also have a miscellany of booths, expo outside, Finclusion Labs, tech talks, where we have some of the most revered personality from the industry sharing their take with all of you, which are highly experiential and filled with practical insights. So make sure that you make the most of this oasis of a fintech fest. On this note, ladies and gentlemen, I'd also like to take the opportunity to actually acknowledge some of our partners who have played a pivotal role in shaping this event and bringing it to life. Beginning with our theme partner, WhatsApp, co-powered by partner, Amazon Pay, management partner, Encash Spend, in association with partner, Perfios, payments partner, Cash Free Payments, and CEO's dinner partner, HSBC. Now, one of the biggest takeaway from this session was that the future of content is going to be AR, VR, and the fact that metaverse as a technology is emerging and it's going to be big, but it needs to have some mechanism of governance going forward. Well, that was the context of our first panel discussion. Going forward, we'll be actually discussing and deliberating the role of hubs in fostering financial innovation, because as technology revolution reaches top speed, the rise of innovation economy has come to a lot of prominence. The idea that business growth leads with innovation is not a new concept, but the strategy of fueling new ideas through the collaboration between government, banks, and other organizations to unravel long-term implications has suddenly become mainstream. So we are going to be talking about how creating a dedicated space, whether it is physical or virtual, has become an increasingly popular approach for companies to generate the next big ideas. I hope the panel members are here. Lovely. So to actually maneuver and lead this part of the conversation and moderate it, we have with us our moderator, Mr. Aparajit Bhandarkar, who is the partner at Verenium Capital Advisors, Verenium Next Gen Fund. So a big round of applause for Mr. Bhandarkar. And joining him on stage are the following speakers, beginning with Anu Tiwari, partner and co-head Fintech, Cyril Amarchand Mangaldas, Shadab Tayabi, President Singapore Fintech Association, Shruti Chandra, Senior Assistant Vice President at Invest India, and Madhusudanan, co-founder at M2I Fintech. So a big round of applause for all our speakers. All right, over to all of you.
Thank you, everyone, for joining this morning and spending time with us. Are you all able to hear? you all able to hear us? Yeah. Just hold on for a second. There's some headphone issue with one of the panelists. Yeah. So the main concept around this is that ecosystems thrive on creation of hubs, and fintech in India has grown rapidly. Last few years, we've seen an enormous growth in terms of payments, the rails of payments being powered by NPCI and various participants in the market. This has been enabled by the government creating a lot of the payment stack for India, which is comprising of the JAM Trinity as well as other new elements that they're launching as a part of India Stack 2.0. This has helped create a lot of growth, both not just for the payment space, but also in the lending, wealth, insurance, neo-banking space. To discuss this, we have eminent panelists, not just from India, but also from Singapore. The idea is that we would pose questions and get some of the thoughts. So my first question is towards Shruti to sort of give us a sense of what Invest India is doing and discuss a bit about the India stack as well.
Sure, thanks. So Invest India is the national investment promotion and facilitation arm of the government. It's a fully non-for-profit organization which is funded by Ministry of Commerce. And we have various initiatives under Invest India. So the first one is the Make in India initiative, which is to promote ease of doing business and encourage investments into the country. And we have various sectoral teams. I represent the BFSI sector at Invest India. Apart from that, the main mandate for our organization is to handhold companies, both domestic and foreign, so that they can expand, grow, and also contribute to the economy. The second initiative is the Startup India initiative, which is the mandate for the Startup India team is to handhold startups in India so that they can grow and expand, and there is support provided to them. It's been a considerable journey as well. I mean, if you just look at some of the numbers, when we launched Startup India, it was launched in 2016, and since then we've seen something like a 17x increase in the number of startups that have been founded, a 12x increase in the unicorns that are being generated out of India. So overall, there's been a lot of focus from the government to provide support, handholding, and mentorship to both startups as well as companies. So specific to what Invest India is doing in the fintech ecosystem, we're also, there is a team, a dedicated team, and my colleagues Raghav and Atharva here as well, which is to support and handhold fintech companies and companies from the BFSI ecosystem so that they can both get operational support as well as any policy-related support that they require, so that they can grow and expand. Also, it's important to note that there is also an interministerial steering committee which has been formed, which includes all the regulators as well as all the key government departments to support fintechs to understand what are the best practices globally and what are the regulatory changes that we need in India so that we can help them grow. So India is also a part of that. Apart from that, we also have joint working groups. So the government of India is not just looking at being a fintech hub, but it's looking at becoming a global fintech hub. So we're also we have joint working groups today with two countries, which is Singapore as well as UK. And the idea there is to understand what are the global best practices in those countries, how can we incorporate them, what are the cross learnings that can be gained. And this is chaired by the regulators from, it's chaired by the departments, the key departments from both the countries, as well as the key regulators are also a part of it. Another initiative specific to this, what we're looking at doing is trying to build bridges with different countries. So Invest India today and Government of India today has 15 bridges with different countries, which is the idea there is to promote cross-learning, cross-collaboration, and to support the startups of both the countries so that they get a launching pad in India. And I think your second part of the question was India Stack. And so, that's been a pivotal technology revolution in India. And I think the most important thing there, I know you have many questions, but is that what it has done for the Indian economy. It has really brought even, the furthest person who didn't have access, and it has provided them access. So the idea there is that, how do we transform that? How do we take the new technologies that we formed in India and take them global? And that's what the government is focusing on, that, we have great technology today, but then how can we share it with the world to truly become a fintech hub?
Thanks, Shruti. A bit of a question to Shadab to give a bit of international perspective on the space, and a few questions in terms of the digital infrastructure in Singapore. Also, how does the collaboration between industry bodies and regulators help Singapore sort of do very well in the fintech space?
First of all, thank you, Prajit, for the question. I'm very glad to be here and talk about some of the developments that are happening in Singapore as well. Very happy to hear from Shruti that you want to be the global fintech hub. So do we. So there is a healthy competition going on between countries which are more forward-looking and which are also looking at harnessing the technologies that are upcoming. And it's not just the application of the existing Web 2 and Web 2.5 technologies, but also Web 3 technologies in our regular day-to-day use cases as well. So just to give you a bit of a color and picture about how the Singapore fintech ecosystem has evolved, we started looking at fintech a bit more deeply back in 2015 when our regulators, MAS MD, gave a speech at the Law Society talking about how fintech is going to change the world and how it's becoming more and more pervasive. And as a country, we took some very significant steps to ensure that fintech gets recognition. Fintech companies are sort of led into directions which would help them grow, and also to have a more public-private partnership, a bit more in a more structured and deeper way, so that people are able to harness the ingenuity and the innovation coming in from the private sector, and also with government support, you can push it further and much beyond the earlier expectations. Just to give you some numbers, when we started our journey, the investments into the fintech space in Singapore were close to $20 million back in 2016. As of last year, the investment amounts have grown to, and this is equity investments that has grown to close to $4 billion US. So we have really picked up, and thanks to the the support of our regulators as well as the other policymakers such as the Enterprise Singapore and other departments, there has been a huge amount of support coming to the founders. Just in terms of numbers of the companies, as of 2021, we had 1,400 fintech companies in Singapore. So you'll be surprised, the area of 720 square kilometers, but we ended up having like very large base of fintech companies. Majority of our fintech companies are basically B2B fintech companies. You can imagine a population of 5.5 million people. There's only so much B2C companies can do, which is slightly different. I would say exact opposite of how India's fintech ecosystem has grown. It has started with B2C mainly, and there is a little bit of B2B fintechs, presence in the landscape, but majority still B2C. In Singapore, 70% of our companies are B2B fintech companies. Now, to your question, Aparjit, on how the collaboration works, we work with the policymakers, being very open and clear about what our demands are from an industry association perspective, and also to be very well. We try to be as well organized as possible within our organization as well, so that it's easier for us to approach the right stakeholders within the public sector space. my association is the National Industry Association of Singapore, representing the whole fintech ecosystem. We have about 800 companies that are members. You can imagine the segments range from payments, which is one of the largest, but probably not going to be the largest in the near future because you have wealth tech, insurtech, Web 3.0, RegTech. These kind of segments are coming up as well. The majority representation, as I said, is in payments, but Web 3.0, as an example, is rising up too. Each of these segments are well represented through subcommittee structure within the organization. I represent the executive committee, which is the board of directors, 11 of us, but we have 10 different subcommittees focusing on industry groups. Now, all these industry groups, most of them have a clear direct communication channel with one of the supervisory departments as well at MAS, because then you are acting as MAS is our national regulator, central bank. There is a clear, channel of communication, which is relatively informal, to be able to voice out what we need and what doesn't work. So we are able to at least put that out in clear communication with them, and we vice versa. I mean, they come to us about the challenges as well. They share with us the challenges, and we are able to work collaboratively. For example, payments subcommittee will be having a channel of communication with payment supervision department. The digital financing subcommittee would be having a direct communication channel with capital market intermediaries department, as an example. So these are various things that we do. I just want to highlight one aspect which is quite unique, which is related to our buy now pay later (BNPL) companies. It's not a regulated sector in Singapore. As of earlier this year, the amount of transactions that were done on BNPL last year was $440 million US, which was less than 0.5% of the overall transactions done over credit cards and debit cards. But it is a rising sector, so it can create issues of consumer indebtedness and overselling. So in order to sort of manage the regulation that might come up in future, we actually collaborated with MAS, and we are at the brink of releasing a code of conduct, which will be a self-regulated mechanism in collaboration with MAS, so that whenever the regulations actually do come, whenever it is required, we have already brought the industry to a level which makes it easier to scale. And this is only possible because we have that open channel with the regulator working together on these aspects. Hope that gives a bit of color.
Thanks, Shradha. Another question to the panelists, and this is directed to Madhu and Anu. Basically, open banking and open finance is becoming very important. And, the other part is that how is data going to play an important role, and what are the regulations going to be around data as we go forward?
Okay. Why don't I just take the first stab? Sapraji, thanks for this, and just to sort of allude to the points that the co-panelists were making. I just want to start off saying India is the fintech factory for the world. So we may have hubs in many markets, but the scale and the product opportunity that exists in this market is phenomenal, right? And we believe that as a company we are kind of spreading our wings and going to other markets, and wherever we go, there is this whole curiousness about what's happening in India. How can we port some of these opportunities to the respective markets, right? Coming to your question around open banking and open finance, I think it's important to sort of look at how some of the markets actually operate. So if you look at West, you always have innovation on the edges. So there is always this whole aspect around let me go break things and build, and regulation kind of catches up, right? And you just, as you move east, in Europe, if you see, they had some bit of regulation that came in, and then there was a framework around which, the whole thing played out. But in India, we actually have standardization as the first call, right? So you look at account aggregator. It practically has standardized how data exchange can happen, right? So there is a framework, and none of these models are wrong, right? In some sense, because when you actually move fast and innovate, you typically would be sort of breaking something or the other. And then when it becomes large, the regulators then sort of clamps down on it and puts those frameworks, right? But in a market like India, it's very important, and we have tested this at scale with Aadhaar, with UPI, all of the things where we have standardized. So UPI, for example, it just simplified the whole payment experience to one screen. So whichever app you use, it's the same screen on which you'll enter your 4-digit PIN or a 6-digit PIN. Right? That's how idiot-proof it became. So the standardization actually led to broader adoption. Likewise, we are seeing in other spheres of financial services where we are actually setting a public good agenda where a lot of this is going into standardized sort of offering, and then the market participants actually adopt and sort of figure out how to monetize on it, right? So therefore, it's important for us to sort of really look at at the intersection of privacy, at the intersection of how commerce and payments are sort of coming together. What are the guardrails that we need to build as a country to ensure that it just thrives, right? I think we are at that moment. If I just crystal gaze and look at it 5 years from now, we'll be a far greater data economy than where we are today, right? So that's my take.
Thank you, Madhu. Thanks, Aprajit. And a pleasure being here. This question is probably one of the trickiest ones, given the ambit it can cover in terms of open banking, open finance, and data. Because today, at least in my limited experience, the central bank is increasingly becoming the data regulator. I mean, leave the whole PDP discussion aside, it being introduced, withdrawn, all of that. If you see in the last 1 year, almost every 2 months, there is something which has come out from them which is creating a string of pearls where licensed market participants are not allowed to share data with anybody else. To the point that there is, I won't say confusion, but interpretation in terms of what about one licensed participant to the other, because the way the rails are flowing, be it on lending, be it on deposit taking, which is wallet primarily from a fintech standpoint, or be it processing, which is payment aggregator. I would leave gateways out, but UPI is covered in a way. Who can share data with whom? Of course, if you talk about neo-banking, open finance, unlicensed player, increasingly is not wanted by the regulator as a data holder. So models which have been set up historically, basis purely data monetization, again, we'll have to see where they fall. I mean, the latest example is the data privacy clause in the digital lending, which really any SMS scrubbing type models need to revisit those. But I feel there's a broader issue here because I think why has open finance banking really evolved in India? If you see 5 years ago, we all went to the established players. I think it's the whole friction, and a lot has been said about this qua, Wall Street and anti-Wall Street in terms of large banks and the West Coast approach to looking at it. So access, ease, and I think the whole composition of younger audience. I mean, it's a 10-minute delivery world now. Nobody, I don't know how many of us in this room went to a bank branch the last time. It's all app-based. I mean, big tech is another topic which can take up a session altogether on this. But the way I see this evolving from a data standpoint is because regulators always look at a systemic risk, and again, speaking from their standpoint, when they feel something has become big enough to create a domino effect, both upstream, downstream, and of course, customer protection. And founders and industry know this best in terms of when something has become big enough, right? I mean, you should always expect scrutiny, and it takes 1 year, is what I've seen from something happening and then final guidelines, the whole journey of consultation, committee, draft to final. It's taken actually 2 years in digital lending, if you see from 12th Jan 21 to 2nd September 22. I mean, at least just on this topic. So increasingly, regulations will come. They're happening world over. World over, if you see, and especially in our country, the regulators are now, the state is, I won't say coming back, it's too strong a statement, but across various areas you see, state wants to see what's happening. Because, and I think it's important to understand why, and I'll squarely address the question you raised. Problem is, in the world of physical, we could control it through FEMA. We could control it through national borders, import, export. Today, who's the seller, who's the buyer, which country, which geography, hacking, it's actually become a, if you look at this from the, wear the hat of the regulator, there is a national security element. I mean, there are mostly good actors, but bad actors are the ones who spoil. And digital lending is a classic example. I mean, digital assets is the other example where probably in the next 2 years we may see something. So net, I think the short, simple answer to a very interesting question, Prajit, is next 2 to 3 years, if next 5 years is probably a century in this sector in terms of where it may go. I mean, given 2016, 20 billion to 4 billion. In India, numbers are even different with this parameter. But anybody who reaches a scale, any industry which reaches a scale should be prepared. And at least what we have seen, the delta between mature and the other end of the market participant is wanting to be a part of the dialogue with the regulator, not saying we don't want it, saying how do we want it, i.e. don't come post fact to say we don't like it, but being a part of the journey so you can be involved with the process. Secondly, any data-driven models, I think the principles are very simple. If anybody looks at data as property, I mean, today there are property rights, correct? If I borrow, say, your mic, for what purpose, for what period, what do I do? Can I give it to a Prajit or it's just me? It's very simple. Data laws actually think of it as a property. GDPR, which is the same thing in India, which is what RBI is doing, is fundamentally the same. So I think, at some level, and whenever there is grayness, there is a lot of cuteness which can come in from business standpoint, and which is where business also thrives. I mean, the whole West Coast, India, Silicon Valley, which I think is now not just in Bangalore, but in many parts. So net to sum up, regulations will come, models will evolve. But at some level, if anybody is approaching it from a long-term standpoint, one doesn't see a reason why those models won't survive and thrive.
Thanks, Anu and Madhu. Latching on to a bit of what Madhu said, and this is a question I would want to direct towards Madhu and Shadab. What I am increasingly seeing is that India has a great stack which is there. And India is a market which is designed to be a very low-cost market. You can't build a high-cost product in India and build scale. Singapore, on the other hand, is slightly a more premium market. Both markets trying to export fintech products out of their geographies and cater to local EMEA or in case of Singapore, maybe Australia and some other geographies in ASEAN. How are the other countries don't have some of those rails? How is that impacting you, and how is the cost in both geographies sort of impacting the rollout of products into other locations?
Yeah, I think there are three aspects to this, right? The public good allows you to do a lot of stuff which we today in India take for granted, right? So when we went out to other markets, some of the markets in West Asia, we realized that KYC is still broken. They're still in like 10 years behind in terms of the way that we do. Likewise, in payments as well, a bunch of markets, what we take for granted, where for us it's almost like utility tap water that we have payments flowing in. So therefore, the way that we have built some of this in a cost-efficient way, most of our neighboring markets at least, is a very, very small fraction of what scale that we operate at, right? So one of our customer is Vietnam country scale, right? So therefore, you don't have like many countries which has the kind of scale for which you need to build into, and the complexity to which you need to build into. Just give you an anecdotal example, when you run core banking systems, it's done with the assumption that you'll have 10 transactions in a month. You'll have one, salary credit, 2 withdrawals, maybe a bunch of transactions. But today, thanks to UPI, you have 10 transactions in a day, right? You're having your tapri, your travel. So the complexity that it puts the system through, no other market has seen that kind of complexity, right? So therefore, businesses that are getting built in India, which are addressing some of these opportunities, have already sort of factored in from an internet application, how do you scale it, right? So therefore, any market is a subset of what is getting built in India, right? That's the second perspective. And the third is the cost economics is a big factor, right? So our whole, the IT, work that we have done over the last 20 years, is because of that cost arbitrage that existed. So if I'm able to build a business, even though I may not make money in India, the fact that we have built it at a certain scale, the opportunity for us to go out and sort of sell this and make money is pretty significant, right? So there is a compelling reason for founders to start looking at markets where, whatever lost opportunity in India, you could sort of cover that as well, right? So, and yeah, that I think we would, love to see is the world as a global village. So you just have to, have, the dev in India and, sort of serve the whole world.
Thanks, Madhu. So I'd just like to add, based on our experience, right, there is, of course, a lot of merit and benefit in terms of having public rails already in place for KYC. We launched SingPass back in 2003, which is essentially the government KYC, e-KYC. And then back in 2016, we just added another element of MyInfo on it, which was data sharing, personal data sharing for easy form filling and so on. This has not had any commercials involved in it, and it's mainly like a public good. But there is another, public rail that you may think of, which is basically fast payments between two different bank accounts, for the same individual, and then adding another layer of a mobile number or an email address to identify those bank accounts. There is an element of some commercials in it as well, because one of the things that our fintechs are very, very careful, and they build in their commercial models right away. It's that there is an element of cost involved in usage of this kind of infrastructure. Now, if you start with that aspect in mind, if you're expanding to places like Australia or Malaysia or even the ASEAN, broader ASEAN region, you're always keeping into account that there is a cost element involved in it, and you will be competing with the for example, in this case, the KYC companies, the global KYC companies, who already have much, established stack as well. So that mentality of having a commercial element built into usage of public rails also does help you in sort of does help our fintech companies, our B2B fintech companies, to be more forward-looking and be much easier for them to scale as well beyond just the borders that they operate in. And like I'm repeating myself here, that majority of our fintech companies are B2B fintech companies. So, we are only a hub if we are being the bridge, to use your word, Shruti. We are also, working towards, being the bridge between ASEAN, the Association of Southeast Asian Nations, the 10 nations, ASEAN and China, and ASEAN and India as well. Because, our cooperation agreement that we just signed with our Deputy Prime Minister on Sunday, at the GIFT City, will be taking our collaboration to the next level from India-Singapore perspective, and we are just hoping that our fintech companies from either side can actually look at markets, because of course India is a large market and a pretty big market for our own B2B fintech companies as well. So the more the collaboration, the more the benefit for our fintech companies.
Thanks, Madhu and Shraddha. I also wanted to take this opportunity, and the question is more open to all four panelists, to talk about regulatory sandboxes and what impact it has on developing the ecosystem. And this can be taken up by any of the panelists.
I think I can start. Today both RBI, SEBI, etc. have come up with their own sandboxes. And I think the impact that it has is that it allows you to, really experiment. But also the fact that India now is looking at taking best practices from other countries. I mentioned, for example, we have the joint working group with Singapore or with the UK. What the regulators have also been doing is to take best practices from other countries and incorporate it into India. So that has had a huge, impact on the kind of support and mentorship and the ability to experiment within those sandboxes. And now, increasingly, the regulators, for example, RBI has been going into different segments. So it's not just a one-shoe-fits-all approach. It's a very nuanced approach to supporting different segments and seeing what needs to be prioritized as well. And I think that has gone a long way in giving a lot of impetus to some of the startups so that they have the ability to experiment, to take that risk.
I'll just chime in terms of how we have evolved from a regulatory sandbox standpoint, particularly with RBI. There's a lot of interest in knowing, right, the amount of time and energy the regulators invest in selecting ideas and putting that through a process where you have outcomes which are backed by empirical data, right? So to Anu's point earlier, if a policy is going to take a year to consult, put it out, in that intervening period, you can actually have some of these actually market tested as well, right? So it's extremely important. And we have actually looked at areas that typically have been, a no-go. So cross-border, for example, great outcome. We've had like 2-3 ideas that probably will get commercialized with, with the regulator's blessing. I think in a way, it's actually feeding into what future regulation could sort of play out. So that is pretty exciting, from my perspective.
So probably being an outlier, I have a bit of a contrarian take on Sandbox. Just having seen the first time this concept was recognized in writing by the regulator was in Tarun Ramadurai Committee, Household Finance Committee, 2016 report came out and had a chance to put together the Sandbox section. When you are curious, you look at the world, when you are idealistic. The whole challenge again, and I think with this concept, it's a great idea. I mean, that is a given. I think that the issue that happens with Sandbox and a country like India is 1.4 billion, right? It's like saying, you go and test it out there, don't come on the stage. But once it's tested out, how do you integrate that idea or person with the mainstream? Because you cannot have policy for two different sets. So Sandbox is what? It's saying, look, let's try it out. It's a little play area, literal interpretation, sandbox. In a sand, go and play, right? But then, for it, even if it's successful, what next? Will it result in the policy change for the mainstream? Because a policy, if it is different, we have courts, we have constitution, it will get challenged and thrown out. I mean, I'm just wearing a regulator's hat. Unless you change the policy for everybody, right? In that case, you will have companies with $1 trillion+ as well as $20 million, both playing in the same rules. So unless you have a scale-based approach, like the NBFC, for example, the challenge I see is, and again, I would, something just having tested, which company world over do we know or, we are aware of, which was a part of a Sandbox cohort? Like we talk about YC cohort and how so many names have come up. At least I couldn't think of any, if you recall, in any world. I mean, the Sandboxes in UK, Hong Kong, Singapore. Because the whole challenge is, how do you integrate success of that model? And be it SEBI, IRDA, RBI, everybody has Sandboxes now. Because you cannot really, my point is when that Sandbox period ends, then what? Because I still can't do that activity because my mainstream laws don't allow it, right? Even if it's successful, and you cannot say, but this person is successful, so let them do it and let others not do it. So there is some very bigger issues with a country like India. It's a great idea. It's a great learning experience, but at least I don't know at this point in time, basis how the models are structured, what will happen in future. I think, and the second point is, probably India is the only country where every regulator has a sandbox. You see UK, you see Singapore, it's one, I can actually do across products. And Fintech is large. Fintech is pension, insurance, securities market, digital assets, I won't even get into it, central bank. Point is the kind of regulatory coordination, and products are regulated by different regulators. So point I'm making is, how do you have a successful use case without integrating various, what is Super App? It's to build in all of these in a particular model, right? So it's a very complex question. It's a great idea. It's great for visibility, I would say. If I was a founder, I would definitely go for the cohort because to see my name in that list is great. It gives you a, but if somebody asks me what after 3 years, at this point in time, I don't know.
Just one counter to your, antithesis is that regulators are in no hurry. Their time horizons are 15, 20 years, right? So while we are, feeding for the quarter. So therefore, I would say that, in 5 to 10 years, you will have a very different sandbox environment.
And Madhu, just one...
I'm an eternal optimist.
Just to add to this, basis, again, the more of the world you see, the more optimist or pessimist, a bit of a balance here. Our regulators actually look at sandbox in a very different approach. You go play, I will not regulate. Fintech regulation. If you become systemic risk, if you become too big, then I'll come in. So we have an inbuilt sandbox with the way our regulations work, which means if it is, in that gray zone, and what is gray keeps evolving, I won't stop you, especially central bank. I mean, SEBI can be different, every regulator has a different approach. You go play. So there is an inbuilt sandbox in terms of how at least the central bank has historically approached. I won't bother you, I won't come after you, I won't do anything. If the industry becomes big or you become a systemic institution, I mean, there are certain fintechs who become larger than the rest, then you will have a glare on you.
Sorry, I'm just going to come in here. Sorry. Just, again, completely agree that I think it's important to have, maybe more conciseness in the approach to sandboxes. Not every regulator coming out with different sandboxes. But I think it's also important to note that, they only regulate when, like you said, there is definitely a systematic risk. So it's not just because the industry becomes big, but it's more about who it puts at risk. So I think that's an important distinction.
So maybe I'll just come in from and share my experience, in our country. One aspect is we have not seen a huge amount of acceptance rate, a very high acceptance rate for the regulatory sandbox, which was launched in 2016 for us in its first form. So quite a few of our member companies or would-be member companies were not accepted into sandbox. I think the regulators' view there probably, and I'm just conjecturing here, is let's not make it a marketing opportunity for people, because then of course if you have got if you are accepted into a sandbox, it goes very high up. You go very high up in your investors list. So you may not end up getting the best out of it for the real business reasons, right? So that's my conjecture. The other aspect is, of course, even regulatory sandbox for us, we have seen it evolving. We started with a much more stringent process with a very high bar, but then back in 2019, the regulator came up with an express option, which was for low-risk activities. Now, the ultimate objective of having any of these fintech companies go through regulatory sandbox is, in the end, whether you get a license or not to operate, because you're continuing to do the business activities that you actually signed up for. It's just that whether it has been successful by getting a license, and you yourself in the end decide that you're probably not going to pursue it because it's not sustainable business wise. You rather quit and exit without graduating. So those are two aspects of it. And somebody is calling me. So just to add a point there, all this has actually led to, I would say, a more refinement in the regulations as well. We have seen, at least in Singapore, we have seen how Payment Services Act came in 2020 after a long consultation process. And there was a major shift in the way regulations were, transformed, right from an entity-based regulation to an activity-based regulation. So PSA in Singapore, the Payment Services Act, covers 7 different activities, and every new fintech or even financial institutions that are trying to venture into new business models, they can pick and choose the activities they want to be licensed for and leave out the rest. Because in the end, you want to cover as much as possible from a regulator's perspective there. But I think it definitely has worked a lot better for my SFA members, for my fintech companies as well. Thank you.
Just one point, given how interesting this topic is, I feel the only sandbox which we need is a digital banking sandbox. Everything else is, let small scale, small deposits, small insurance, everything micro. License, Singapore model, the classic one, right? Let 5 or 6 or 10 applicants try out a digital bank.
Payments bank.
I'll go full stack. The problem is, that model, if you pick a sliver, the idea is the entire landscape, entire bank, very small, even smaller than SFBs. I mean, 1,000 or even 100 deposits. Let's pick the number which is suitable. But that is where you will truly see, because what India does not have today in the fintech landscape, which is a big elephant in the room, is a digital-only banking license.
I think I'll have to take a little bit of time check. So we have about 5 odd minutes. And I thank the panelists for the diversity of views. We have Madhu, who is probably been one of the finest payments backend, runs one of the finest payment backend companies, Shruti, who is a part of the government of India, Shadab, who's giving his international perspective from Singapore, and Anu is one of the finest fintech lawyers in the country. We are now moving to the next part of this session.
Yes. So, thank you for your diverse views and disparate perspectives shared with so much candor. So, we'll be now launching a report which is on the realm of fabric of fintech, weaving new threads in the changing environment. So, I think it will be great if the panel members, speakers, and the moderators can launch this report filled with a lot of insights, reports, trends. So, I think it's going to be an interesting add to the fintech space. And the camera person has specially requested me for all of you to come together for a picture. So let's give him a good picture. So once again, the report is on fabric of fintech, weaving new threads in the changing environment.
I'll take a minute to sort of explain what we've covered in the report, and we will then be open for questions from the audience. So the report actually covers the key enablers that are there, more demographic enablers. We also covered the India stack, and that's one of the major enablers for us. We've also covered the macroeconomic factors, and we've had one of the leading economists in India, Dr. Shubhda Rao, put together some notes on macroeconomics and why it is causing fintech to be important and why it is causing various parts of the valuation chains in fintech to be affected. We've also covered each of the verticals in fintech. So we've covered how much investment has gone to various verticals of fintech and what are the key drivers of payments, key drivers of lending, and wealth tech, insurtech, and neobanks. And we've covered the regulatory section. So Anu and his team have put together regulatory frameworks and the impact on each of these 5 verticals. And there is an appendix which covers the entire summary of the regulation written by Cyril Amarchand Mangaldas. So I would like to thank my team, Aman and Vikram, who've put two and a half months to sort of put this together. Our designer, Deep, and Anant, who is here at the event. And also like to thank Anu and the economics team from Quantico for this. And thank the panelists for this. We are open for questions for the next 2 to 3 minutes, and then we can disperse. Thanks.
All right, once again, can we give them a huge round of applause for this very perspicacious report launch, which will be filled with a lot of valuable information. So on this note, over to you, Aparajit.
And the report is free for download on the GFF website. So any questions from the audience? Apologies, we sort of running short of time, but we can take a couple of questions and quickly answer them. I think we do not have any questions. So thanks for the audience for patiently listening to us. And I think we would go to the next panel. So we just take a group photo and then move forward.
All right. What we witnessed in the last panel discussion was a very diverse, eclectic, and disparate kind of a conversation, where the bottom line is that we announced that India is the fintech hub for the world, and what we really need is a sandbox for digital banking. These were the key takeaways. Ladies and gentlemen, you all are at the Global Fintech Fest, which is one of the most revered, respected, and one of the largest fintech festivals, which basically explains and poises to bring India's promise in a sustainable, inclusive, and affordable fintech global leadership in the world. That's the premise. And to enable the same, we also have a miscellany of booths, expos, Finclusion labs outside. So do make time to visit them. Up next, we have a very special address coming up. I'll be talking about this address in a few moments from now. But for now, I would like to thank our event partners who've really played a pivotal role in bringing this event and translating it into a reality, beginning with our platinum partner, Google Pay, PhonePe, Visa, M2P Fintech, MasterCard, and Falcon, and also our registration partner, Entity Data Payment Services. So with this context, ladies and gentlemen, just to give you some amount of idea, every day, in India, over 28 crore digital transactions are happening. With fintech becoming mainstream, one of the questions that occupies the minds of a lot of business owners, corporates, is the security and IT around it. And that's the topic, that's the realm and space that we will be covering in our next address, which is in a very different format. The topic that we are going to be covering is creating robust IT infrastructure and systems for technology adoption in India. And we have two mavericks coming and addressing us all in a few moments from now. But before that, I'd like to also bring to your attention, a lot of people have been asking us which speakers are in which ballroom, what is the schedule like. Now, if you want the answer at tip of your fingers, please download this app called the Global Fintech Fest on your Android phone or on your Play Store and get access to the entire agenda, the updated one too, because the agenda also undergoes a lot of dynamic changes. So please make sure that you have the agenda with you to ensure you're updated and are keeping abreast with the latest updates happening at the Global Fintech Fest. So on this note, I think we are ready to begin. All right, like I said, we are talking about a very relevant, promising, and compelling question, which is about creating a robust IT architecture and systems for technology adoption in India, where the population, the scale, scope, complexity is so dense. And for this, we have an esteemed speaker with us today. Can we give a huge round of applause for Shri Ponuraj, IAS Secretary of IT E-Governance, Karnataka? And joining him on stage, I also have with me Ms. Shweta Rajpal Kohli, Chief Public Policy Officer, Sequoia Capital. So I have both the speakers with us. All right. On this note, Shri Ponuraj sir, can I request you to address us all? Yeah.
Good afternoon, everyone. Good afternoon, madam. I'm here to present before you something what the Karnataka government has been trying to do to facilitate the farmers. So I would like to take you people away from the hassles of Mumbai to our countryside, and then what we are trying to do about people who toil there, and then how we can make their life a little easier. Now, if you talk about rural side and agriculture, we have farmers and then a lot of stakeholders who interact with farmers. But in the whole ecosystem, if you look at, the farmers really don't plays a major role, and they have to be found in the ecosystem which we build for rural side and agriculture. There are many stakeholders who play a key role, but then farmers do find hardly any place around that. So what do we do about that? Now, you all know that the banking system led by RBI, NABARD, and government as well prescribe that the priority sector has to be a focus area. But when we talk about priority sector, what is the priority and whose priority it is? Is it bank's priority or is it government's priority? Actually speaking, they are priorities set by RBI and NABARD, not by the system per se. And the priority itself comes because there is no priority for them. Otherwise, it would not have been mandated. Rather, it would have been there by practice. So now, if you look at reasons why that kind of priorities setting has to be given, is because if you look at the farmers, there are systems being built around the farmers. There are a lot of stakeholders from government side, stakeholders from the banking side, stakeholders from various other aspects of agricultural activities are concerned. Now, if you look at the government system itself, about 8 to 10 departments do deal with farmers and agricultural systems. Now, if you look at these stakeholders, both from bank as well as from the government side, if you look at what kind of systems they have done for this farming sector or agricultural, it could be agricultural credit, or it could be agricultural marketing, or it could be agricultural inputs. If you look at, it's a kind of a maze which you will have to wave through if you are to understand. If this is the maze we are talking about, even a highly educated, capable guy would find it difficult to wave through. And what will happen to a guy who is either illiterate or a semi-literate, who is day to day involved in agricultural activities, and their exposure level is at the bottommost system, and so he would find it very difficult to wave through the systems which we have built for agriculture and allied activities. Now, if you look at the farmer, whether he will have any support system, at least to take advantage of these systems. In fact, you all would know and agree that the farmer is the first batsman as well as the last batsman also, because there is no one to help him, and but for himself, he has to toil hard and then make the way through. And if you look at the farmer's bargaining power, in terms of selling their produce after they produce the crops, many a times the prices fluctuate so much that ultimately sometimes he even has to throw it on the roads. That's the way the things happen. And even access to the credit, access to input subsidies, equipments, they are all, I know, in a way, kind of farmers are put in a disadvantageous position. And when it comes to the procurement of the produce by government agencies as well as by traders, this you all know the system is not so perfect that a farmer can take advantage of it. Thus, all these lead to a price spread. A price spread is what the price which a consumer pays and what the price which the farmer receives, the difference between these two. If you look at in that, there are many intermediaries, and the farmer gets the least pie in that share. So now, if you look at the systems what governments have built or even the banks have built, where the farmer has to interact so that he would be able to at least have access to the systems of credit, systems of marketing, systems of agricultural input subsidies and stuff like that. most of them go through this classical method wherein the applications, documents, verifications, and then I know elimination of ineligible beneficiaries and that stuff like that. In that whole system, the farmer completely loses out, and finally the priority for the farmer gets completely negated. Now, what do we do for the farmers? So, government of Karnataka thought about these questions. So, they actually started building systems. So, the first thing what they did was to build a digital land record system, which will have details on land ownership and each of the farmers who cultivate crops. So, this was the first system built way back in 2001 itself. So it's about 22 years now in Karnataka we have digital land record system. Then the government came up with crop survey system so that we keep updating the land records with the crops which are being grown on the fields of the farmers. And then also government came up with crop insurance system so that farmers would be protected against the vagaries of monsoon or any calamities, and then the farmer going through a distress. So, then government of Karnataka also built Karnataka GIS system so that we can put the things together and try to provide certain services in a better way than what we used to provide earlier. Then finally this system of fruits, which is farmers unique ID system, which was created so that the system would be able to link each and every land parcel in the state to the farmers in the state uniquely, and then also provide the data on the farmers and then farming in a big way, which can be made use of by various stakeholders, especially financial institutions like banks and the fintechs. Then also government of Karnataka came out with another system which is called as Kutumba, which is a social registry in which the details of each family members residing in Karnataka and a lot of attributes, personal and also the educational qualifications, the profession and the income levels, all those details are built in the Kutumba system so that we would be able to relate the land and people and crops to one single system to make use of these systems for the credit flow, as well as for input subsidies, as well as for linking them to the market. So that is when the government also came up with national agricultural marketing, as well as in Karnataka we have equivalent of that called as REM. So these are the systems which we have built so far from government side. Now, why I'm here before all of you is that can we join hands together? How do we make these systems which has been put in place by government of Karnataka and leverage that with the systems which are existing outside the government system, making use of the financial institutions, the technology which is available with financial institutions, the systems which are available with financial institutions, as well as with fintech companies, and then private sector can join hands together to make the farmers and then farming a better system in the days to come. Now, I'll just touch upon few points about what fruit is and how it's going to help agricultural lending as well as agricultural marketing, so that the plight of the farmers can be improved. Now, the fruit system is called as, it's an abbreviation of Farmer Registration and Unified Beneficiary Information System, wherein we have unique ID for each of the farmers in the state, and each of the farmers are linked to the land parcels which they hold in the state of Karnataka. Now, this ID also includes the farmers who do not have the lands but do get involved in agricultural and allied activities like animal husbandry or even fishing, and all the farmers who are in the primary sector or agricultural and allied sector are finding place in this database system. Now, if we talk about what these fruits contain, as far as the details or the data about farmers is concerned, the first set is about personal details, about name, family members, and and the details like that. And then the lands held by each of the farmers, starting from the land parcel ID number to the extent of the land which is held by the farmer and stuff like that. And we also pinpoint the land parcel held by the person by by having the digitized maps and georeferenced map in the entire state. And also we have the crop details, the crops grown by the farmers in the field, which is a very dynamic data, because every year, every season, the farmer grows a new crop. So this is also getting captured here dynamically. It is up to date in a year. 3 times we keep updating that. We also have details on soil health data, and we also have weather data related to the farmer about for each of the village. We customize it and then deliver the weather data to the farmers. And we also have details which are relating to the loans availed and subsidies given, other benefits provided to the farmers, all at one place, so that this can actually become an assets and liabilities set for the farmers. Now, how do we build this system? How do we keep this system up to date? By just having data on farmers at a particular point of time is not going to help, and it has to be connected. It has to remain updated all the time. So what we do is that we connect this fruits system to various dynamic systems which we have built in Karnataka. One is that land record system, which is the Bhumi. Then we have GIS system. We have a crop survey system. Then we have caste and income details coming from the revenue department. We also have the Kutumba database. We also have KSN DMC weather data. And then we link this system to the banking financial sector through the NPCI is DBT mechanism. So, and on the right side, if you look at the systems which are right now actively using this fruit system for various schemes to be delivered to the farmers, starting with procurement in terms of minimum support price registration, and then procurement, as well as crop insurance, and then also incentive for the milk cows, and then also incentives for the promotion of horticultural crops and adoption of high-tech practices in horticulture aspect, and then also linking it to the banks. So these are the systems which are revolving around the fruit system. Now, how do we keep this data up to date is one of the main system we have built for that is crop survey. The crop survey is done every year to update the kind of crop grown by a farmer on each land parcel in the state. Now, this takes about 30,000 local youths to visit 200 lakh fields, land parcels every season. 3 times a year it is done. And when they go there, they capture the photograph, and they also have they also capture the geo coordinates, so that we would be able to confirm that the crop which is grown has been captured photographically, as well as by name it is captured, and that data gets into the fruit system as well as it gets into the land record system, so that we would be able to provide this wealth of data to the banks, as well as for the financial intermediaries who will be able to make use of it for lending purpose. So I'll just showcase few cases of how this fruits has actually started fruitioning, and then helping the farmers in a small way. Now, fruits data as of now is being used by Government of Karnataka for policy making, and in fact Government of India wants to make use of this in a big way for estimating the crop productivity, as well as to change the policies, domestic market intervention, as well as export import regulation, so that uh, the government would be able to play an active role in providing a better scenario market system for the farmers. So that's the first use which fruits is being put into by state government as well as by the central government. Now, central government, having looked at this initiative in Karnataka, wants this system to be implemented in the rest of India. So now, probably in another 6 months to 1 year, rest of the states also would be falling in place and will be picking up the system. And we are then using this fruit system for making the crop loan or agricultural credit or rural credit into a kind of completely paperless and contactless system. I would be touching upon it a little more in detail in the next slides. Then we also use this fruits data and Kutumba data what we have in Karnataka in combination with DBT to provide various benefits as well as subsidies to the farmers directly to the bank account without taking any application, any documents or any verification, straight away putting it into their bank account. And this fruit system also is being used for streamlining the government procurement system. I'm sure all of you would have heard about a lot of protests happening in Punjab and Haryana about the procurement by government system. Now this fruit system is going to give complete streamlined process for procurement, wherein the government would be able to decide what kind of crops they would produces they will procure and what would be the quantum, and straight away from the farmer it is to be picked up. So that level we have already made it possible here. Then using this fruit system, now we are trying to link it to the markets. So that is where I would actually request all of you to join hands with us so that we would be able to make this system blossom a little more, and then bear a little more fruits for the farmers and for the government as well as for all of us together. Now, one way in which we have used this fruit system to streamline this procurement, direct government procurement process, is that if you can look at on the left hand side, before the fruit system was introduced, it was a complete unorganized kind of mess. So through which the government used to procure the produces from the farmers after announcing the minimum support price. Now, after introducing this fruit system, you can look at on the right hand side panel, it is just 3 steps. Straight away the farmer would be able to walk into the procurement centers, and the farmer will have to only say the Aadhaar number. The rest of the process is automatically verified, and the produce is picked up from the farmer, and the payment straight gets into the bank account of the farmer. So this is the way we could simplify the government procurement system. Now, then let me come to an important and a relevant topic for this occasion, wherein we all know that agricultural lending is a kind of process which needs lot of coding, lot of emphasis to be given so that the desired level of credit is provided to the farmers. Now, if you look at the way in which it is done, complicated applications will have to be filled by the farmers who are either illiterate or semi-literate, and they need to provide at least 4 to 5 documents which needs to be procured from various government offices. And once they are provided, the banking system will have to depend on the manual verification of those documents to arrive at whether a farmer can be sanctioned loan or not. And largely that process will be mostly a subjective decision making rather than data driven objective decision making. So I always see it as more of documentation rather than loan appraisal itself. I mean, there absolutely loan appraisal doesn't happen, but just a documentation happens. So then most of the time the loan sanction gets delayed and it's not timely. and also the farmers are made to run around to different government offices and banks, and then the result is that with all this also cross lending and over lending also happens to few people, and no lending happens to many people. So this also gets linked to the interest subvention which is given by government in a big way. The state government gives 1,700 crores, and I was told that central government gives about 20,000 crores in a year. And how do we channelize that so that it reaches to the right kind of beneficiaries and farmers? So that's why we have built a system in which I would just like to highlight that we have tried to make the process completely paperless and contactless. Starting from a farmer wanting to ask for a loan from a particular bank and filling up the application, and then e-signing the application, then pushing that application to the desired bank, and then the bank accessing the land details as well as the crops details to make up their mind, and then apply a scale of finance to decide what kind of loan they would like to sanction and what would be the quantum of the loan they would like to sanction. So once the loan is sanctioned, then the documentation automatically happening in the government system, so that the bankers are able to comply with the norms, as well as the credit dispersal can straight away happen without having to have a paper system at all. So straight away it can be end-to-end paperless. This system we have already started doing it, and the government side we have almost done it. And on the banker side, CBS will have to get integrated. We have done a workaround wherein we provide the data and they consume it in CBS. But now in the pilot, what we are doing with Union Bank of India and the Fintech called as What's Loan. Union Bank of India and What's Loan, they are joining hands with us to completely automate the process of rural credit. So now, starting from farmer choosing a bank, farmer asking for a particular crop loan amount, and then automatically fetching the data of the farmer, and then loan appraisal using a pre-decided logic, which will be basically data-driven decision making by the bank side by integrating fruit system with the CBS system of banks, and then dispersal also, and charge creation and mortgage, that also will be done automatically through the sub-register office, as well as land records entry happening through the automatic method. So finally, the banks will be only looking at how many farmers have chosen and how many farmers have been sanctioned without any manual interface. So this is a system which we have already devised, and Union Bank of India and What's Loan are working with us. Maybe in a month's time we should be able to start dispersing the credit to the farmers using this paperless and contactless system. I am saying that it will be just a 3-click away for a farmer to do, which will be very helpful for the farmers to get connected to. Now, this we are doing a pilot with Union Bank of India. Then today afternoon we have interaction with NABARD, wherein we are trying to build a common platform so that every bank, rural banks, cooperative societies can hook on to our system and NABARD's platform, so that all of them would be able to provide this contactless and paperless agricultural credit flow to the farmers. And you all know that RRBs and PACs play a major role. About 30-40% of the credit to the agriculture sector goes from these two institutions. So that we are trying to target. Maybe a month or two we should be able to provide this system for the banks as well as for the cooperative societies, and then connecting them with the farmers. Now still, this leaves out another 50% of the credit flow which happens to the farmers, which is from the informal sector. Now, informal sector, if you look at, I'm sure all of you would have an idea that the interest rate for a farmer in the informal credit market is ranging anywhere between 24% to 36%. We talk about 5%, 8% interest subvention and whatnot. But the farmer, to the extent about 50% of the credit flow into the farming system happens at around 25 to 30% interest rates. That's the prevailing condition. Now, how do we come together? Government, banks, and private sector, NBFCs, and the fintechs, and try to bridge this gap between this 4-5% in formal lending route to between formal lending route and the informal lending route. And that will help farmer in a big way if you're able to bridge this gap. But there are a lot of hurdles. One of the hurdle would be to connect these two systems through digital mechanisms so that we would be able to remove certain hurdles which exist in the process of loan appraisal as well as security creation, and then trusting the farmers that they would be able to repay. Now there are many mechanisms. Mechanisms like farmer producer organization, and then tie up with procurement agencies, and then facilitating the market mechanism to help the farmer in accessing the credit as well. So these are the systems which we have been able to lay our hands on. Now I would like to open the floor for this forum wherein we can actually look at how we can use this fruit system to streamline and look at the procurement of produce by linking the farmers to the market through a private sector procurement, through a direct procurement by the companies like Mo Store, Big Basket, all of them. How do they straight away get into the procurement and then reduce this price spread, and how the fintech companies can bring the farmers and the market together and try to reduce the price spread and make the farmers' life little more better. And how do we link the farmers to the input supply companies as well as and credit from them or support from them. And finally, how do we link this fruit system to a contract farming? Contract farming is quite prevalent in sectors like poultry and also the animal husbandry side, but it's almost at a nascent stage in crops. So how do we leverage this fruit system and bring this private sector to the contract farming in such a way that it is a win-win situation for both private sector as well as for the farmers, which can happen through linking them using FPOs or directly as well. And then final point which I would like to touch upon is that if we have to transform our agriculture, probably corporate sector also will have to play a role. And but whenever we talk about corporate sector entering into agriculture, always there is a question of how do we balance equity and how do we balance this bargaining power of the farmer against the corporate sector. Probably this fruit system can come in the middle and try to balance these two, so that the investment from the private sector can flow into the agriculture sector, and then probably look at a bigger mechanization, efficiency in agriculture, and then productivity improvement, all that which can happen. So this fruit system would probably be able to provide better insight for the corporate sector to look at where they would be able to invest, and then find a space where farmers as well as the corporate sector would be able to find a win-win situation. And thank you.
Thank you so much, Secretary. And it's really fascinating to see the Karnataka government, undertaking such major projects, and especially the public-private partnership. The fruit system clearly is an example of how we can marry innovation in the agri-tech sector along with innovation in the fintech sector. And if we could just take that conversation forward, clearly what we've seen with the pandemic is that not only have we seen transformation by way of digital adoption overall, the government's appetite towards digital adoption and transformation has gone up tremendously. You've clearly outlined, areas where fintechs can participate and be a part of this agri-tech journey that the state is bringing forward, Karnataka. Could you share with us also if there are other opportunities where fintechs could explore working together with the government, maybe a regulatory sandbox or similar such opportunities for the fintech sector where they work closely with the government to help unlock some of these amazing transformational changes that you're bringing about?
In fact, apart from the agri stack, what we are trying to build so that we would be able to connect farmers to the banking sector as well as the markets and the marketing system and try to improve their financial situation. We are also looking at transforming the government sector wherein government is looking at modernizing land and property management in the state. The stakeholders would range from anywhere between city governments, the rural panchayats, and then developmental agencies, RERA, and also the private property developers. All of them will have one single system on which government of Karnataka would be able to build a platform and they would be able to provide. In fact, for a long time we have been talking about we have market for everything. Right? Anything you can name, any product you name, you have a market. But do you have a land market? Now, if you want to look at land market, where is it? Now you have to look up in the the directories and then call up some the real estate agents and then you will have to go. So the market doesn't exist. So we have in Karnataka have been talking about building a land market, property market, TDR market, right? FAR market, premium FAR market. So these are the products we are trying to build in Karnataka, wherein you will have the real estate developers, property buyers, and also the citizens in a big way coming and playing role, and then financial companies, the venture capital companies or regular banking sector, all of them would be able to find place in this. And we are also adding strength to our system of this land and property management system by bringing in the GIS component. Right. So Karnataka has started building a GIS system wherein we have about 700 layers of information provided. So both system together. We are also having, as I have mentioned in my presentation, we have something called as a Kutumba system wherein it talks about people. So you have system talking about land and property. You have system linking them to the GIS platform, and then you also have data on people. So all these three systems put together open up a lot of opportunities in terms of property development, in terms of converting the government process into smart processes, wherein private sector can play a major role. So that's how we're trying to build.
So that's exciting. I think one you've talked about, of course, is the whole rural credit, agricultural lending space, where you've extensively shared some of the opportunities and also cited a very specific example of where this public-private partnership through a pilot is working, and we're excited to see how that pans out. Second, you've clearly outlined, property management, land records, and digitization of land records as another opportunity. The one thing that's very important for private sector players is to understand how this public-private partnership will work out. And of course, there are challenges both on the government side as well as on the private side. One, of course, being data and access to data. As Secretary Governance, you're someone who can help solve this complex puzzle of how the private sector can work with the government closely and overcome some of the challenges, especially at a time when we still don't have an overall data privacy bill in the country that has been passed or a law that has been passed. Your thoughts on how fintechs as well as private sector startups should approach working with the government given these challenges?
I would thank you for asking me this question because we have already started thinking about it. In fact, even much before Government of India came up with this data privacy policy, we were preparing to publish our own policy and then put in place systems so that we provide this data. See, data today is a new oil, right? It is power. So this data, just if it lies only with the government, if it is only stored, it doesn't result in any synergy. So what we are trying to do is that first thing is that Government of Karnataka is following an open data policy.
Right.
wherein whatever is possible, where it relates to the land, property, or any other assets or any systems, data generated by any systems, we are providing it in a public domain, right? We have something called as KODI, wherein all data which is not related to a personal data is web hosted and it is available in public domain. However, if fintechs will have to make use of it, that itself may not be sufficient because each individual records can be accessed. But then if you want a bulk data to be analyzed, probably you would need a better access. For that, what we are trying to do is that we are putting in place, there are already companies who are working with us. We sign an MOU wherein if any private company wants to access our data, they would be able to access our data by signing an NDC agreement and MOU, NDC in the form of MOU. Then they will have complete access to the government data, but they must ensure that the use of the data will be with the prior permission of the government for any commercial activities. But any promotional, any research or any product development, we completely give it at a very, very nominal rate just to make sure that you are going through a system wherein you need to comply with certain standards. So disclosure clauses. So with these two systems put in place, one is that open data policy wherein it's available in the public, open web. Second system is that MOU route in which companies can come work with us and we provide complete access to our data so that they can experiment, they can develop their products, and they would be able to come out with innovations. If I have to mention in Bangalore Metropolitan Transport Corporation, we try to do this. A few companies have already come out and they have developed bus passes for the citizens on their own using the BMTC data. Now we are also providing this crop data for many agri fintech companies to develop their own products. Now we are working with this Watts Loan fintech company for developing this end-to-end paperless credit system. So these are the ways in which we are working with the companies. We are welcoming everyone. Whomever wants to work with us, we welcome with open arms.
No, that's very heartening to know because, we work very closely with several startup companies. And the one thing that, they always realize and understand is that working with the government gives you access to the kind of scale as well as the ability to understand and work together in a public-private partnership mode that no other institution can provide. But of course, there has to be an understanding on the government side that for many of them to be successful, monetization, commercialization, and scaling will be critical. It's really heartening to know that the Karnataka government is so open to working with the private sector and has also identified specific opportunities as well as sectors where you believe fintechs and startups in general can play a positive role. As we close this session, because I know we're out of time, what's your one message to the private sector when they face these challenges? And I would say there's also a mindset issue of, how do you work? How do you understand, the complex machinery that the government really is? So, what's your one message to the fintech sector today at this Global Fintech Festival? What's the one message you want to share on how this partnership can be successful?
There is a lot of mistrust or lack of confidence between the players, from both government as well as the private sector. My appeal only is that there is enough space for government as well as the private sector to come together and find a win-win situation, right? And then add value to the system. I would just like to add one anecdote to this. A company came, I would not name that company. Sure. The company said, sir, you have data and I do also have data. If I monetize my data on my own, it will get X. And if you do monetize your data alone, it will get maybe Y. But if we both together see, some of this will be X plus Y. But if we join hands together, which that company is in the navigation sector, and then so that company was saying that the product will be, if we join hands together and make it as a product, then it will become X into Y. It is not X plus Y. So that's the way I would like to project, that there is enough space where it need not conflict. It can always converge. We can always add value to each other, and then build a better systems for the people.
All right, on that note, we should call this session, we should close this session, but I think it is really, really nice to see the willingness as well as the inclination on part of government stakeholders to partner the private sector, because as you said, there is no better win-win than the two sides coming together, working together, and balancing innovation as well as regulation, and taking advantage of the kind of benefits both sides bring. Thank you so much, Secretary, for your time and for sharing that wonderful project that the Karnataka government's working on. Thank you.
Thank you so much, Ms. Kohli and Sri Ponuraj, for this part of conversation. And as Ms. Kohli said, there's a beautiful convergence of the public and the private sector, and we can see this convergence on stage as well. So thank you for maneuvering this part of the conversation. On this note, ladies and gentlemen, it's time to thank our channel sponsors, beginning with our theme partner, WhatsApp, co-powered by partner Amazon Pay, our spend management partner, Encash, in association with partner Perfios, payments partner Cash Free Payments, CEO dinner partner HSBC, communications partner Keliria, banking partner Standard Chartered Bank, diamond partner PayU, diamond partner AWS, Kia.ai, and Paytm, and our networking partner Buddy Loan. So, ladies and gentlemen, as I said before, that Global Fintech Fest is all about showcasing the might of India when it comes to the disruption in the fintech space. And as India prepares to take part in the G20 leadership in the coming year, GFF 2022 will showcase India as a dominant fintech thought leader and demonstrate India's fintech ecosystem to the world, creating solutions for over 6 billion global consumers and driving the financial inclusion adoption for over 1.4 billion unbanked adults over the globe at even higher and disruptive pace. Folks, our next conversation and dialogue is going to happen in a form of a triad. It's called a tri-dialogue, and the format is going to be 3 influencers, speakers going to share their perspectives and experiences from an industrial application. And the topic of this tri-dialogue is going to be against all odds. May I call on stage the following speakers, beginning with Mr. Prashant Kumar, Managing Director and CEO at Yes Bank. Mr. Vivek Tiwari, MD, CEO and CIO of Satya Microcapital. Mr. Naveen Surya, Chairman, Fintech Convergence Council. So on this note, I give the stage to all the 3 mavericks here.
We will speak in this mic. Okay. So good afternoon. Hoping you had an exciting day. I know we're running late today, unlike yesterday. So we'll try and save at least 5 minutes for you, unless you guys really have many questions for Prashanji and Vivekji. So that's up to you guys. If you keep those ready, then probably I'll take a special exception with Prashanji to further take time. Otherwise, we'll try and be sharper. So against all odds, I think we celebrate companies which have done huge success. We celebrate companies which have done huge funding routes. We talk a lot about companies who become unicorn, but we never talk too openly about companies which have done amazingly well work and amazingly tough work, coming out of very serious crisis or coming out of a very tough business environment and completely turning that around into a huge success. And this came as an idea that we need to, while everybody says that you should celebrate failures, but nobody does it. Nobody talks about it. Nobody wants to talk about what has gone wrong and how they corrected it and how they actually became even bigger after that. And this all we read in a probably philosophical books in our personal journey, but we never like to do it in a business journey. We always hide under the carpet. And I thought that this is probably needs to change. We all know that in our lives, we always have a roller coaster, and the real champion is the one who navigates it well, handle those G's, whatever level they are, to test your mental and physical strength against that. So that's the background of this series called Against All the Odds. We are going to identify companies starting from this year, and this is a debut session for that particular series, where the companies who have shown huge resilience demonstrated it, which otherwise is not seen in a normal course, and come out of it with flying colors and even created a bigger success than earlier. So Yes Bank is a one such amazing story, and I'm extremely grateful for Prasanji to take time out for this and agree to talk about how this whole change has happened from where they were and where they are now. Same way, we are also featuring Vivek Tiwari ji, who's here with us. Again, founder, CEO, MD of Satya Micro Capital, a company again, which was founded at a time when microfinance was going into multiple issues. And despite that, in last 5 years, whether it's starting from demon to pandemic to everything, or some crisis, those who are familiar with the business nuances, still come around and built a very robust, one of the fast-growing institutions. So, without taking much time on this background, sir, Prasant sir, I'll come to you. I think a bank which was celebrated bank with fintechs one time, and there came a time for 6 to 8 months and then a year, everybody was concerned that will this bank exist, what will happen? And I know that is a time when you entered the scene along with the certain board members that you had, and you turned that around completely. And today, every fintech out there is actually after you. I saw the way they were just kind of trying to find time with you to talk to you and again become a partner. And you already have much bigger success than what is talked. It's not even talked. And I don't think there are many success stories like this, even in a global environment, where banks have gone through that kind of a crisis, coming back in such a short period of time and became hugely successful. So, request you to share the secret recipe behind this, sir. How did you turn this around? How did you make it even a bigger success than what it was?
Thanks, Naveen, for selecting this topic in terms of, because very few people talk about how in the adverse circumstances, how we can come out. And I think Yes Bank story, what we need to also see the perspective, what was happening in the Indian financial space. A series of defaults started happening in the Indian financial sector right from 2018. And those defaults started happening in the NBFC space. It also started happening for the cooperative banks. And then finally, there were issues around Yes Bank, which was a scheduled commercial bank and a large bank, a bank with a balance sheet size of more than 3 lakh crores. And I think this was the time where everybody within the financial system and also in the government space, they thought this is the time to actually act. Because if we don't intervene now, there would be bigger impact on the entire financial system. So it's not only about Yes Bank. I think the whole thing was in terms of how we need to bring the confidence of the general public back into the financial sector. So I think this was the perspective about Yes Bank. In terms of Yes Bank engagement with the fintechs right from the beginning, that is one part. But I think there were a lot of customers where deposits have been placed with bank, and that deposit was more than 2 lakh crores. And I think what people have seen earlier, when a cooperative bank was put under moratorium, it was at that point of time almost more than 6 months, and nobody has any visibility when their money would come back. So I think this was the trigger in terms of if we don't solve this problem, what is going to happen to the financial system as such. Okay? And when I was asked to join Yes Bank and take care of this, in the hindsight, I just think maybe I was not even aware what kind of problems are there. Okay? But I think as a self-belief, as a person, and also in terms of the grooming in State Bank of India, where throughout our career we have handled very, very complex, diverse and the large problems across the geographies in the country. I think that was giving a confidence to us, but sometimes this may be like hindsight, it could be overconfidence or something. But I think this was a belief, self belief, that we can solve any problem. Okay. And I think with this belief, well, when I joined Yes Bank, my belief was also supported by the strength which was available within the bank. And this strength was more in terms of the quality of the resources which are there, the quality of resources, and also in terms like it was a genuine for every state Yes banker. So if you can see that situation, it was like somebody there in the ICU. Doctors have told the family, you now need to pray to the God. But the patient is saying, no, I am going to survive. I will come out. And the families around the patient, they were also confident that this patient would be able to come out. And I think that was the responsibility given to us, that how we can meet those expectations of everyone in the Indian financial system. And we started working on this, and I think the perspective in terms of for almost more than 1.5 years, general public was losing confidence in the financial sector. I think this was the first thing which we need to address at that point of time, how we can bring the confidence of the depositor back to the bank. I would just like to add, at that point of time, entire globe faced the situation coming out from the COVID. And again, this was something which nobody was prepared. Bank was put under moratorium on 5th of March. We were out of the moratorium on 18th. Entire country was under lockdown 21st March. And this lockdown was unprecedented. You can't find out any soul on the road. Everybody was scared. Everybody was in the home. Nobody was knowing what to happen. Okay. And that was the time where we not only need to bring the confidence of the customers, but also at the same time giving a confidence to our own employees. I think that was something which was very, very important, because everybody, on the one side, they were facing the reaction from the customers when they were coming to the branches about their money, but also in terms of what is going to happen to their career and the employment. But I think one part in the whole story which we need to again focus and re-emphasize, irrespective of the magnitude of the problem, if everybody comes together, there is nothing which cannot be solved. I think that is the biggest learning and the lesson for all of us, that maybe in our country with a lot of diversity, if there are issues can be sorted out, the only critical thing would be whether everybody is together. And I think this was one case where if you see largest public sector bank, State Bank of India, along with large number of private sector banks, they came together along with full government support, full regulatory support. In fact, I think this happened for the first time when Reserve Bank of India gave a 50,000 crores of funding line to Yes Bank. This never happened in the past. And I think first time, Governor Reserve Bank of India, he came on the media saying like no depositor should worry, because not even a single scheduled commercial bank depositor has lost money in the past. I think that statement coming from Governor Reserve Bank of India was very, very critical. Even the finance minister at that point of time, she came in the media and gave this assurance to every Indian that government is fully behind the solution and you should not worry. And definitely name of State Bank of India, who was putting equity to the extent of at that point of time 49% in Yes Bank, I think that was like icing on the cake, and the name of State Bank of India itself was giving that confidence to everyone. But fundamentally, I think how we have moved forward and absolutely like a surgical, the solution around it. We could find out there are issues in the balance sheet, there are issues outside the balance sheet. So I think what we have tried to do, both the issues within the balance sheet and outside the balance sheet, we have segregated. So there was an issue in terms of bad loans, we segregated bad loans, placed in one vertical. There was issues in the balance sheet, we segregated this, recognized the problem, made the provisions, and then moved ahead. And very happy to share with you when we talk about the engagement with the fintechs. Okay. I can understand when the moratorium was put up, everybody was thinking what is going to happen, and some of the very, very large fintechs, they moved to the other banks. But I think within 3 weeks, when the moratorium was lifted, everybody was back to us. And I think that is again, I would be saying I am grateful to all those people who reposed the confidence in the bank, came back to us. And I think that is the journey. Fundamentally, it is more in terms of corroboration, in terms of having a faith. But I think the biggest contribution has come from team within the Yes Bank. I think that was something which was so critical that during the COVID time, if each one of our employees was engaging with the customer, physically or offline, giving the confidence to them, irrespective of what is happening to them. And I think that was the thing, key thing, where we were able to revive. And I think last 2 years, if we see, not only we have been able to take care of the previous problems, but also in terms of a growth. I think last 2 years, our growth is more than the industry average. Our market share is continuously improving. Today, we are very proud to say that every third digital transaction of the country is being processed by Yes Bank. And I think if you name any initiative from the government on the digital side, Yes Bank is there in terms of providing solution. Again, we are very happy to share that 2 days back, when Honorable Prime Minister launched the logistic solutions under the Gati Shakti initiative, Yes Bank is the only bank who could provide financial solution to such a mega initiative from the government. So I think we are absolutely in terms of back into the business, in terms of growth, in terms of solutions to the sector, and in terms of our engagement with the fintech.
Thank you, sir. That was really kind of a lot of details which were required, which are not heard before probably. And I think we should talk about these turnarounds a lot more. Like you said, if it was US, the probably government would have said, hey, depositors, you lost money, we can't do anything about it. And we should also appreciate that the way government, regulators, employees, everybody has come together and turned this around in a record time. It's probably a historical event that has never happened before. And as I said, success even which is bigger than before with all the new initiatives. Vivekji, coming to you. I think microfinance is seen as everything physical, everything on ground, also a lot of politically sensitive, tough environment, tough business. And I think your journey started 5 years, and right when you started, you again faced uphill task, right? And you spent time as a founder while you've been in the industry before in your previous avatar, but you managed to still build during this odd 5 year in the industry, which is a non-growth period, a hugely successful microfinance company. How did that happen? What did you do differently? What exactly is your story here that nobody grew, all the odds, you just started the business and you became so big and so relevant and the probably only growing company in the last 5 years in that sector?
Thank you so much, Naveen. I think when we started our journey, it was just after the demonetization. And after AP crisis in India, especially in microfinance in 2010, till 2016, there was only one microfinance company was registered all across the country. And no one has dared to come in the microfinance business again. And even as professionals, they have just taken a route of either the banks or moving towards the private equity investors or something like that. But that particular segment was almost empty. I was in the sector for almost 20 years and seen almost all the ups and downs of the sector. And there were good learnings of the sectors were there, and there were the bad learnings of the sectors were there. And in between, demonetization was there. Means where we started our journey, after 7 days, seventh day it was demonetization. Uh, I think from my retail shareholders to industry, everyone was believing that we have finished our journey even before starting the journey. But during these 2 months of demonetization, we identified the key pillars of Satya where we can design our institution. It is dependent on 5 T's, that is trust, transparency, training, technology, and team. So, and these 5 pillars are working for us almost in last 5 years, and we have navigated all our problems with the consolidated effort of the team. We have identified good technologies from the markets, and our approach was in the adaptations. Means we are not the someone who is having own technology. We are just identifying what is happening in the techno world, and we are just adopting it. We are just developed our adaptation capacities. We have worked in the direction where your manuals and actuals, they are very closer. Means you are not creating the processes just for your processes to show your bankers or investors. We are more focused on how these processes are being implemented at the ground. As of now, we are present in 21 states, almost in 250 districts with our almost 400 branches. Our penetration is almost 35,000 villages with 1 million customers. Some 5,000 people, employees are working for Satya. And to control the processes at all the level, I think that is one of the biggest challenge we have. But with your team spirit and proper training and proper monitoring, and with adequate use of technology at different levels, we are able to do that. And gradually, when the implementations were there, it was taking some time to accept the new changes, going digital, starting the cashless collections on the rural India, disbursement in the bank account. This was never heard before 2017. And in our journey, I think we have utilized every crisis just for the success. The impact of demonetization was moving towards the digitization, and we were the first one who adopted the digitization as the pathway for our success.
Thank you, Vivekji. So one common theme, if you see here, it's all impinging on the people that you work with and their will to be successful and do the right things. How do you turn the crisis into an opportunity and you drive from the top to keep that vision, that goal very clearly in mind, and that makes all the difference. Sir, Prasanji, one quick thing, our theme is sustainable finance. And I know that very early years when I kind of met Yes Bank and even you, about 4 or 5 years back, while the world is talking green, sustainable, everything now, ESG again is around the corner. But I saw some report on the climate change, finance, everything already being done by the Yes Bank. Do you want to talk about that? Do you think what responsibility banks and institutions like you also need to play? Since ultimately with a lot of things happening, the next big crisis that we are all going to face is about everything around sustainability, whether it's a climate, whether it is about livelihood, whether all kind of issues around sustainability. So do you want to talk about that?
Again, I think Yes Bank has been a pioneer on the ESG front. And when in the financial sector, very few people were talking about it. I think we were the first one who came out in terms of a very transparent ESG report. The only thing is the meaning of ESG over a period of time is changing very fast. Maybe 10 years back, 7, 8 years back, people were talking about, yes, environment is the issue. But I think today, if we see, that has actually already has hit us. If we talk about the change in the climate, what is happening because of the seasonality is changing, nobody is able to predict. I think we are seeing in our neighboring country what is the impact of the rains and other things. And also in terms of the pollutions. So everybody today realize that the climate changes which are happening, and if all of us don't step in, and take the right step, it would be too late. Earlier, we were talking about can we make this earth better place for our next generation? I think today the question is forget about next generation, whether we would be able to have that quality of life during our lifetime. It has come to that respect. But still, there are challenges in terms of how to meet those issues. But I think the most important part would be that somebody taking that call. We are very proud to share with all of you that as a bank, we have taken a call. We would not finance any electric generation which would be from the non-renewable sources. So I think this is a call which I think if the financial sector start taking, it would be pushing people to move to different alternate ways where we can reduce the impact of the climate. Our corporate office is fully supplied by the renewable power. So I think these are some of those small steps which we need to take. But I think the bigger part what we need to appreciate that sustainability or ESG is more than the climate. Climate is one kind of risk, but what is happening on the social front, I think that would be a bigger risk. Maybe today we are not realizing, but that would again going to bite us. We are talking of a population of 1.3 billion. Okay? And if there is a disparity in the income on the social side, ultimately how we are going to handle this. I think we are seeing this. Maybe in some of the Western geographies, there were fewer people who were homeless. I think the first time we are seeing large cities, there are large number of people. And if we see like large number of people are homeless, what kind of social unrest would happen? And whether financial sectors or anything else. So I think the most important part would be on the ESG would be not only the climate, but I think especially on the social side. I just recall in the first Arun Jaitley Memorial Lecture, which happened in July this year, our Honorable Prime Minister, he mentioned that today we are talking about growth with inclusivity. But at the same time, inclusivity would also not happen unless there is a growth. I think this is something which is very, very important. And today all of us need to pay attention in terms of how whatever we are doing, whether we are just meeting the target of reporting some quarterly numbers, or are we making the changes in the life of 1.3 billion Indians? And I think if the moment this kind of thought process would start, and the financial sector has to play a very, very important role. So along with the climate, I think the social responsibilities would also play a very important part. And as a bank, the entire thought process, the entire DNA, everybody in the bank is actually thinking on those lines and providing solutions and taking decisive steps in meeting those aspirations.
Thank you, sir. I think we have to understand that this is not just like a tick box, like you said. It is about the actual responsibility. It's already here. It's right there. It's going to change our lives, affect us socially and personally very soon. Vivek ji, coming to you on, you talked about taking advantage of technology. And I don't want to steal the thunder, but sometimes I wonder that is your company a fintech doing microfinance, or is it a fintech, micro fintech? What exactly it is? How do you achieve in a business which is so high touch, high customer relationship, in-person oriented, a balance between technology and still being in a human touch, as we call it, or customer relationship? Do you want to share some bit of a recipe around there, that how did you do this and what exactly are your achievements there?
Earlier we were a little bit confused when the tech word was too buzzed in the market, and people have suggested use word micro fintech, something like. But on the regulatory basis, we are a microfinance company, which is open to adopt any technology which is going to help the ease out the processes and also to automate the processes. In our company like us, we adopted 100% e-signatures in all our agreements. We are saving almost more than 5,000 trees every year because of it is almost paperless operations are there. Our transactions are almost cashless is there. So there is, our collections are almost 94% collections in rural India. They are digitized. And in digitization of the cash, I think we are using the network of the bank CSP points, QR code to the individual customers is there. Even the all loan officers, many people must be aware about the microfinance model. It is a loan officers are there. It is assisted model that your people, customers in the villages, they are not very much aware with the technology, but they are open to adopt the technologies. They are open to accept the technologies. In last 5 years, we have financed almost 2 lakh mobile phones in rural India, where by the mobile phones they are able to do the payment through the Paytm or adopt the Satya Connect app and even apply their loans directly from company, from borrowers to company, and process almost automated in many ways. So I think being as a microfinance company, open to adopt any technology which is suiting to your grassroots level, that is there. And from day one, the push was there from the top. That's why the team at the Satya, even they are undergraduates and they may not be able to speak very good English, but they are able to understand the technology piece and they are able to implement it. And that is coming, I think, naturally from top to bottom.
Thank you, sir. I think we are running out of time, so last one question, so we'll try and be faster. I know you also had a hard stop at 1:15. So since we can never not ask you this question, that sir, what has been the secret of your success as a bank with the fintechs and how the model is evolving and changing?
No, I think the fundamental thing is that as a bank, we are very agile in terms of how we engage with the fintechs. And I think as a human race, I think the best part is in terms of adaptability, which we need to say appreciate. So like during the COVID, first time we learned how to work from home or how we can work without coming to office. I think today is the first day where I have learned how we can speak without any noise. Okay? And initially I was thinking how to cope up with this or how would be the experience. And just after 30 minutes, I am feeling this is a normal way. So I think this adaptability within our bank also is the key. Initially, what we are trying to see in terms of, we are a great admirer of fintechs. Issue is in terms of their innovations. Innovations and also reaching to the last mile of the country. I think these are the two things which we respect immensely. And I think the whole thing is started with that. And today, we have reached to that situation where we have become little healthier now. In addition to providing the financial solutions, we have also started investing in the fintechs. So I think going forward, our engagement with the fintechs would not only be confined to only the financial solutions, but also in terms of investing in them, also in terms of growing them and growing with them.
Yeah.
And I think this is something which would be meeting our larger ambition of the financial inclusion.
So it's a true partnership model. It's not just the partnership as a vendor, but now also as an equity holder or an investor behind their back to support them.
Absolutely.
Yeah, that's interesting. Vivek ji, very quickly, I think generally people think that doing microfinance is like a social business, doing women entrepreneurship, which you do amazingly well in your company, is also like a social, it's like a good things to do and talk about. But in spirit, they think it's not really, doesn't make business sense. What's your view? What do you think? Can you separate these two or they are also actual genuine business model?
Our 95% customers are women's. And when we say women's, it means they are the base of the family. And if they are in the businesses, it means every member of the family is in the business. And they are supporting them to be the successful. I think our trust on the women's, I think it has also changed entire landscape of the financing in the rural India. And our repayment rates after COVID is almost 98% now. That is only because of that spirit coming from the ground.
Thank you. I think we have one question time, and I already see your hand raised, and rest probably we'll have to take offline while we walk out. I know we already 5 minutes ahead than more than. Yeah. Please go ahead.
Thanks for this opportunity. Just a question to Mr. Prashant. He mentioned about participation in the by way of your platform on the India's new logistics policy. Can you give a little more on that?
This initiative, which actually came from government under the Gati Shakti, was in terms of how we can integrate the logistics. Okay, and any kind of these kind of initiative without a financial partner or a banking solution cannot be implemented. And I think there was a struggle in terms of how financially we can integrate these initiatives, where not only the under the Gati Shakti, the logistics would be seamless, but the payments around this would also be seamless. As Yes Bank, we were able to provide the solution where the entire money would flow, and also in terms of the credit requirement of those small units who would be participating in these initiatives can also be met. So I think this is the beginning which has been made. We were able to provide that kind of financial solution, and we would like to see in terms of how this initiative move forward, and we continue to remain an important part of this initiative.
Thank you, sir. I think thanks for, again, keeping answers brief and we being in time and saving probably some time for the delay. And I know we're still late from your timeline. So thanks to both of you to take time out. I think Vivek ji has traveled from Delhi. You came from office, taking literally the half day out. Thank you very much, sir. And immensely benefited with the points that you said, which nobody wants to talk about openly, that how do you really overcome. Nobody wants to talk about the sad parts of their life, right? But the overcoming from that and bringing the joy of life is also important. I think we should do that. And I appreciate both of you doing that. Thank you very much, sir.
Thank you so much. And this was not the sad part of our life. This was the most exciting.
Thank you, sir. Really clarifying that.
Conversation where we spoke about against all odds in a very candid and pragmatic manner. Thank you so much, all the three stalwarts who made time and maneuvered this conversation, beginning with Mr. Prashant Kumar, Mr. Vivek Tiwari, and Mr. Naveen Surya. Thank you so much. All right, on this note, ladies and gentlemen, let's thank our gracious sponsors, beginning with our country partner, UK FCO, our other country partner, Kingdom of Netherlands, our SCO partner, Paisa Bazaar Credit, our conversational commerce partner, Carix, our P2P lending partner, Faircent, our VIP lounge partner, Cred, our Insure Tech partner, Cover Genius. Ladies and gentlemen, as you're witnessing since morning, we are having thought leaders, influencers, stalwarts from the respective dimension of fintech industry come here and share their perspectives with all of us. And we're going to continue this theme and this paradigm of having these panel discussions, conversations around the latest disruption, not from theoretical perspective also, but from the world of practitioners. Our next topic for our panel discussion is going to be pivoted around the central question, stating that will Kirana Tech tap into Bharat's elusive fortune? So it's a very interesting and a very dynamic topic to dwell on, considering the fact that the term Kirana is used to describe small mom and pop shops that still make up the majority of India's $932 billion retail economy, with over 90% of FMCG sales in India happening through Kirana stores, and that has only grown during the pandemic period. Modernization of the Kirana store represents a major need, and at the same time, it is a it's safe to say that it's space for immense opportunity too. So, to maneuver, to facilitate and really lead this part of our conversation, we have a panel of illustrious speakers and moderators. We have for us, I'm just going to introduce the moderators and by the time they come, we have with us Dr. Jasmine B. Gupta, who is the CEO and co-founder of LXME. And before I introduce the rest of the speakers, I request you all to please put your headsets on for the best seamless experience during the conference. It's a silent conference, so if you're wondering why can't you hear me, it's because the mic is not working, only the headset is. So make sure you're plugged into your headsets very nicely to get the best of seamless experience. And one of the greatest objective of this platform is to also prepare India for the G20 Leadership Summit, which is coming next year. And we somehow want to position India as a dominant fintech thought leader and showcase our fintech prowess to the world to take on the demands of 1.4 billion unbanked adults, as well as the digital transactions which are happening online on a daily basis. So with this context, ladies and gentlemen, let me reiterate that this part of the conversation and panel discussion is on the realm and space of the topic called Will Kirana Tech Tap into Bharat's Elusive Fortune? And a moderator for this session, ladies and gentlemen, is Dr. Jasmine B. Gupta. She is the CEO and co-founder at LXME. And joining her on stage are going to be the following speakers. Mr. Sandeep Deshmukh, co-founder and CEO at Elasticrun. We have with us Mr. Anand Kumar Bajaj, founder, MD and CEO at Pay Nearby. We have with us Manan Dikshit, CEO, Jambo Pay Express by FidiPay. We have with us Mr. Jaideep Pawar, CEO and Director, Payton and Gram ePay. So with this context, I hand the stage over to you, Ms. Jasmine. Yes.
Yeah, thank you so much. Good afternoon, everyone. I think it's the best time of the day. It's the lunch time, and it's a nice topic that we have today with us for a discussion. Will Kirana Tech tap into Bharat's elusive fortune? So, of course, as we know, 88% of Indian retail market is unorganized, consisting of Kirana stores, the so-called mom and pop stores. Yeah? And because these are called mom and pop stores, I will also want to introduce why I am here and why I'm moderating this session. So, Lakshmi is India's first neobank for women. And when we talk of Kirana Tech, women play a very important role in not only owning Kiranas and managing those businesses, but also where men are the owners of Kirana stores, we've seen women managing the business along with them. So I think the representation of women in the entire Kirana tech space is extremely, extremely important. And that's why we have me from Lakshmi representing, and of course the entire panel. I think all of them are doing fabulous work in the financial inclusion space. So I'm looking forward to an amazing, amazing conversation with all the stalwarts here. So to start with, Sandeep, we start with you. A very, very basic question for the entire audience to start with. What is Kirana Tech? And if you can give some solutions of Kirana Tech prevalent in the market space right now.
So, am I audible? I have no idea if it's working. Okay. So I don't think there is a different category called Kirana Tech as such. I mean, we are building a B2B e-commerce platform for Indian rural ecosystem, and our supply chain aims at the Kirana. If I have to define Kirana Tech, I'll suggest anything that organizes the supply chain from all the point of manufacturing for all the manufacturers, consolidate the supply chains in between, and something that terminates into the Kirana stores, which builds the entire demand side of the Kiranas, would be a key component of the Kirana Tech. Apart from that, of course, there could be some more components of how the store itself manages its own inventory, its own stores, as well as how does it manage its own customers.
But in my view, the bulk of the solution of the Kirana tech would come from the organizing the supply chain from the point of manufacturing till culminating into the Kirana stores.
Thanks, Sandeep. So coming to Anand, we know this is a huge market and the entire online retail industry is expected to grow to a 1.3 trillion industry by 2025. So how big do you think is the scope of this opportunity in terms of digitalization and in terms of product solutions for the Kirana stores?
Dr. Jasmine, this segment is the lifeline of the entire nation. They are the neural networks of connected digital entrepreneurs and with a two-way transmission protocol. And let me explain. And you're right, actually, women are the GDP reserve of a nation. And half of the work at Kirana is, of course, family, which is the unpaid care. Leena Datwani will talk about it later. The idea of growing and simplifying, modernizing, digitizing retailing is now. And the fact that every one of us have been trusting the local retailer since our childhood, they have been trusting us for the microcredits that they give. They are a pseudo banker, if I may say. And the key part here is to see what all can you relay on these railroads with a two-way transmission now. It's just not about the grocery going into your house or a microcredit given to you. These Kirana stores, at least I would say, 1 million plus retailers at Pay Nearby worked through the lockdown and the government was giving subsidy in the bank account. These were the guys who were giving it in the hands of the citizens. Their credibility has augmented to almost a sovereign grade. Now their shelf does not matter, really. The opportunity to be harnessing this connected neural network is amazing and left to your and my imagination. How much can you port through this network in an assisted digital mode, digital or phygital as you may call it? Bridgital, I would coin and use this term someone told recently, is bridging the digital divide of the Bharat and the India. 1 trillion, I think, would be surpassed sooner than you would have heard or read or planned for it. I see huge, humongous distribution opportunity with this millions of retail partners on the ground.
Thank you, Anand. Yes, and I think the latest Accenture survey also said that even if 10% of the Kirana stores are digitalized, even if 10% is digitalized, it will give an overall 5% boost to the entire retail consumption and also 2.3 million jobs getting created. So I think the impact is going to be really, really awesome. Yeah. So moving on to Manan. What do you think are the key differentiation and retention strategies in this space? So we have seen a lot of newer business models coming up. Of course, lending is something wherein, of course, Kirana stores look forward to loans, and of course, that credit penetration is extremely less. That's where a lot of fintechs are working. Also, at the same time, we have seen many newer use cases in terms of automating the entire digital storefront for the Kirana stores, so that the entire accounts payables, receivables, inventory management, vendor management, entire stock management, sales and distribution, entire thing gets digitalized. So what is your view on the newer models that are evolving and in terms of differentiation and retention?
So it's like if you see any business out there, whether it's a kirana or an enterprise or a corporate, everybody needs a full ecosystem at the end of the day. Now, when we talk about corporates or enterprises, the ecosystem is more accessible to them. But when you see the bottom of the pyramid, that's where the things reach very lastly or very rarely to them. And like as shared by Sandeep and Anandji, these are the lifelines at the end of the day. Now, they have been given tech to enable their shops on the digital platform. They have been given tech to manage their inventory. They have been given techs to manage their balances or accounts. They have been given tech for the lending. Now, what is differentiator is how we can combine this kind of ecosystems on one platform and bring them a unified experience to them so that they can see, okay, my inventory is this, my banking is that, my payments are this, I'm giving this loans to somebody, or I'm giving out this credits to even my customers through my ecosystem and everything. So that's, I think, is going to be a differentiator in a long run. Plus, how we can harness this data of this Kirana tax that is coming in and understand what could be his requirement in the coming days to come in, whether for the inventory, whether for the credit, whether he's low on his bank balance, or whether he needs a insurance side of it to take care of his inventory and everything. So that is something which is going to be the differentiator, and that is going to be a challenge as well, because these are different industries that we are talking about, different regulations that we are talking about, and this is like whoever the enterprise that gets into that, it's like playing with the fire. So you have to be really careful what you are getting into, because that's hell lot of data. That's oceans of data that you'll get into. So you'll really have to be very careful into it. But that's what my thought process is in terms of distinguishing that can come in picture.
Super. So Jaideep, your views on the same question?
So I have a different view, Dr. Jasmine. One is we are still a long way to go. If you look at the entire ecosystem of Kiranas, we have close to about 20 million Kirana stores in the country, as reported officially. Unofficially, there are a large number of them. Of that, only 10% of them have adopted digital technology and digital solutions, while most of them have taken payment offerings like Paytm, QR codes from various payment processors. But there is still a missing gap, which I guess is expected to be filled by ONDC platform, which is expected to come and largely address that challenge. Just to give you a backdrop of number, how this sector is very important for the nation. In terms of GDP, it contributes to around 10% of the GDP in the nation. In terms of billion-dollar revenue, about $1,000 billion is expected to come by 2030 in this sector itself. In terms of the segment, 70% of the Kirana segment does cater to food and grocery segment. Big e-commerce companies like Amazon, Flipkart are not able to solve this problem. Now, looking at these milestone challenges and last mile delivery challenges, there are unique personas of the Kirana tech owners out there, or Kirana owners out there. He is a one-man shop, or maybe maximum 2-3 people running that entire ecosystem. They have adopted digital technology, for that matter, in their own ways. During pandemic, we have seen most of the Kirana shop owners have created the WhatsApp group of the communities in and around, and they have serviced their customers in and around. In fact, they were the backbones during the entire pandemic era which we have gone through, and they have rather regained the trust of the consumers now. Consumers are believing in them more. What is required from the ecosystem and as well as government, which I'm sure government is doing a lot of work in terms of building the ONDC platform and helping the ecosystem. The differentiating factor is how we are able to capture value in the ecosystem and how we are trying to create a value for the ecosystem. Now, let me try and explain this. The Kirana ecosystem is driven by multiple stakeholders in the company. There is a fast-moving consumer good manufacturing company, they have a super stockist, then they have a distributor, then they have a wholesaler, and then comes a Kirana. There are multiple stakeholders in the ecosystem, and if we are trying to address that, only we will service the end Kirana owner out there, and we are missing the gap between the middle layer out there. We are trying to fool ourselves. If we don't take care of the middle layer out there, we don't integrate the entire supply chain ecosystem, what Sandeep mentioned some time back, we are missing the huge gap. While a lot of fintechs, a lot of Kirana techs are trying to address this gap, but there is still a long way to go. And I'm very sure with ONDC coming in, these all challenges will be plugged in, and hopefully in days to come, we will have a lot of exciting times for the entire ecosystem, especially in Kirana tech. They will create a lot of employments. They contribute to about 10% of the workforce in the country nowadays.
Of course. Thanks, Jaideep. So since you talked about ONDC, I will jump again to Anand. We would want to know your views on ONDC and how it will impact the entire Kirana space.
Jasmine, ONDC is an enabler, it's a leveler to give an opportunity to everyone to be able to do awesome commerce. and we have been a believer. When I left the bank, Yes Bank I was with, and we came out to digitize and modernize retail. And let me explain why we wanted to do that. Because there was a concentration of the big techs and the uh, big basket, grocers, DMart. They were concentrating on the digital savvy segment. I will avoid saying digital savvy greedy segment, but that is what it was. All of them were taking away the Fiamma de Wills and the Dove soap through online procurement, leaving behind the Lux and Hammam at a retailer. Now you see a scenario where retail is evolving, retailers are not, was the statement. And we said, let us jump out and create this ecosystem. We filed for a patent, which we backed last year. And glad that the whole ONDC initiative is on the lines and length of what we have been deeply thinking of around connecting the buyer, seller, a logistics connected, a payment rail attached, and a lender. Prashant Thakkar is doing a great job there to bring up again another microcredit. So all the unified stimulus and cohesion, like Prashantji said in the previous session, that if you are able to be together, then you can solve for anything. And it is just not about fighting against e-com, but being able to do retail Sashakti to digitize and modernize retail is the real thing, because people are getting digital savvy, people are getting, consumers are getting here and now, oh yes, abhi moment is coming. And if you can do Uberization of the stuff at the grocery store, what else would one want? I'm glad that the same Nandan and team who were who laid the railroads of the Bharat with Aadhaar, with Pratakshamev Pramanam moment, which the whole lockdown India could survive through, is standing by again and building up this another unified rails. This is the truth of the hour, Jasmine.
Right. So while I think we've spoken about opportunities, we've spoken about the various solutions and the differentiation strategies. Let's talk about monetization as well. Lots of fintechs are getting into the space. So Manan, what do you think? How will the monetization for the fintechs working in this space or planning to work in this space will happen, or how is it happening?
So that's a tough one. Because monetization in fintech is something which is a far cry that we have all seen with all this UPI coming in picture, digital payments bringing on subventions and all that. But I think, especially in terms of connected experiences that we talked about, in terms of whether it is a connected experience towards the logistics, towards the banking side of it, the credit that we have been talking about. So that is where the monetization would come in picture. May it be only the webs into it, but when you see the segment at large, so that's where it would be the piece where the monetization can happen at a good pace into it. And given the segment, it's going to be a very huge scope for the fintechs to establish themselves into the connected experience of the Kirana tech, so that the ecosystem is getting benefited out of it and everybody is able to use the service at large.
Okay. Sandeep, your thoughts on monetization?
Sorry, I have slightly different view on the monetization. I think if you're looking at payment processing side, then the monetization will be challenging. But if we solve the core problem of the credit requirement through the supply chain and at the storefront, then in my view there is a substantial opportunity. What we have seen, at least in our use case, is if you just look at a traditional credit distribution from the distributor community, while it is perceived to be there, not more than 25% even the urban stores have access to that credit through distributor. Even in the markets like Mumbai, almost 65% plus category C and D stores don't have access to credit today. So if a fintech solution can solve for that credit requirement on demand in a seamless manner, I think there is a substantial opportunity for monetization. At least what we have seen, we operate in deep rural market where there is anyway no standard credit available. And some of the pilots that we have done, and one of the pilot has scaled up substantially now, is if the credit can be available on tap, on demand, in a seamless manner, exactly at the moment when the store wants it, then there is an offtake. and there is offtake not only from a numerical perspective, but there is a substantial revenue opportunity in terms of spread, in terms of origination fees that is available. So I think it's about figuring out the right product, and if it can be delivered in the right way, I think we have a solid use case wherein it can be monetized and scale in a very profitable way.
Okay. So we have seen some of the fintechs closing down shops as far as their solutions in Kirana tech space is concerned. While I would not want to give some names, I'm sure we have all seen successful use cases and not so successful use cases. So Jaideep, what are the learnings for all of us from, if you would want to share some of these use cases from your experience, and what can be our crucial learnings from these?
So, couple of things which a startup or a fintech or a kirana tech has to understand is the problem which they are solving for the said kirana owner, because he's the one who is going to drive your technology platform and he's going to adapt to it. The most critical thing which he's afraid of is that the kirana tech never gives you the desired service support ecosystem when he's required. That's one. The second and most important thing is that his data, which he has collated by building relationship over the years in the community, is poached by that. And third, whether the new company which is coming on board and offering any technology services, be it GST or booking or accounting, is adding value or bringing in more business to him. If these problems are solved, then maybe the said kirana owner, who probably most of the mom and pop stores out here in India are one-man person army out there, will definitely look at adapting the solutions. The other unfortunate part of the entire ecosystem, which is why some of the companies have shut shop, is that there is no standardization in the ecosystem. Everybody is bringing in his or her solution to the said kirana owner, and they want to have multiple apps deployed at the same location, which is practically not possible for the same. There is a lot of collaboration issues in the entire ecosystem, which is what is expected to be solved using the ONDC ecosystem when it evolves. Lastly but not least, kirana owners still prefer dealing in cash. To be honest, that's the hard reality. They don't want to come into the ecosystem because there are taxation issues, compliance issues. Dealing in cash gives them a lot of flexibility. It's out there. Customers can be managed in a better way, but largely the ecosystem has been that way for quite some time, and it's up to the ecosystem player. When I say ecosystem player, fast mover consumer companies, then there are other consumer durable companies have to come together and form a sort of a forum wherein they start investing in educating this ecosystem, wherein they put in some money in financial literacy campaigns, financial programs out there to why this ecosystem needs the digital transformation. And that's the key need of the hour. And I'm sure over a period of time it will evolve. With ONDC coming in, this will be done by not only by government, but all the players who are participating in the ecosystem. Banks have taken the initiative first. It's a great thing that banks and fintechs like Pay Nearby, FeediPay, Pay10, at the ground level, we are already doing it. We are servicing over 50,000 odd retail points out there. Majority of them are kirana tech out there, and we are trying to see if we can address the concerns which they have in the ecosystem.
Yeah, of course. Thanks, Jaideep. Good insights. And Manan, would you want to add to that? Any key learnings from your experience in the space? Considering both.
I totally agree with what Jaideep is saying, that at the end of the day, you can't keep on loading the kirana stores with multiple apps and multiple solutions, because eventually it's a one-man show. So that's where the consolidation has to happen. That's where the ecosystem play has to happen. And to add to that, today, like FeediPay has been doing that part of it, wherein we are giving out connected banking experiences, digital payments, collections, POS solutions, even integrating with your ERPs or existing solutions. So that's a play that has to come in picture, and that's the only future that, like in my thought process, that can survive in the long run. So eventually, what we have been talking about, the bigger ecosystem, the connected experience, is what we all about.
Great. So Anand,
I want to make a point before you ask a question. Actually, the rocket reaches the moon, the destination, but not all chambers reach along. There are a lot of burnouts. So it's not like writing an obituary and complaining about who fell through, but it is an ecosystem which has evolved through learnings, collective they are. And these are entrepreneurs. Let's understand, if they have attempted, they have failed, they have stood by again and come up again. So it's an experiment and well worth the ecosystem's benefit that the startups may shut down, but they have given a good shot, basis which the learnings an investor has brought in another startup or two more startups have seen the right path. So it's a collective
Absolutely.
learning process. Sorry, I just wanted to make this
absolutely
comment.
right, and I think that's why it's important for us to learn from those experiences, both sides of the story, right? So great, and because we are talking of Bharat's elusive fortune, just wanted your views on how Kirana Tech and whatever we are doing, building, is going to enable financial inclusion at a macro level.
Why do you say elusive fortune?
I mean, that's
It is the reality.
Right.
Yatharth, don't miss the point. But like I said, look, beyond artificial intelligence, there is huge amount of quantum of human intelligence. The Kirana guy knows that Sharma ji's kid is going to buy a bike, or Gupta ji is going to do a low cost housing, or Rahman Sahab is moving to town, and so on. If you are able to collect that insight and digitize that, imagine how much of two-way transmission can you harness. We at Nearby, Pay Nearby, we say we are DAS, distribution as a service. We have built a railroad, we've attached a platform, and we have added services after services, and it gets published. It's each one to his own. It's not about installing multiple apps and deleting it, but on the same railroads, if you are able to add more wagons, more passengers, that is what you are sweating the network with. And the retailers are quite intelligent. It's like a Swiss knife, each one to his own. I still use the toothpick only from there, but some use for cork opening and bottle opening and so on. Why I say so? A pharmacist, it's loosely used word. Kirana is a loosely used word. It's for all. A pharmacist sell insurance very well because he can see intelligently these medicines are for a bike accident, and he says, why didn't you insure this? It's very easy for him to turn around and start cross-selling, Jasmine. And likewise, a hardware shop is visited by the mason, plumber, electrician, painter, carpenter, and maids. So he knows there is a rail ticket required or a remittance to the family required. And so likewise, the opportunity is huge. Government is doing its bit. So is the startup ecosystem. The ONDC added with OCEN account aggregator, assisted account aggregator at that. Because credit with the data is one part, and credit without the data is another. And I must call out the work that Centrum Microfinance under leadership of Prashantji did with us. We built a tasir, a texture of the retailer, and called it Bharosa score, credibility score. These are new to credit customers, retailers. They have never done a banking in the way, like you said, they are shy from. And the fact is that they are under the GST net now. The fact that every transaction we do goes through a TDS. So everyone is understanding the advantage of coming to digital. So we built a Bharosa score out of it, Jasmine. And like Elastic Run said, that it is important to give credit. That's a lifeline. The same retailer, we saw data patterns of 2 hours mute and then transaction and then 2 hours mute. That 2-hour mute was nothing but a capital scarcity. What you said, we were able to infuse a small 50,000 rupee microcredit. Now, a bank would not want to do a less than 5 lakh rupee loan because it's difficult to administer and collect it back. But Prashant stood along with us and said, Bharose pe hum kayam hai. And 50,000 rupee loan we give, a zero default. 72% rise in the business of the 52% retailers who worked with us. That's the power of digitization. So it's not an elusive thing, it is yatharth. And like we say at Pay Nearby, yahi mati ubregi, yahi zarra chamkega. Uttishta Bharata. This is the moment when Bharat is awakening and adapting to digitization.
amazing, amazing thoughts. So, Sandeep, coming to you. Of course, startups are upping their game and competition is also increasing. So, what are your thoughts on the competition in this space, big players and small players all put together here, and how is it evolving?
So before we get into competition, if you just take a, bird's eye view of where the ecosystem is, right? I mean, I think there was the number of Kiran stores in the country. I think there are various reports saying different things, but let's take a common minimum number of say 1 million stores. So if there are 10 lakh stores, we have over 500 plus brand even at a national level going to this 1 million stores. And there is no common supply chain. What that means is we have permutation combinations of million multiplied by 500. And this is a very conservative estimate. This is just massive. And each one of them planning their own equation, their own supply chains, their own path to stores, availability, data extraction, credit extension. This is just a massive web that is running informally. I mean, this is true India. It's really only God knows how that system is working without any system or any plan, and still there is a method to that madness. I don't think any one entity can solve this. I think there are multiple pieces to be solved in this. Someone needs to work backward on the data of what consumption is happening. Someone needs to work backward from the manufacturing to what their supply chain planning needs to be, manufacturing planning needs to be. Someone needs to work on what credit lubrication that is required for all of this equation. And maybe those 4, 5, 6 folks would have to work together, and maybe 10 folks would have to work together and then support the ecosystem. And this might still just service, say, 100,000 stores. I don't know if all of that can really reach even 1 million stores, forget 10 million stores. So I don't think at this point of time the concern would be about will there be competition coming. I think the more competition is better at this point of time, because the problem is just massive, just immense. I don't think even 10x more companies than what we have today would be able to handle the whole of equation. And the second part of the same equation is the system that has supported this whole equation till now has its own cracks coming in. So the scalability is a challenge. So while it will continue to support the day-to-day matters, there is serious concern about what happens to the next generation. That if it is an unorganized supply chain that is supporting this whole Kirana ecosystem, or including the store itself, what happens when the aspirations of the next generation? If you see the distributor churn in most of the large brands, it's upward of 30%. I mean, every year, third of your distributors move away. Who solves for that equation? So even if someone is averse to tech, the ecosystem will push you to get into that market. So going to that point, I think emergence of competition is a good thing. I think at least a decade away from the point that we'll say that the competition is maturing and now there needs to be some consolidation or some limitation.
Of course. Great. So, Jaideep, I think this is the last question from our side, and we will then be open for questions from the audience. What, according to you, are the challenges in the Kirana tech space, and your final thoughts, closing lines?
So the real challenge is on the transparency. The ecosystem is still not transparent. Lot of stakeholders are doing it in a closed loop. Every fast-moving consumer good company has its own network, and they are not sharing the data. So collaboration is missing. That's one. The second challenge is of a credit offtake. Suddenly during Diwali and Dussehra or any festive season, consumer needs a certain requirement of credit, which is missing. And largely, since these people are dealing in cash, they are managing businesses in cash, no bank is willing to give them urgent credit. So that's a critical requirement which needs to be solved. And the most important factor is that there is an emergence of deep discounting by large e-commerce companies. So that's a real threat which they are facing in the market, be it Walmarts of the world or Amazons of the world. They are trying to penetrate the market, but I'm seeing it that last couple of years they are trying to penetrate this market, but they have found it very difficult to enter and penetrate this ecosystem because of the kind of trust and relationship which these guys have built.
And especially we saw this in the pandemic.
Yes.
Wherein I think big players failed and the Kirana stores actually were the lifeline for the people.
Absolutely. And the reason for that is that the investments done in this relationship for ages, even the distributor gives the credit to a Kirana guy for say around 30 days or 45 days, depending upon the relationship which he enjoys with the said distributor. which is unlikely not possible with someone like Amazon. They would want funds to be given to them, even if he's buying a product at a large discount. He would need to be paid well in advance, which is not possible for a Kirana guy. So these are the challenges, and I'm sure industry is working on solving those challenges, and maybe in days to come, we'll see some of the large fintechs. Few fintechs have solved the problem on a B2B level. They have given storefronts, to name few, Udan and Shopee, Kirana Shop, Kirana King, Store King. There are a lot of them. Even Elastic Run is doing it in a B2B space. But we are yet to see on the Kirana store space whether the problem is really getting solved or not.
Right, right. So, Manan, closing lines from your side.
So as spoken by Jaideep and Anandji and Sandeep, that see, at the end of the day, it is all about solving the right problem rather than just creating solutions which doesn't make sense for the space. So we have to really understand the nerve of the Kirana tech and come up with a solution rather than coming up with our own thought processes that, okay, this might be a better fit for them. So doing a reverse psychology that what is good for them, what works for them is where the end of the day the solution would work, and that's where the industry would boom. So that's what the thought process.
Thanks. Anand?
We are at it.
Thank you. Nice. Yes, Sandeep, your closing lines.
Yeah. So I think everyone covered this in some bits and pieces, right? I think we are that at inflection point of history wherein this whole ecosystem will get restructured. I think it's a settled fact now that the general trade, modern trade, e-commerce, all of them will survive as against the concerns raised earlier or a few years ago that what happens to Kirana network when all of these networks mature. I think that the general trade contribution, say from 88% might go to 70%, but it is going to stay there. Now, and the second point of the same inflection point that has to be solved is if this 70% cannot be so disconnected in the tech maturity or operational maturity that what an e-commerce or modern trade will come in. So the injection of technology into this 70-80% of general trade is also given. That has to happen. So either someone of us sitting on this table will do it or someone else will do it, but that is bound to happen. And as part of that development of that tech and reorganization of that ecosystem, credit also, probably the most critical part of that ecosystem, that will also get injected, and we probably will see some of the large entities emerging out of pure Kirana credit space. That's what I think.
Super. So I think Kirana Tech is here to stay, and I think Anand, you just said it in a few words. So great. I think that brings us to the closure of this panel discussion, and we are open for questions from the audience. Yes, please.
Thank you, the entire panel. The way you guys have explained the Kirana Tech, the kind of passions you guys were, exhibiting was fantabulous. And it was really clear what you guys are here to make. But, one question that, keeps coming to my mind, and, everybody tried to answer that. Do we really think, we are more focused around, giving all the solution out to this Kirana guys? These are the guys who are focused more on selling their products. But we are just hell-bent on giving every solution, that is possible on earth. But maybe we are lacking, somewhere in understanding what the real problem these guys are facing. While Anand mentioned one point, for example, if there is a guy who's repairing a bike, right, and if there's somebody who goes for a bike shop, bike repairing, he might sell him a bike insurance in some way or the other. So is this something that is currently lacking in the industry because of which it is not taking a hockey stick kind of growth? Because we have the entire infrastructure ready, right? What really comes in is a plug and play kind of approach. And if there's something which is really lacking in the industry as of now, I mean, this is something that comes to my mind if I see current state of the entire industry.
You want me to answer that? Yes, you're right to large extent. And I will just give you an example of another platform which was built a couple of years back. In 2007, Government of India had started a program called Rashtriya Swasthya Bima Yojana. And pretty much similar challenges. There was lack of data. There was lack of clarity on how the insurance cover has to be given to the rural population. And This was solved by public and private partnership, which is what essentially ONDC is essentially envisaged to do that. ONDC is not going to be a regulator, but it is going to be an enabling platform. And that is going to solve most of the points which you mentioned. We don't understand what a Kirana guy really is asking for. A technology guy or a founder of a startup conceives some solution. He thinks that he believes that this is a problem to be solved. But that's actually not a problem which is required. He already has a set of customer base which he is servicing. What he needs is how he can get more business by creating a value for additional set of customers. That has to be solved. And in order to facilitate that, Kirana Tech has to invest in doing some sort of groundwork, field work, research, and working with them. Understand
get a loan to him to buy from a FMCG distributor. This is the embedded journey. There could be 5 startups, all you know, and the sixth one which is stitching it all. So it's a collaboration and integration work more than 5 startups going and selling him a different set of solutions.
Thanks. Thanks, Anand.
Yes, please.
Hello, everyone. My question is to Sandeep, and it is about how do you see an opportunity to monetize the Kirana Tech, ecosystem, considering that there are so many personas, especially when you try to bring on an aggregator model, which essentially takes care of, say, 4 important requirements of a Kirana. One would be the ordering and the reorder level, probably, that a kirana store has been informed by an FMCG company from who would be a part of the ecosystem. And the second thing would be with regards to the line of credit, which could be afforded by the FMCG companies itself in who act as anchors for these kirana stores. So is there an opportunity to monetize and work with banks on this framework?
Yes, I think your question was at a supra level that how do we monetize the overall Kirana Tech, and within that the credit as a monetization. Did I get
Yes.
right?
Yes.
See, I think the answer also links back to the first question that was asked, that are we providing technology only for the sake of technology, or is there a real problem that we are solving? If the tech is only sent to sound like cool or look English and more glamorous, then there is no monetization there. We might have some apps going in, but what we have learned in our execution at least is if you solve for availability, if you solve for pricing, and if you solve for credit, those are the three areas where the store owner is struggling. And if you solve those areas, then there is a direct impact on the profitability and the cash flows of the store owner. And until that impact on the cash flows happen, your opportunity monetization does not exist. And those are the three areas rather that we have seen that if you have an engine that assures availability better than the traditional channels, then you have the pricing power and you can monetize. If you have the prediction engine that will help you reduce the working capital of the store, then you have very small opportunity to monetize, not very large, but there exists an opportunity. And third, in terms of credit, if you can solve a very frictionless rotational cash credit, wherein the monetization ticket size of every single transaction is very low. It is as low as on a ticket of invoice of 5,000 rupees, the absolute value comes down to say 5 rupees or 10 rupees for a weekly cycle. Then the monetization opportunity exists. Or rather, we survive on these three parameters. I'm just telling you what our business model is. So yes, that there definitely exists a monetization opportunity, but you have to solve the core problem where the store owner actually has the business challenges. And that's the reason probably all three of our solutions, you won't see any user face or any glamorous face to that, because these are mostly gray services working in the background when no one is watching it. Thank you.
Okay, do we have more questions? Yeah.
Hello, I'm Ajit from Infomines Technologies. Based on the discussion, I find out that there are 4 dimensions this entire business is having. One is supply chain, second one is credit, third one is compliances, fourth one security. As a Indori, I saw success story of Shop Kirana very closely from recent past, and found that most of the providers or technology company solve the supply chain and then solve the credit problem. But most of the time they start cross-selling and other things and start ignoring compliances and the security of their data. So how your take on this part?
Should I take? So see, in terms of compliance and security, that is something which is nowadays has become a prime objective, specifically in terms of fintechs. If we talk about, with all these regulations come in picture, with all the certifications coming in picture, that is like we don't have a choice per se that we can compromise on that part of it, because even if in our initial days we just look like we just look away from it, as we grow and as we scale up, we have to take care of it. So compliance and security go hand in hand as you scale it up. In the initial days, you might give it a leeway. Okay, theek hai, abhi kaun dekhega. But as we grow forward, you have to take care of it. There's no two-twos about it. And that's how you scale up and that's how you grow at the end of the day.
I'm more concerned about the compliances of the Kirana shop owners.
So compliance isn't... yeah, sorry.
I would just add, it is again, compliance is not a separate service. It's a part of embedded service. So if you have given an invoicing solution, it goes up to GST filing as well. If you have offered multiple services, it helps him to file a IT return to get a TDS refund. Yeah, it's not a separate line item that a third startup will come and do it. The messaging has to be loud and clear. At least what we do, I will tell you, is that our annual awards, the third award goes to the highest selling guy, the second is to the innovation, and the first is to the compliance. Yeah, the guy who brought in the best, most compliance and administered it down to the last mile. You have to ensure it. There is not even a negotiable.
So just to add to the point, compliance is not just about the Kirana owner following it. It is the other ecosystem players adhering to the compliance requirements. So it is where everyone has to invest and ecosystem has to put in time and effort in building that trust factor, putting in time to give him understanding of why GST is important for them. Most of them have not filed their GST returns. They have been dealing in cash. They don't understand the implications of GST, why they are required to come under GST fold. Once they come into GST fold, the credit access will be much easier. Nobody is doing that. So now with fintechs and startups taking this first movers advantage, Kirana tech companies going to them, they have to put on additional layer of doing this investment in doing the financial literacy programs, financial education campaigns to educate why they need to follow the compliances part. Compliance is maybe as simple as getting a shop act license. Many of them don't have even a shop act license or even a standard license or food security or a food license to sell food and grocery items. So all those things are required and have to be educated to these people.
I guess that's where the tech comes in picture, no?
Okay, I think that's the end of the questions. I think the time is also up. Thank you so much for the active participation, audience. And thank you, panelists. It was a lively conversation. Thank you so much, everyone.
Yeah, on behalf of Jasmine, I want to tell this to you all. You have deferred your lunchtime and stayed to hear this. So desserts are on her. So please grab it when you are there at the counter. Thank you so much.
Okay, thank you, everybody.
All right, as it promised to be pragmatic, experiential, real, based on ground realities and a lot of context from the industry, I think this was a very engaging set of conversation on will Kirana Tech tap into Bharat's elusive fortune? Ladies and gentlemen, we are at the Global Fintech Fest, and coming up is a very important conversation on the realm of embedded finance driving disruption in banking. But before I set the agenda and the moderators and the panel members, we'd like to acknowledge our partners, beginning with our agenda partner, Lyra Co., our co-agenda partner, PayPoint, our session partner, Feedzai, our session partner, Bureau.id, Rico, our gold partners, beginning with Jokata, Payten, Innovity, Beams, VC, to name a few. Our theme partner, WhatsApp, our co-powered by partner, Amazon Pay, our management partner, Encash Spend, in association with partner, Perfios, our payments partner, Cash Repayments, and our CEO dinner partner by HSBC. Folks, more and more non-bank companies are offering financial services such as bank accounts or wallets, payments, and lending. Companies and organizations, businesses of all types, depending on the levels of maturity, including retailers, big tech, software companies, car manufacturers, or logistic firms, are preparing to launch embedded financial services to serve businesses, customers, and miscellany of consumer segments. For customers, the appeal is the ease of use. We're going to have a panel discussion on this topic called the embedded finance driving disruption in banking. And I'd like to call on stage our moderator, Mr. Sandeep Lakshman, Head of Fintech for Asia Pacific and Japan, AWS. And joining him on stage are the set of other speakers, beginning with Mr. Ramanathan RV, co-founder and CEO at Hyperface, Mr. Shivashi Chatterjee, co-founder and joint managing director, DMI Finance, Amol Sonbarse, co-founder and CMO, InstaPay. We have with us Shailesh Deshpande, Director Growth, Jokata, and Priyanka Kanwar, co-founder, Falcon. So with this context, over to you, moderators and our illustrious speakers.
Thank you so much for that. I'm assuming everyone can hear us because I can hear myself in here. Hi, folks. We got a fantastic panel. I know it's a little after lunch. You might be a little sleepy, but rest assured, with the kind of speakers we have on this panel, it's going to be really interesting, right? Thank you for the MC for making that introduction. But I would like to have a quick introduction from all the panels themselves, right? Not only just their names, but what the companies do, right? What's the value we had? And then we'll take it forward from there, if that is okay. Yeah, sounds good. Okay, I'll go first, given I'm moderating, right? So, hey folks, my name is Sandeep Lakshman. I head Fintech for AWS. And if you don't know what AWS is, we help provide technology products for fintechs to build their products on, right? So Like you switch on your AC or you switch on your fans or lights at home. You can click some buttons on screens, and you could have services from compute to database to machine learning, etc. Right? Ram, why don't you make an introduction of yourself and Hyperface?
Sure. I guess everyone knows AWS, Sandeep. I know. Hi, my name is Ram. I am the co-founder and CEO of Hyperface. We are a company that actually makes co-branded credit cards more fun and immersive and digital enablement, essentially. That is the boring word for it. But making it fantastic for the users. How can we offer that on a platter to companies that want to issue co-branded credit cards and make it extremely work well with their loyalty programs, like your Amazon credit card or a Flipkart credit card, for example. That's what we do.
Shiv?
Thanks, Sandeep. My name is Shiv Chatterjee, and I'm the co-founder of DMI Finance. DMI Finance is a Delhi-based NBFC. We are a regulated entity, and we are a digital lender. So we work with pretty much anybody who can speak to us in the language of APIs, and that includes fintechs, it includes large platforms, it includes OEMs. So we are a very active digital lender on the consumer lending and MSME lending side.
Thanks, Shiv. I'm going to go to Amol next.
Thanks, Sandeep. So my name is Amol. InstantPay is a full-stack business banking platform. So what we are basically doing is we've created on the one side of it for small and medium businesses sort of an interface where they could carry out their end-to-end banking with us, starting with, say, account opening to payments to collections to lending. That is what we are doing for small businesses. And for enterprise businesses, we have a full-stack banking API. So we cater to large enterprise clients, and we connect with them and drive products and launch new products for them on the payment side of it. Yeah, thanks.
Thanks. Shailesh?
Thank you, Sandeep. My name is Shailesh Deshpande. I'm Director Growth with Jokata. We are a subsidiary of BillDesk, which all of you must have heard of. They are India's largest payment service provider. Our focus at Jokata is to work with large financial institutions, banks, NBFCs, even fintechs now to really digitally transform their credit decisioning process. We also have recently started a credit intelligence practice where we enable real-time decisioning for consumer onboarding and credit decisions via our scoring engines. And we work with a lot of new fintechs and NBFCs and banks to enable embedded finance for them increasingly.
Thanks. And last but not the least,
Thanks,
Priyanka.
Sandeep. Hi, I'm Priyanka Kanwar. I'm the founder of Falcon. Very simply, we help any company or financial institution like an NBFC, MFI, or banks become a fintech. So what that means is that we're a banking as a service full stack platform across cards and wallets, across payments, accounts, and lending. We'll help anybody build a bespoke product and launch it as quickly as possible, right? So very happy to be here with all of you.
So Priyanka, let's start with you, right? You spoke about what you do, right? But where does embedded finance and how has that helped you, right? So for example, the question I'm asking is why are you solving this problem of creating a single platform for banking, for example?
Yeah, so that's a great question, Sandeep. And we have actually been, both my co-founder and I, along with our team, we've been around in fintech long enough. And when I started, it's a funny story, but when I started right out of college a few years ago. And when we first came back, to India, we started working with a few banks. And at that time, UPI wasn't even around. Payment banks weren't around. A lot of the protocols, that have now come were not there. So for us, as a fintech, I think we were in that lot where there were probably around that time around 200, 250 fintechs. Today, there's 6,000. So we started at a time where, financial institutions or banks were just learning how to work with fintechs to make new use cases, to make new products possible. And both my co-founder and I, honestly, personally also had those experiences where we often joke that, we spend most of our 20s just trying to integrate with banks. We had a lot of exciting ideas, but it would take 18 to 24 months just to launch something. right? So I think for us, this is also very personal, where we realize that, two major trends are taking place. They will continue to take place in the next decade, right? So both on the financial institution side, if you look at banks today, whether in India or globally, you look at commercial banks, small finance banks, payment banks, even NBFCs and MFIs, you'll see that everybody is moving towards an OPEX stack plus plus model, right? So this is a model wherein banks come and say that, we want to enable fintech use cases for our customers, whether it's retail or SME customers. We want to be able to work with fintechs. There's, dozens of fintechs who are coming to us. We want to be able to integrate with them. We want to help them innovate. But we are not able to do it with existing models, right? So that's where, I think there has been quite a lot of organic demand from financial institutions saying that we want a new age model where we don't only have vendors, we have true partners who can help us not only with the tech stack, but in innovating, building on top, and helping us talk to developers and product managers in their language. Because today's economy is run by developers and product managers, and nobody knows that better than you, Sandeep, right? And the second, I think, big trend that's taking place, which is completely pushing this movement forward, is that a lot of tech companies, right? I'm not only talking about the largest fintechs, but A16Z, for example, loves this trend. They say that every company will become a fintech. And we are seeing that on the ground, right? We are seeing agri-tech companies who come to us and say that I've got millions of farmers. Can I enable savings accounts for them? Right? We see somebody like an India Post Payments Bank coming to us and saying, we have 5 crore customers, right? Can you help us with both a self-serve and assisted model where we can embed not only basic payments, but even products on top of it like micro insurance, like bill payments? Can we leverage our network for that? So I think the idea behind embedded finance is that it's completely opening up new distribution channels, right? It's a new way of delivering financial services to the end customer. So that's the reason that we do what we do.
Awesome. Thanks for that. And speaking about India Post, I found that very interesting. And I think, Sailesh, you also are working with India Post. Correct me if I'm wrong.
That is correct. That is correct. So our mandate with India Post Payments Bank is to essentially, it's driven by financial inclusion. And as Priyanka said, they have the best network in this country. They are not allowed to lend because they are a payments bank. However, this distribution that they own to every single pin code in this country it's priceless. So there are 2.5 lakh postmen who are now being digitally enabled to distribute small ticket credit, small ticket loans on behalf of banks, NBFCs, and public sector banks even, to all of these millions of people who could be in need of credit. So it's a very exciting implementation for us, especially because it's India's first retail implementation of OCEN, or the Open Credit Enablement Network. So I think that really is going to throw open that particular implementation is going to throw open the potential for all kinds of embedded finance flows in the retail space.
Can you give the audience some other examples of how Jokata works in embedded finance?
Sure. So I think Priyanka touched upon that earlier, right? There are two sides to this equation. One is a banking as a service stack, or a BaaS stack, which really brings every single product or service that a bank traditionally offers, whether it's a savings account, current account, credit products. All of those products are getting exposed to the outside world through APIs, and that's how that banking as a service model now brings the bank capabilities outside the bank, which is where you are. And the other side of this sort of two-sided marketplace is all of those platforms, whether your marketplaces or your favorite cab aggregators. They all have access to millions and millions of consumers, and most importantly, they have context. And this is important to understand in embedded finances. Banks have traditionally tried to sell products to their customers without any context. Like, all of us have gotten calls from a bank saying, do you want a home loan? Do you want a car loan? When they have no clue whether I'm actually trying to buy a home or not. Whereas what embedded finance enables is that context in which a lender can place their product service offering so that the conversion rates are very, very high. The cost of acquisition is very low. At Jokata, what we do essentially is this end-to-end journey building from all the way from the brand side or the marketplace side into the bank's BaaS stack or their core stack to really allow embedded finance place to happen. Whether you're buying we do this for a very large auto OEM, and you can walk into their showroom and buy a car in minutes because we are plugged into the bank at the back, and the decisioning is in real time. You can go to Amazon and get an instant, get your iPhone financed in real time because we plug into a whole host of banking infrastructure at the back. So that's what we enable largely in the space.
Yeah, and the idea also why I'm asking everyone to talk about the examples is for all of you also to get an idea of how pervasive it is, right? It's beyond fintech. It actually expands, and it connects to what Priyanka talked about, where every startup is going to call itself a fintech because of this. By the way, we're going to have. Can we have a mic there ready, please? Because if you have questions, I'll ask for. I'll let you guys know. So just raise your hands. We'll get you a mic so you can actually ask us questions. Yeah, interestingly, I actually moderated a panel yesterday on financial inclusion. Anyone here attended that panel? I see a couple of hands up. Thank you for attending that one as well. So there actually, we had Ketan who was a CEO of MSWIPE. He actually spoke about PIDF. So PIDF is Payment Infrastructure Development Fund, right? And that actually gives payment companies this got a budget of something like 800 crores to deploy devices to tier 4 to tier 6 cities, right? Remote locations, Northeast, Jammu Kashmir, Ladakh, right? And what I found interesting is, in the end, what you're trying to achieve is financial inclusion, right? So when you work with India Post, for example, the aim goal is financial inclusion. But the mechanism you're doing is through embedded finance because they have the distribution network than you take in, right? Amol, I want to come to you next, right? And because you work directly with banks, right? You help them give a 360-degree view, right? We kind of spoke about this a little bit earlier, but why can't banks do that themselves? What happens that a bank needs to work with a fintech like Instant Pay, right, to do that? So just walk us through that.
So look, one thing which we have learned in the last couple of years and during the pandemic itself is everyone has to sort of expand their revenues in terms of where the next customer is coming from and probably how the different new revenue streams would be coming through. Okay, that is what we've learned. And I think the banks have also understood that. So that is where they are reaching out to fintechs to sort of have different journeys for the customers, have the data in one place. So that is where it's coming from. And I mean, we talk a lot about on the consumer side of it there. A lot has been done on the consumer side of it where we talk about embedded finance, we talk about cab aggregators and say Ola giving a credit card to make your payments over there. And we talk about, say, e-commerce apps giving credit cards. A lot more has been done on the consumer side. But what, as an organization, we feel that there's a lot which needs to be done on the business side of it. Okay, so that is where our focus is. So what Instant Pay does basically is we are completely focused towards the SME side of it and the MSME side of it. What we are trying to create is a similar sort of an embedded platform for businesses where they could carry out their payouts, open bank accounts, carry out their payouts, carry out the collections, manage their vendors, accounting. One another challenge what we've seen is there are a lot of single product companies here. I mean, SME, for that matter, who's not that technically sound. The data is scattered across all platforms. So we see that there are payment companies, there are collection companies, there are accounting modules, and your data is not at one place. So eventually you can't use that data to come out to a conclusion. And that decision could be a credit decision at the end of it because MSMEs need that financing. And that is one sector that is deprived of financing. Even traditional banks are not pretty keen or understand the need over there. So that is where somebody like a player like Instant Pay comes into the picture, where we have, where we have all these MSMEs on our platform, SMEs on our platform. We have the data points from payments to collections, and based on all those data points, we work with lenders to sort of give credit to give working capital credit to these businesses. Banks, in a sense, how this helps banks is we are helping the bank retain the customer at the end. Okay, when we acquire a customer for a bank, we are actually reducing the bank's CAC over there. We are doing the acquiring in that sense. Okay, so we act as, we act as an extended arm of the bank in that sense, and that is how we are helping these banks.
Got it. I want to bring in Shiv next, right? Shiv, we kind of discussed this a little earlier, and the banks don't lend to everyone, right? You run an NBFC, you have a large market base for yourself, right? How does DMI, like, I had two thoughts. So one is, how do banks, how do you see yourself fit into embedded finance and driving financial inclusion, right, across the country? But also, is there some things that banks can do and cannot do that NBFCs like yours can do?
Sure, thanks, Sandeep. So I would like to take a step back and put embedded finance in a continuum of basically evolution of finance. So the way I think about it, and I think it's hardly unique, credit is kind of like a lubricant. So you can't have an economy function if there's no credit, just like you can't have a piece of machinery function if there's no lubricant. Eventually the machinery just clogs up and jams up and stops. The most efficient piece of machinery is where it has the lubricant applied uniformly, and where that lubricant is not visible in an invasive kind of a way. So when I think of credit in the economy, to me, embedded finance is simply the iteration that gets us closer and closer towards what is ubiquitous finance, right? So finance needs to be a background process. It needs to be ubiquitous. It shouldn't be something which draws attention to itself. And when we get there, that's essentially when I think we have economy functioning at full capacity and achieving its highest potential. So everything that we are doing, right, whether it's each one of the people here and the companies that we represent, all we are doing is increasing the efficiency of the transmission of capital from savers who have the money to the people who are making investments who need the money. Right? We are all intermediaries in that supply chain of capital, moving capital from savers to investors. Now, what is the most efficient way of deploying this capital? That's kind of where we come in. And to answer your question in a slightly convoluted way, I would say that capital comes in many different flavors. And the prime characteristic of capital is risk. So what we had discussed earlier is that eventually the person who has, or the entity that has capital, wants to allocate that capital into different risk buckets, right? Some of it is very safe, some of it is very risky. And overall, they achieve a portfolio effect, and they achieve some kind of a portfolio allocation of their capital, which reflects what the desire of that entity is to achieve from that capital. So what does that mean when we think of the Indian context and embedded finance? What it means is that we should not be thinking of banks as the only source of capital, which is kind of where sometimes the thinking that we fall into is, I'm a fintech, I need to find capital, let me go tie up with a bank. Or I'm a fintech, I need to find a large NBFC to tie up with, right? Because each of those, especially banks, represent a particular kind of risk appetite. Bank capital comes from depositor bases. And depositor capital specifically is supposed to be pretty safe. So when we force banks to take the entire gamut of risk, from very safe to very risky, we end up with a highly inefficient use of that capital. And that's kind of where NBFCs come in, which is why we've seen the growth of fintech driven by NBFCs largely, although banks have obviously become much more active recently. And that is because NBFCs represent a different kind of capital. Similarly, there are other pools of capital, such as AIFs. There's foreign capital coming in through FPIs. And each of those represent a different risk appetite. And in order to achieve the final goal of what we are trying to achieve in India, which is financial inclusion at scale, ubiquitous finance available for everybody, economy functioning at full capacity, we need each of those sources of capital to have their appropriate place in this ecosystem.
That's a very, very interesting point you made, Shiv, especially on the types of capital and how it goes. So this essentially then becomes a correcting the supply to the right kind of demand, right? So you won't need to correct the right capital, kind of capital to the right end consumer, and embedded finance is the connector in between.
Yes, that's exactly right. So a lot of the work that we are doing in fintech and in this group here is solving for the demand side of capital, is solving for how to find the most efficient way of channeling demand. But once we've channeled demand, that demand has to be channeled to the right supply of capital as well. And today, I think that channeling of demand into the right supply has not yet happened properly. And I'm sure it'll happen over time, right? It is probably happening faster than I realize. But certainly, the noise is around solving for the demand side of credit rather than the supply side of credit.
Got it. Last but not the least, Ram. So, I mean, you've been a veteran in the payment space, right? This is your second payment company now, if I'm not mistaken, if I got my count right. Like for us, right? So let's say as a novice looking at embedded finance, doesn't UPI solve everything? Why do you need, embedded finance in payments?
Cool. So, look, embedded finance always existed. If you go to, say, a Chroma store, and then you find a Bajaj Finance counter, or you go to a TVS two-wheeler showroom and you find a TVS Capital person sitting there, right? In a variety of ways, right? Even I'm assuming a lot of you here went to IIMs as well and IITs as well, right? Where student loans are just there, available right on the campus on the day of admission, right? Now, all these are embedded finance only, right? What today that we are seeing is that digital is making this, is actually putting this on steroids, right? Like Shiv said, now we are on a continuum, right? Where commerce starts and where finance starts, that can actually intermingle. Now, a simple fact, let me give you, right? Where we all purchase on Swiggy. Now, suppose the cart value is 500 rupees. And on the checkout page, suppose you see an offer that says that, hey, listen, if you add 100 more rupees to your cart, you will get 20% discount on your ICICI card, for example. Right. Now that purchase decision there is actually influenced because of this romance between the commerce institutions and the banking institutions, right? And this is embedded financing. It exists everywhere. Just that digital makes it enormously difficult, but it also opens up enormous amount of opportunities, right? Like Shailesh said, this is all about the context, right? Now, when you have the context of the customer, the financial product can be made really, really relevant at that moment for that customer, right? And the decision can be influenced, whether to purchase, whether to go ahead, whether to add one more item to the cart. All of this is influenced because of this embedded financing that exists, that integration that simply exists between, say, a Chroma-like a commercial entity and a Bajaj Finance like, say, a lending entity, right? And like I said, commerce is moving towards online more and more, and this offers enormous opportunities. Efficiency, right? Digital is all about efficiency, like Shiv was saying. Now, a very large institution is required for a very large bank to partner with. But even a small store that is actually selling, say, mobile phones can actually tie up with, say, a fintech company and work with a lending institution to offer credit at the time of purchase, right? This is effectively what embedded financing is actually doing across the board, right? We are bringing in efficiency, distribution, and profitability. Of course, there is a reason why Chroma and Bajaj are working together, right? Because there is profit, right? Neither of them are suffering a loss because of each other, right? So that profit always exists, right? And customer is also benefiting, mind you, right? Nobody is a loser in this equation, right? This is how I see it, right? And of course, the challenge for us to solve is with regards to digital, right? The rules of the games are quite different. In case of human beings that are sitting there, it's very easy to frame the rules and say that, look, these are the roles and responsibilities. But in case of digital, things keep shifting. That continuum exists, and that poses a huge challenge to the regulators, right? And of course, that's a big problem to solve. But like I said, look, this is a humongous opportunity.
Yeah, that's actually very interesting, right? So, I once, when I just bought the phone, I bought a new phone recently, and he actually said, "Do you want to go EMI?" Right? That was the first question. And I remember when I told no, I said no, I'll just make a full swipe, and he gave me this look of, as if he's seen a ghost, right? So my follow-on question was like, obviously, it's like, okay, what percentage of your customers take a phone on installments, right? And he says it's around 80 to 90%, right? And I was surprised. This was like one store, right, where I bought from. So now that you say all this, I kind of can make the connects between the points.
Absolutely.
So I want to take a step back. I'm going to get into some more questions. But by the way, any questions from audience till now? Okay. Oh, wow. We already have questions. Okay. So the gentleman back there, can we get him a mic, please? With the gray jacket at the back. And then after that, the lady at the front. So just hold. When you ask the question, please give your name, which company you're from. And only one question. No sneaking in the second question after the first. Just one question per person.
No worries around that. No, great. Thanks, Ram. Thanks, Rev and Amol. Thank you, everyone. Great insights you have provided. So, just one quick question, right? So, when you just mentioned that you went to a phone shop and you got a phone for yourself and you were offered a EMI. Now, the obvious problem that comes with the embedded finance is that predominantly you are servicing those customers who are digital greedy, right? These guys are already getting served. Now, the problem comes in when you have to go beyond that level. And that is where Shiv was mentioning when you go to a bank, the kind of depositors' money comes in, that's where the risk is different and NBFC's risk is different. So where does, the marriage comes in? Because there is so much of data gaps that is coming, various apps, they are not talking to each other. And that is where the inherent problem is. Because while we talk about the credit has to go beyond the tier 1 kind of borrowers, like the tier 2, tier 3 and tier 4 kind of borrowers, that is where they are facing the problems. So where do you think, with this regulator eye also coming in, and we've seen in the last 3 months how things have changed dramatically for various fintechs. So how do you think you can manage marrying the, tech business plus the regulators plus going after those areas which still provides you a substantial, kind of opportunity? So that is one area, I keep wondering, how as a fintech is going to evolve in those spaces.
Who's that question for?
For everyone, like who can answer that?
Okay,
Yeah.
so Shiv, I want to give it to you.
Sure, I'll be happy to take that. So I think it's a process.
Sure.
We are not going to start on day one and suddenly have solved the grand unification theory, right? So we have come an incredibly long way in the last 5 years. And I'll give an example of a particular program that we run as DMI. It's in conjunction with Samsung. And it's a phone finance program. So if you were buying a Samsung phone, maybe that's what they were offering you. But the interesting thing here is that roughly 50% of the people who buy a phone on finance are new to credit. They have never taken a loan before. So I think whether or not they are digitally savvy is unclear because by that definition, I think most of the country at this point is digitally savvy. Because smartphone penetration in India is very, very high, right? We have something of the order of 800 or 900 million smartphones in the country at this point. So I think we are addressing the problem one step at a time. It's not something that we will have solved entirely, but we are making incredible progress. When the fintech revolution in India started in 2016, let's say, there were 70 million CIBIL records. I think today that number is probably north of 400 million, right? So in the last 5 years, we have basically gone up 600% in terms of bringing people into the formal credit system. And that is step one of financial inclusion. I don't know if that adequately answers your question.
Anyone has a different take on it?
I don't have a different take on it. I think I just want to supplement what Shiv said, which is that a lot of these products, they have a financial inclusion angle to them, and they're actually an on-ramp to formal credit. It's not that buy now, pay later products only target subprime customers, right? It's just that banks have traditionally had no way of assessing their credit worthiness because they're not in the CIBIL database. There is no credit bureau. They've never taken a formal loan. So they're not all customers who cannot be lent to. I think embedded finance and what has happened over the last few years has really enabled that on-ramp to formal credit and accelerated that through capital providers like DMI and technology providers and platform providers who all come together and kind of allocated their capital based on the risk appetite of the different institutions. I think that really has accelerated that jump from 70 million to 600 million or whatever that number is today.
That's a very important point, right? Because in order to get a traditional loan, you need a credit score.
Right.
In order to have a credit score, you need to have an
take
history
a
of
loan.
loan.
Yes.
Right? It's kind of a chicken and egg.
Correct.
And embedded finance actually kind of solves that to a certain extent, getting in that new set of players into the ecosystem, right? Building that out. That's so I didn't think about it from that point, but very interesting. There was a lady over here who had a question. Can we get her a mic, please?
Hi, I'm Radhika Biani from Narottam Siksaria Family Office. My question is, will ONDC impact embedded financing businesses? And if yes, in what form and fashion?
Who's the question for?
Anyone who would like to take it.
I can take it if nobody else wants to. So yeah, I think ONDC is going to be, this is the open commerce standard that's coming in India that allows essentially a customer on one e-commerce marketplace to basically search for items that could potentially be listed on other marketplaces in the country. It's a one of its kind infrastructure that is being proposed by the government of India. And I think ONDC will only accelerate this whole embedded finance and the ability to provide credit because it makes the pie much bigger, right? If today you're on marketplace A and the moat that all of these e-commerce marketplaces have is their customer base and the data and the analytics and the knowledge they have about that particular customer's likes and dislikes. ONDC is going to democratize that in a massive fashion. What that means is that if you look at how the India stack has gotten built over the last few years, right? Starting with identity, with Aadhaar, payments through UPI, you have account aggregator for open banking standards, you have OCEN for credit enablement, you have ONDC for e-commerce. So it's a very systematic step-by-step progression to get us to a point as a country where we are in fact one of the most sophisticated nations today in terms of payments. I think everybody knows the UPI success story. We are ahead of almost the rest of the entire world in the payments, in the retail payments industry at least. Similarly, a lot of these initiatives are actually step-by-step progression towards making us the most mature digital economy. And I think ONDC is only going to amplify the potential for embedded finance because now these customers and these lenders have access to a much wider base through the standardized APIs.
Shiv, Ram?
I think I would like to add on to that the history of human prosperity is a history of specialization. So when you had one entity doing everything, that doesn't allow for the pie to grow very much. But when you allow for specialization, that's when the economy grows, that's when the ability to produce more and more becomes fully tapped. And this goes back to, I think, a question earlier that Sandeep, you'd asked, that what happens with banks as they start to lose control over some parts of their business because of things like embedded finance, where pieces of their business are getting taken away and there are fintechs coming in and specializing in them. And I think the answer to that is, again, very simply, that the greater specialization you have, the greater the total output of the system. And so ONDC, again, should lead to a plethora of business models that allows for people solving very specific pieces of this finance supply chain that eventually leads to significantly greater output that makes it better for everyone.
Ram, you want to
Just briefly, see, ONDC expands the pie for commerce and enables more participants in the ecosystem, right? Now, that could potentially allow for more competition, means more imagination and more thinking around product, right? So that could potentially have a consequence that embedded banking could actually become better. But I'm going to wait and watch to see how ONDC delivers rather than speculate whether it's going to expand the pie or not. Because expanding the commerce pie, that's a very, very big challenge. It's a massive challenge.
Interesting. So for the folks in the back, seeing all of you stand, my legs are paining, though I'm comfortably seated here. But we do have a lot of empty seats in the front, so feel free to come here, come in the front. And don't worry, it's not school, so I won't ask you any questions. But if any of you have questions, any other questions before others I'm going to continue ahead. If anyone has questions, just raise your hand anytime and we'll get you. So Mike here, please. Again, please introduce yourself. But before that, there's one thing I want to add, right? When systems talk to each other, a bigger value is created. So if you look at the UPI system, right? UPI is actually built on the IMPS system, right? And that is nothing but a set of switches that allows banks to talk to each other, right? So this is like a knowledge graph, right? They say the knowledge graph grows exponentially to the power of the number of connections which is done, right? So I would think of it as in this manner. Whether now the potential is fully achieved or not is a very different question, but it enables that. Would that be appropriate to say? Yeah. Yes, please.
Myself is Surya Prakasha from Union Bank of India. My question to Shailesh regarding this token-based framework, you are telling that it is related to this embedded finance. So it is under evaluation. So what do you expect that new avenues for token-based infrastructure we can provide this embedded finance?
So as a bank, I think one of the first things you have to do is to become AA compliant account aggregator. You have to be on the account aggregator framework, and you should have what is called as an LSP bridge. It's a component, it's a piece of software that allows a large bank like yourselves to connect to the external world, right? If you want to do an token-based journey for a personal loan, for credit cards, for auto loan, whatever the product may be, you as a bank need to essentially expose your capabilities, your credit policies, your onboarding rules, etc., to the outside world so that others can ping your systems in real time. They can push data, financial data, KYC data at the bank, and you can give an instant response back. I think that will really open a lot of avenues for not just financial inclusion, obviously, all of your banking correspondents, all of your agents through whom you source today, your branches, they can all be enabled on the same framework, but it allows you to, for example, go out and do partnerships with large auto manufacturers, with large education loan providers or educational institutions in the country. So all of these products today can be run on Open. That's the potential of Open. It's still early days. I think we are at least 6 to 12 months away from seeing any significant scale on Open because banks are still getting ready. But I think the potential to transform your sourcing digitally for certain products which are unsecured typically and require an instant response, I think Open provides a huge opportunity for banks like yourselves.
Okay. Awesome. Any other questions, just raise your hands. We'll get your mic to this one. But I'm going to push in one question from my end. And Priyanka, you've been very quiet. So the question is going to be for you, right? We've talked a lot about what's happening, what are the advantages. We've got a room full of fintechs and financial services companies who are going to solve issues. So I wanted to know from all of you, what are the challenges today in that is stopping the progress of embedded finance, right? Or problems that need to be solved to accelerate the progress of embedded finance within the country, right? So we could start with you and then to whoever it is, but I wanted to start with you because you've been quiet.
Yeah, no, thank you so much. I think you're right. These are very, very early days for embedded finance. Like Shiv said, we have made massive progress in the last 5 to 10 years, right? And I was just reminiscing while everybody was talking. I was thinking about, back in 2010-11, if you remember, when the microfinance industry had started to rise significantly, you saw that there was a fundamental shift, there was a mission drift, and there were challenges of, overlending. There were challenges where the RBI had to step in and the regulator had to sort of clean up, some of the policies, right? I think that same shift is what we are seeing today with fintechs. Right, and I personally, as a founder, I always have to be, I have to be eternally optimistic. So I see it as a positive development. I see it as a coming of age, where we're saying that fintech can no longer be ignored. It can't be ignored by banks. It can't be ignored by the regulator. So, the recent regulations that you've seen in the last 3 to 6 months, I think a lot of it has sort of have come about to push fintechs to sort of think in that direction where, consumer protection also becomes extremely paramount, right? So I think, from a regulatory perspective, definitely all of us today are forced to rethink, a lot of our flows. We're looking at how do we sort of push data privacy, data protection, how do we push consumer protection, right? So I think regulation is definitely a challenge in a very, very positive way, I think, because the more compliant you are, the more responsible you become, right? And I think that brings me to my second point as well. When we were talking about financial inclusion, I completely agree that we've made a lot of progress where we had only 6 million POS terminals, acceptance points earlier. Today we have 200 million UPI acceptance points, right? We have a very large base. In fact, I think UPI has led to a very, very large, base of people coming into the formal economy. But when you talk to people on the ground, when you talk to MFIs who are lending to SHGs, and you talk to, folks who are lending to small sort of, enterprises and MSMEs, right? You'll find that even though smartphone penetration has increased, only about 10 to 15% households have smartphones. And when you look at, a segment like SHGs, you'll see that, women may not even have access to that, right? So therefore, you've seen, solutions like UPI Lite come about to really push the boundaries in those areas where network connectivity or smartphone penetration could be a problem. So I think when you look at that segment, I definitely am very optimistic about how embedded finance is pushing financial inclusion. But I think all of us, have to be even more responsible when we are thinking about those segments, right? Those segments are vulnerable. So when thinking through that, I think there are challenges around, how to really shape experiences for those segments, how to increase financial awareness. I think that still remains something to be sort of tapped.
Amol?
Yeah, so look, a couple of years back, we had open banking and then banking as a service. These modules or these frameworks actually sort of paved the way for embedded finance, and that is what we are talking today. And I believe, we are at the right time right now to have some sort of regulations around open banking and banking as a service so that we could enable embedded finance, and we could have those journeys created and built in something like what we had like in Europe. There's a regulation around open banking which is there. That gives clarity on what needs to be done. So I believe it's the right time now. There are good number of fintechs who are doing something on the open banking side of it. Banking as a service has taken up, and now embedded finance on the business banking side of it as well as the consumer banking side of it. So I believe if we have clarity from the regulators around open banking framework, that would actually drive embedded finance. And once we have those regulations, it would create a framework where there would be clarity on what is possible, what would be required to be done. So that is something which is there to look forward to, and that would be really interesting.
Shiv?
So I think the single biggest challenge to the growth of embedded finance, or to essentially the growth of any innovation in this space, is the fact that you have entrenched business models on the capital side which are not exactly in sync with this idea of disaggregation. So it takes a long time for large entities such as banks and large NBFCs to embrace a new paradigm of the credit supply chain. And even after they've embraced it, it takes a long time for them to actually be able to implement it within their own system, which has been built over years and decades. And so I think a large part of the innovation in embedded finance today is happening, again, as I said, on the demand side of credit. And eventually we need that to filter over into the supply side of credit, such that the banks, the NBFCs, and the other capital providers become comfortable with the idea that they no longer own the entire supply chain of credit, and that they have a niche role to play. And that mindset change, I think, takes time.
Got it. Ram, anything from you?
Yeah, just one quick thing, right? See, um, uh, non-regulated entities doing regulated activities like lending and investing is a problem for the regulators, right? And that is at the crux of this problem. When we talked about this digital continuum being between the commerce entity and the banking entity, be very clear that the commerce entity is never going to get into a regulated activity, right? Their Chroma is never going to give us a personal loan. But when a fintech that actually comes in between and actually provides this service, there is this nervousness that, okay, hey, is this fintech going to also lend? Right? And then you got balance sheet lending, off balance sheet lending, all those, very complicated terms, right? But the crux of it is the roles and responsibilities are still not clear, primarily because it's a very nascent industry at this point in time. And I think as we evolve, as fintech companies also evolve, I'm hoping that even the venture capitalists will see that the value that they are ascribing to a lending business today will look very different 10 years from now, right? When that happens, fintech companies will automatically gravitate to non-regulated activities, right? And I'm looking at this as an evolutionary force. It's not that we've spoken the final word at this point in time, right? And hopefully I was able to give some color into the problem that exists today in the market, where fintech companies are perceived with a little bit of doubt by the regulators and the banking institutions.
Yeah, I think like if you look at Europe, you spoke about this PSD2. Australia has the open banking framework, right? That's worked really well for them. And I think, yeah, I kind of agree that it's at some point it's going to come in. But for the gentleman in the green shirt there, we have last 3 minutes. You had a question. You have the mic.
Hi, I'm Vivek Desai from PayU. Hi, Ram. So my actually original question was around regulations, but I think the last question just covered that in terms of how regulations are affecting embedded finance. So my other question over here is like, considering embedded finance looks to offer non-financial companies ability to offer financial products to the users, right? While you take care of all the integrations with the financial institutions. My question is in terms of customer grievances, right? And this is a point where financial services is not a one-touch product, right? I could be taking a loan, I could be taking EMI or payments, or even an insurance in an embedded finance manner, and I could have some grievances for the product that I have. Now, as a user, when I buy that product, say I go to a car mechanic and I'm buying a car insurance over there, but when I'm actually going to take a claim, I actually have to work with the insurer. How do you all see this problem from a user statement, from a user flow being solved for, right? And do embedded finance players also play a role in this, or would you leave it to the financial provider or the non-financial provider who you're working with, right? How do you look at this?
In fact, that's a very, very good question. Like, he pointed one of the most fundamental problems today that exist, right? Like, one of my problems has been that we don't have NPS for regulated entities today in the country. That the regulator doesn't actually enforce NPS, right? That is very sad, right? And when we are doing embedded financial products, how do you make sure that the support is at the same level to the support of, let's say, the other entities that we are talking about here, right? It's a difficult thing, and that's why I say that this is an evolutionary force. We can't sweep this under the carpet. It's going to take time for us to address it. It's like we've just fit a Ferrari engine into an old car, right? And now we are expecting this car to perform very, very well. It's going to take some time, right?
The tires need to be changed for sure if it's a Morris Minor. Anyone wants to have a take at that question?
So I think I have a slightly different take. If I understand your question correctly, you're talking about the customer experience in terms of what happens when I take a loan or when I buy a wealth product or an insurance product through, let's say, a brand. And then when it comes time for servicing of that loan, or I have grievances, or there are issues, who do I go to? So today, I think all of the brands are focused only, they are the points of sale. The way it runs today is none of them want to take on the additional obligation of having to service your customers' loans as well, and statementing and figuring out any grievances, etc. So I think today that's where we are, but you can always do value addition on top. I don't see brands today doing that. There is a gap in the market where people are not willing to take on the additional responsibility of servicing the customer.
Interesting. That being said, we are at 6 seconds left, so I'm going to get a big red times up at me. But wow, that was a fantastic discussion that we had, right? I wish we had another 45 minutes, but we do have a panel after this. Like I said, there's like a big red times up telling me. But I would like to thank all of you for a wonderful, wonderful discussion. And folks, you can find us on social media, LinkedIn. I don't use Twitter, but I'm sure some of you do. So you can find us and connect with us. And of course, we're all available after the session also for talks. Can we have a really good round of applause for a fantastic discussion today? Thank you. Thanks. Let's take a selfie also.
Okay, that was refreshing, exhilarating, stimulating, and riveting at the same time. Like we said at the Global Fintech Fest, we are trying to bring the best of minds, the best of influencers, revered speakers from their respective pioneering industries, share their perspectives and insights with all of us in the most candid way. And I think this panel discussion was a testament to that fact. And the overall intention is to really prepare and position India as a leading fintech player, which is ready to take on the demands of 6 billion people all over the world. And I think Global Fintech Fest lives up to that expectations. Thank you for that lovely and invigorating presentation, panel discussion, ladies and gentlemen. And now it's time for our acknowledgement, beginning with our platinum partner, Google Pay, PhonePe, Visa, M2P Fintech, MasterCard, Falcon, Entity Data Payment Services as our registration partner. Ladies and gentlemen, our next panel discussion dwells and delineates the aspect of banking as a service, democratizing banking. Across industries, digital transformation is democratizing data to enable greater transparency and better customer experience. New technologies are opening up legacy systems to emerging startups and third parties, and in some cases, putting data directly in the hands of customers. Similarly, in financial services, banking as a service platforms have surfaced as a key component of open banking. With this, like I said, our next panel discussion is going to be loitering around the topic banking as a service, democratizing banking. And our moderator who will be maneuvering this part of the conversation is going to be Ms. Aishwarya Jaishankar, co-founder and COO of Hyperface. A big round of applause, ladies and gentlemen. And joining her on stage will be the following revered and esteemed speakers, beginning with Mr. Ajay Ranjan, Senior Group President, Head of Transaction Banking Group at Yes Bank. We have with us Mr. Ganesh Anant Narayan, Chief Operating Officer at Airtel Payments Bank. And we also have with us Mr. Yadvendra Tyagi, founder at Encash. With this context, ladies and gentlemen, I hand over the stage to you, Aishwarya.
Thanks a lot. Thanks a lot for the introduction. I think banking as a service, while we were just discussing outside that it is nothing but old wine in a new bottle, because banks have always been helping institutions, helping clients to take their product in different forms and avatars. With modern banking, cloud capabilities, software as a service, I think now the terminology is banking as a service. But banks have been offering these services in different forms and avatars. The third-party apps you use are nothing but another form of banking as a service in terms of UPI. Your salary upload also is a form of banking as a service. There are many other use cases known and unknowns to us. That is why this panel is super exciting for me. We have a transaction banker, we have a payment bank executive, and we have a fintech representative to speak what all of us have in our mind. So I would like to hear from each of you, right, Ajay, Tyagi, and what in your mind, in your context, what does banking as a service mean? Maybe Tyagi, you could start off. You could also quickly introduce and give the better context on what you do to
No, so I'll not go to the context of our company per se, and I'll talk about it later on when we get time. But I think banking as a service today is being defined in a very shorter vision point of view. And I think this with this panel, what we're going to talk about is say what banking as a service overall looks like. In an overall view, it's not only opening accounts, fixed deposits, and loans per se. It has to move beyond that, which is transaction banking, the everyday transactions which we do, and how can we democratize and make it easy for each and of the consumers and businesses to make sure that banking as a service goes across into their day-to-day life.
Yeah, hi, thanks Ashwarya. And so just to introduce myself, my name is Ajay Rajan. I run the transaction banking business for Yes Bank, where I've been working for 5 years now. And prior to that, I spent 22 years with Deutsche Bank, where in my last role, I used to be the global head of Fintech, for DB, leading their global Fintech strategy for them. So clearly and I think Ashwarya, you already alluded to a lot about, what banks have already traditionally been doing, around banking as a service or BaaS as we call it. So clearly from a banker perspective, it's the provision of providing banking products and services through third-party distribution. Essentially, the way it works is, from a fintech ecosystem perspective, a bank which is a regulated entity is providing access to the banking products and services to an unregulated entity through modular APIs. And, in a lot of cases, they're, of course, also building their own wrappers, around the products and services which they consume from the banks. And then they bundle it and are providing a different BaaS experience, to the end consumer who's actually seeing a very innovative, product, end product on back of a banking API which is there. Classic case is around UPI, where the regulator created the payment infrastructure. The banks have the network access, and which they opened up to the fintech players, and the fintechs bundled it beautifully along with various value proposition. And I think the final outcome is the customer wins. And I think the growth of UPI as a payment instrument, I think is legendary now, right? So it's a very classic example of banking as a service. Purely from our own standpoint, if I maybe look at it, and Aishwarya, I just go back to the statement that you made. We I think have been doing banking as service since 2015, at which time I don't think there was a term called banking as a service. And that's when UPI came into play. We entered into a partnership with PhonePe. Today I think, as I think very safely say, the rest is history. And there is no greater example of banking as a service than what I think Yes Bank and PhonePe did with UPI.
Okay, I'll go next. My name is Ganesh. I'm the Chief Operating Officer of Airtel Payments Bank. Airtel Payments Bank actually, our vision or our aspiration is really to bring the next 500 million Indians into the banking platform or into the digital platform. And our core philosophy is that banking as a service is going to be the key enabler to ensuring that happens. And the reason I say that is because I think all of us, whether you're a fintech or whether you're a consumer brand, all of us have our own strengths. A lot of consumer apps, and I think Ajay mentioned the example of UPI, as in there are enough examples across. Each of these consumer apps have a strong relationship with customers. Now, if we choose to play the game by saying that our objective is to enable every consumer to transact with a bank and do basic banking transactions, then partnerships with a lot of these fintechs would be the right way. Otherwise, all of us will be spending ton-loads of dollars in trying to acquire that customer and, possibly sort of not investing that in the right space in terms of creating the payment infrastructure, either physical or digital. So banking as a service is going to be the key platform on which I personally believe, or our organization believes, that the next 200 million consumers are going to come into the financial inclusion space. So it's going to be a key enabler, Aishwarya. That's what I would say.
No, that's great. It augurs so well for the future of BaaS, for everybody here to hear such lovely insights from the bankers. We could maybe start with you now, Ganesh. What I would like to ask is, there are some points that we all sort of agreed on here. There is a Rails, there is a infra play on top, there is, of course, the license of the bank that's underlying, there is a core banking infrastructure, there is a customer experience layer, and lastly, there is a distribution. Now, the distribution and customer experience layer largely is where BAS has been able to come in and step up the experience, up a few notches. Now, in this scenario, there is always this classic debate of is it a bank versus fintech or is it a banks and fintech? I would love to know who owns the customer, the conversations around customer ownership. How do you see it evolving and how you think it could have an impact on how BAS is perceived as? Because obviously we believe banks and fintechs is the way to go for customers, but would love to hear from all of you.
Yeah, actually, in my view, I don't think there's a debate at all. It can't be banks versus fintechs ever, because each of these organizations or entities bring some unique strengths, and hence they complement each other. So any organization which chooses to look at it as banks versus fintech, I don't think is going to succeed at all. It will always be banks and fintechs. I think that's the first point in my view. Secondly, I think it's a very good question about saying who owns the customer. My own view is, the customer is owned by the platform on which the customer does the transaction. Yeah, regulatorily, I could say that yes, the customer is owned by banks because obviously it's a banking service which is being offered. But ultimately, the customer goes onto a platform because of the experience, and you mentioned that, Aishwarya, is because of the experience which is being delivered, which maybe other organizations or other platforms don't deliver. So ultimately, the customer is owned by the platform, because the customer is going to that platform because of the experience and the engagement they have. On top of it, if you are able to sort of cross-sell and upsell and do multiple other aspects, then so be it. So that's really what my view on this one is.
So maybe, yeah, just to add, and I think Ganesh, already alluded to, the moot point here. But if I give a twin-sided perspective here, from a regulator's view or a regulator's standpoint, I don't think there is any ambiguity or any doubt that the regulated entity will own the customer, right? So because from a regulator standpoint, yesterday, Governor Das also mentioned very in no unambiguous terms around it that the customer will always need to be managed by a regulated entity. So to that extent, from a regulator standpoint and the network access standpoint, the customer ownership, RBI will always look at the bank or a regulated entity to guarantee that or safeguard their interests, right? But however, having said which, and the point which Ganesh also made, is that the customer viewpoint or the customer perspective is the front end is provided by the fintech, right? So from their standpoint, it is they who manage the user experience, the user interface, and hence it is not wrong to also say that the customer is genuinely owned from an experience standpoint by the fintech who's providing that service. So it's actually not a versus story. It's actually a together story. Depends on which lens you want to look at it. So I think that's really where it is, right? So the key word here is collaboration. So BAS as a concept. Now, bank, generally will also directly, organically provide these services to their customers, right? So there, I don't think there's any ambiguity. It is the bank and the customer dealing directly. There is no intermediary between there, right? But in a typical BAS model, it's always a together play. So there is never a versus play there. So I think the roles are also very defined, right? The fintech brings in the agility, the innovation, the whole customer experience, that is provided by the fintech. The bank is, providing the trust factor, the custodian of money, the network access, all of that is being provided by the bank. So it's always a collaborative approach. And eventually, in my, I always say this, finally the customer wins, right? So he gets a trusted partner and he gets a best product and a best experience, through this product.
I have a bit of a different view, right, in that sense. And honestly,
Expected.
You can't own a customer. None of us can, to be honest. Ownership word per se is a very hard word to put across that who owns a customer? He's not owned. To top it up, if the experience has been amazingly good with the banks, and I'm not going against the banks in this stand, but if the experience had always been so great, they would have never come to a BAS provider in that sense, right? If they're coming to a BAS provider and giving out an experience layer which the customer is enjoying, that's the first entry point or his experience point. In my mind, the experience is being owned by the customer and customer is owning that experience in that sense. That's how it is going across. Can it happen without a regulated entity being there? Without the trust of a bank? No, it can never happen, right? So in that sense, it's a partnership, both the sides. To top it up, I'll also add BaaS a little bit, a different flavor to it. It's not a BaaS just to acquire customers or get more CASA into the banking system in some sense or the other. Banking as a service should also be partnering with the banks for the regular existing customer base of the banks. A business or a user today having a current account or a savings account account with the bank still goes to a different utility website to pay his bills and uses a bank's net banking to pay his transactions, right? Why should it be? If that experience by a BaaS provider can be built along with the banking team, then it's a co-ownership of a relationship, co-ownership of an experience, and making sure at the end the customer wins, right? It can be retail business, whichever way. So I think that's where I would be.
That's a very interesting take, Tyagi. Thanks a lot for that. I mean, it puts a very different spin. Also, Ajay was talking about regulations, and I can't, especially in the context that we are in with the recent amount of guidelines that have come in, very clearly there is certain future for BaaS, which is an enablement layer, and there is a BaaS, which is the customer experience challenging layer, right? The people who went directly, etc. What we are seeing, or that's more and more playing out, as Ajay pointed out, at least from a regulatory perspective, is the licensed entity rules, right? How are we seeing this? What is it going to mean in the larger context of BaaS? Especially the points that you put forth, the bank fintech collaboration becomes very important, but very keen to hear from all of you in the regulatory context. How are you seeing the future of BaaS?
So at the cost of being a little controversial, so let me try tell our friend Yadendra that try telling to the regulator that the customer owns the customer. I think you will get the answer. So again, I will come back to my point. From so I'm not against any of the points made, but again there is a very clear need by the regulator about customer ownership, right? And here customer ownership doesn't mean that forcing the customer to do a transaction or etc., right? That's not the context of ownership here. So from a regulatory standpoint, the bank is responsible. So let me not use the word ownership here now, right? The bank is responsible for the customer. Any grievance, any risk, and any of the parameters surrounding providing banking products and services to the customer. There is, I think, no doubt that the regulated entity will need to ensure that all the aspects, whether it is infrastructure availability, processes to manage customer grievance, query management, etc., right? So all of that needs to be provided by the regulated entity. And in a BaaS model, a lot of that responsibility will also get shifted. Not, I would say not shifted actually, but will also need to be mirrored and replicated by the BaaS provider. So they will have to put in places, controls, and other mitigants to make sure that the regulatory responsibility which is there on the bank is also taken care in the platform which they are kind of doing, right? So again, it brings back to my earlier statement that it is a together story. So it is even from a regulatory standpoint, and I think the governor also mentioned yesterday that we are extremely open to innovation and we want more and more innovation, right? But the innovation has to be in a controlled manner. So yes, they want the fintech ecosystem to innovate. They want them to, create more inclusion. And when I say inclusion here, it doesn't only restrict itself to banking the unbanked. Inclusion also means, horizontally, how do you expand more banking services to your customers? And for that, if the bank, rather than developing everything themselves, depend on partners and work along with them to create or co-create solutions, then you please do it. But then the bank will need to maintain the responsibility, towards all the customer effectiveness that I, kind of spoke about. So that's, really where it is. Eventually, the regulator, what they want is that there should be a standardization of process. They should minimize systemic risk. And while it may, of course, at the near term seem to be a little more hiccups and, impediments, but I think from a longer term strategic roadmap, I think that's the right way to go. And eventually, a lot of these non-regulated players will also end up getting regulated, like the PAs, payment aggregators, which happen right now, right? So the government has understood the strategic importance of those players, and they have brought them under the ambit of regulation. So they're on an equal footing as far as providing service to the customer is now.
So I'll just add a few things. In my view, I think the regulations are pretty forward-looking in the fact that banking as a service needs to be evangelized if we genuinely need to get to digital and financial inclusion. Let me take BBPS as an example. It's a classic example of banking as a service, where it's a platform which is built by PCI. There are billers on one end, who just come on with one integration on the BPS platform, can make themselves available to all the digital, platforms in the country. APS is another example where, a customer could go to any BC agent of any bank, do a cash withdrawal or a cash deposit in a very seamless manner. So a lot of these things, the regulations are changing to ensure that banking as a service is actually embraced by one and all. So that's going to be my thought.
That's a very interesting take from Ganesh and Ajay. I think while I want you to add to it, Tyagi, I also want to sort of underline what Ajay mentioned about who handles customer complaints, grievances, because in the context of BAS, I run a credit cards as a service bank company. That's one of the biggest apprehensions for banks, right? We are not just about digital forward, we are also about handling a lot of gandagi. And as somebody who's running a leading fintech in your space, I would like to hear your views on how you're taking steps to address that part of the customer experience, and of course around the regulations and where we are seeing BAS going from there.
Okay, so let me rephrase my earlier statement, right? Let me do that first. And the first is, I am against the word ownership. Responsibility bank, I completely buy that. And I think we should have to have that in any case. None of the partnerships in a BAS can work together if there is no liabilities assigned to it to different parties which are involved, right? Now, if I bring in a customer and said, I have opened an account, now bank you manage it, that's also not going to happen, right? So we'll have to, as a fintech partners, needs to build rails and whistles and bells around it so the customer's experience is better, he feels safe, safeguarded, and his response is going across very well in time, right? That's where it comes across. Any partnerships which we have done, and we have done quite a few of them now, the partnership is not in the sense that it's just one account opening and it's gone, right? It's basically saying, can we build more onto it? It's a relationship game, either with the customer, with the banking partner, both the sides. Until the time both the parties don't think together about a customer and build a ring fence the whole system around from a safety point of view of a customer, I don't think none of the BAS partners are going to work, right? In RBI's mind, and regulator keeps coming across in our discussions on the panel and outside as well, the utmost thing which RBI says is ultimately the customer's money should be safe and sound, his grievances should be heard on time and resolved as much as possible wherever it is possible, right? Till the time those things are taken into consideration together with the fintech partner in the guidance of the bank, I think that's how it will going to work across. You can't take a one-man stand all and take all and this is mine and I'll manage everything. I don't think that's going to happen, right? We are a regulated country. None of the fintechs are going to survive if they don't get in line with the regulator or so. And this is nothing against, it's a practical thing. And I think we are in a cusp of a situation of fintech evolution or the digital journey of transactions, that RBI taking these decisions is very wise, because if you don't take those decisions now, 10 years down the line, we'll be in a very difficult spot. So I think I'm all game with whatever is happening here. Yeah.
That's just fantastic to hear. So now, one thing that just occurs to me, I don't know what all of you are feeling. Very interesting that while we've been talking for some time now, none of you have really mentioned things like monetization and revenue in terms of pushing the envelope or setting the bar for customer experience. I think we're all aligned that that's where BAS has a huge play. But let's get to the hard truths part, right? Especially because there are bankers on the table. What does BAS mean to you beyond the thing of, yes, there is customer experience and distribution? What you as a banking partner, I'm sure there are enough partners you're willing to or wanting to pitch to you. What are you looking for the BAS player to bring in the table for you, when you are tying up with partners? That's something we're very keen to hear. And Tyagi, from your point of view, what is it that you're bringing in as a BAS player, right? I mean, there is a give and take going on here, so it would be lovely to hear the views of the panel there.
Okay, so I'll start. Okay, yeah. So, from our perspective, I think Ajay and Tyagi both mentioned it. I think collaboration is going to be the key. I think what we definitely look for partners is, is there a cultural fitment between the organizations? Do all of us believe that we want to make a real difference to the customer, improve customer experience, or is it just lip service? I think those are some of the basic things which are definitely required. From a technical aspect, we look for partners who bring complementary skill sets because we don't believe that there is any single, player in the country or in the world who has actually done it all for everything for the customer, has solved all the problems for the customer. I think some of us have solved some problems, and hence, if all of us come together, I believe that we can make a significant difference to life of consumers. So we look at partners who bring complementary skill sets, either in terms of distribution or in terms of technology or in terms of products. As payments banks, we can't lend, but we're fine because we can work very closely with, and we do work closely with banks and offer a line of credit to customers. And that's true for every bank. No bank also can create their own insurance product. They necessarily need to work with insurance companies in the back end. So we do all of that, and we look for products or skill sets or capabilities which are complementary to us, and accordingly, the partnerships get made.
So that's a very interesting question, and maybe I'll take a step back here, and maybe I want to spend a little time here because I think it's very relevant for the ecosystem audience who's there, right? So, and I'll restrict myself to giving a Yes Bank perspective here because that's I think could be relevant as well. So we are a startup bank, right? So we're probably the only greenfield bank in the country which was set up right from scratch. And very early on, I think the bank realized that if you have to create a niche and if you have to survive against the other big banks, then we need to adopt technology as a differentiator. And that's what the bank has done since inception. When it said when it started. The other thing which the bank really focused on is the ethos or the philosophy of ART, A-R-T, alliances and relationship through technology. So which is again, in today's context, people call it BAS, but that is really, what 17 years back, when the bank started, that is the philosophy with which, the bank was kind of conceptualized. Today, current situation, Yes Bank manages 1 out of every 3 digital payment transactions in the country goes through the counters of Yes Bank. 1 out of 3. And I will let the magnitude of this sink in the audience. And, this is an outcome of nothing but BAS. So all of this volume, so today we have market leadership in IMPS, in UPI, NEFT, we are the largest processing bank by volumes. All of this is only because of partnerships that we've done with the fintech ecosystem. And these are the volumes which then goes through our counters that we manage. So it is a very, very relevant business model for the bank and also very profitable. So again, the customer gets a superior experience. The fintech obviously, gets more business, grows, gets their, valuation increase. And of course, the bank also generates a good revenue pool out of, managing these voluminous transaction, right? So to your point on monetization, there is a monetization model around, how we run BAS. So it becomes a win-win proposition, for everyone. So that's, really where the concept of BAS and what it means for the bank and the tangible outcome and the market positioning of the bank because of this model, really is.
So I agree to a greater extent. I think I'll answer Aishwarya's questions on what is banks looking on a fintechs and what is fintech looking for a bank in a smaller answer, and then probably get more detailing around that. So I think in each and every fintech which is there in the country or starting up, they are trying to find the niche in which they want to play across in the beginning. Similarly, banks have found their niche, and there are some core products which banks have and banking does. Uh, Fintech partnership or a BaaS partnership coming across to the bank is trying to find those niche areas where the bank needs support or can augment the need of the customers which fintech partner comes across, and making sure the entire experience becomes easy. We deal into business payments, and B2B payments is an area which we think is needs to be, which needs quite a bit of an overhaul, be it NEFT, RTGS, or normal payouts and things like that, or say vendors, suppliers, beneficiaries, whatever you want to talk about, commercial cards and the likes of it. I think that's the niche which we play in, and that niche makes sure that bank is owning the customer as far as or taking the responsibility of the customers to give a credit line or having a current account and the likes of it. But entire layer of an experience of a consumer or a business saying I can do multiple payouts at a click of a button is a convenience which we bring along to the bank, which banks customers also need and the customers outside also need. So that's where the whole relationship becomes much more convenient for both the parties involved. And ultimately, in the end, the consumer or the business wins because he's getting a better experience from both the sides. When he gets a better experience and banks gets a better experience for their own customers, obviously there is a little bit of a penny to be made on each and every business line, and that's where everybody is making money. So I think monetization is happening. I don't think it's that this is all happening without monetization and this is just in the air. I don't think that's the situation. Everybody is making money onto the process, and monetization is very much possible in BaaS ecosystem, and both the parties, banks and fintechs, are making money onto it.
Actually, the whole BaaS model, is fairly matured and evolved. Actually, the way I look at it, from my own experience as well, and very clearly, banks recognize that, they are not able to build everything. So it is always better, more agile, more flexible, more scalable, to build, this. And it's again, I think banks realize also that. You cannot only grow organically. You also need to create an inorganic acquisition funnel for the bank, which is more digital, which is more scalable, and that is where these partnerships play out, right? Fintechs also realize that they can actually build up better products and better service if they integrate with the bank, and they channelize their energies on creating only the user experience, for the customer in a scalable model. So I think people are now very matured enough, and whenever we do these discussions with partners, right? So it's very clearly, a win-win model. So nobody is trying to squeeze the last penny because people realize that if either of them don't make money, it's not going to be a very sustainable model. And this is not, end of the day, the customer is there at the end, right? So you cannot. It's not a switch-on, switch-off relationship. These are all long-term strategic relationships. So you need to make sure that either of the parties are integrated for the longer term. So it's important.
That's a very interesting point you make, Ajay, on long-term sustainability, because apparently the funding winter is around. If there are any investors around in the
All the more
audience,
reason.
you can be rest assured that if there is a bank scrutinizing and taking the deal, they have thought through the business model and viability of the partnership. I'm hoping that will give you all some peaceful nights. But coming back to what you said, Ajay, right? I mean, it was very interesting when you said BaaS is sort of matured or saturated. I think, as somebody who's an observer in the ecosystem and participant, if I look at payments, I'm totally with you. The way banks have unbundled payments, right from AEPS, IMPS, NEFT, the whole hog of it, UPI. I mean, payments is out there. I would even use the word saturated. When you look at lending, when you go to the liability part where neobanks and everybody are coming up, I know it wasn't in our agenda. I do see there is some time. So I would love to hear your thoughts on where are we in those aspects. Payments as a country, I think we're up there. I mean, we are a showcase to the globe with UPI, real-time payments, everything. But when it comes to lending, we did discuss about the regulatory tailwinds, right? Where lending models, because BaaS wasn't working, there were alternate models and that's sort of coming down. So I feel there is some journey, and of course liabilities. I would love to hear Ganesh's thoughts on where are you looking at BaaS in those aspects, right?
Yeah, sure. I'll go first. Actually, while of course payments has taken a lead in terms of BaaS as a platform, I still think that there is still a long way to go on payments itself. While, of course, from a digital standpoint, we've done our bit. We've got 250, 300 million customers there. But fact is, with more than 1 billion Indians, or close to 800 million adults in India, there are still 500 million Indians who are not on the digital platform, who are possibly still using cash as the mode in which they are doing transactions. So I do think that the platform is there. And a lot of good work has been done on building the platform, either by NPCI or by some of us in this room. The regulations are also very clear. I think now it's left to us to really forge those partnerships and make maximum use of it. So I think that's my view on payments. Lending, for us again, as Payments Bank, we anyway, as our DNA, working in collaboration with others is the most important. The regulation anyway doesn't allow us to lend. So we are, working very closely with, a couple of banks, with whom sort of, I think under the right regulatory framework, we are sort of reaching out and making sure that customers of Airtel Payments Bank get a line of credit or get a loan. So that's really what my thought is.
So when I said the BAS model is matured, I meant the approach is matured. By no stretch of imagination is it anywhere even near saturated. So, and including in payments, and I will not repeat, what Ganesh already said. So, see, one has to understand that traditional banks, though in a previous session I heard someone say, while we tend to call it traditional banks, but banks are not traditional right now by any standards. Banks are equally digitally savvy. But traditionally, the banks have actually looked at, the whole value chain, right, in providing banking products and services. Whereas BAS is more modular, right? And the players pick up certain friction areas or certain areas where there is more value to be made, and that's where they work on, right? So far we have seen BAS very relevant around payments, lending, investments, and some of those areas, right? But in my view, while those, of course, there is a lot to do even on those areas, but in some other areas like trade finance, supply chain, agri-tech, there is a lot more to do in those areas as well. And also what I would like to allude here is the government has come out with a lot more new initiatives, right? They launched, PM Modi launched the NLP, the National Logistics Policy, the ULIP, the Unified Logistic Platform got announced, ONDC got announced, OCAN has got announced. So, this actually creates a lot of opportunities for players to think, innovate, and create customer solutions around, some of these models, and then work along with, banks to eventually give benefit to the customer. And I'll maybe take this forum to give a shout out to all the fintech ecosystem players who are there. So at Yes Bank, for example, we have a API marketplace, right? We call it Yes Connect. It's like an Amazon where we bundle banking solutions and beyond banking solutions, bring it on a platform, and then offer access to Yes Bank customers, both retail as well as businesses, to choose what they want, right? So if they like a Yes Bank solution, they can subscribe to a Yes Bank solution. If they like a partner solution, they go subscribe to the partner solution. It gives access, to the partner to get access to Yes Bank customer. It also is a platform where I acquire new customers through my fintech associations, right? So anyone who's present here, or who knows of people or founders who need such access, my team is in the room. You please feel free to connect with them and work along with Yes Bank. We'll be very happy to support you.
That's very awesome. Tyagi, your take?
So when we talk about payments being matured, I think in our mind we always think of UPI and retail payments, right?
I agree.
So let's stay away from that for the time being. I think the payments in some sense or the other, when you buy from Amazon digitally, there is a lot of transactions which happen behind that. That corporate would have bought raw material from somebody, would have taken service from somebody else, he would have paid rentals, he would have paid his utility bills and 100 other things till the time he comes out with the product which you can buy through digital, which we talk about. And that back-end piece nobody talks about, right? That payment piece is still broken. And that's where we say that people like us, Encash comes across, and let's talk about that piece as well and make sure that we digitize the entire B2B system together and make sure that it's a success story, digitization from end to end. And payment API, BaaS is end to end from consumer till the end business, and not only on the one leg. And if in this whole ecosystem, if there is a lending line and things like that are required, I think that's where the bankers will have to come across and talk about. So it has to be entire ecosystem and not just payments like UPI and the front ending which is happening.
This is fantastic, and I'm sure Tyagi and team are solving for that as well. One part is we all heard from you is, what do you say, people who are propelling BaaS in your respective organizations. I mean, to sort of take a step outside, I would love to hear your views as participants in this ecosystem. What is your wish list? Each of you, not bound by the organization nor the products you're building, etc. What is your top 3 asks, or what do you want to see happening in BaaS? We touched upon OC and we are talking about ONDC. There is a lot of stuff happening. Account aggregator is something else that comes to my mind. What could this all culminate into? What would your wish list for BaaS look like, each of you, if you were to come up with 3? Tyagi, maybe we'll start with you.
So I can give a wish list which I want from the banks, right? That's how it would be.
This is a place, Tyagi. Go ahead.
And how can the banks help us to go to the regulator as well? That's another piece which is there. But having said that, I think it's not a wish list anymore because banks have opened up and started thinking about what is happening there. I think it was 5 years ago when we said banks don't understand what you're trying to do. That's not the scenario anymore. Banks understand it very well what you're trying to do. Banks understand the technology which you are bringing across and how is it going to help the banks together, right? So I think that openness has come across. The wish list which comes across is there are certain aspects of regulator, controls, and the ecosystem which is safeguarding everybody else. That's where I think banks needs to be a bit more forthcoming and partner with the fintechs and say, guys, we need to make it successful, but these are 3 more things which we need to talk about, right? Let's get that sorted out. What we have seen, thankfully, we have passed that milestone in some sense or the other. But we have seen quite a few new fintechs coming across, building the whole thing and then realizing it doesn't even fit into the whole ecosystem somewhere. Right? So I think that has to be very much there. Second, I think educating the customer or the general education overall is something which banks and regulator needs to take up. Right? And the third thing which comes across to my mind is don't think of BaaS as only as a customer acquisition strategy. It has to be a customer solution strategy in overall scheme of things, and that's where it should be moving across. That's about it.
Lovely. Ajay?
So I already, covered a lot of it, in my previous session. So I'll maybe just, summarize and culminate it by saying, it's a great opportunity. Banks are very hungry for BaaS. At least, the tech-savvy banks, and I would put, Yes Bank as, as being one of them, is very, very clear strategy that we will, and we've been doing this for almost 14, 15 years now. So it's not a 2-3 year prior story. We are very open to partnership. What we want is that the customer experience, should be very, very superior. And more that you are able to innovate, more that you are able to create customer value. Please come talk to us. There is a platform which we have created. I already spoke about it. Yes Connect. Please come, embed yourselves, provide solutions to customers, build up your business volumes, and help us generate more revenue and help us generate more customers.
So in my view, I think, for banking as a service to succeed, all the ingredients are there. I think we've got the right regulations, we've got the right technology, we've got everything in place. I think it's now a function of all of us in the ecosystem actually using these ingredients and actually generating and delivering value to the customer. So I would say that the ball is in our court to see how can we actually take banking as a service to the next level by using all of these ingredients and platforms to really, delight customers. That's what I would say.
This has been awesome. I hope there are fintech product builders out here listening to this. Banks are calling out to you saying, let's collaborate, let's create stuff. So I hope we all make the most of it. We're right on time. We can have a few questions. I don't know if Nadeem is around. Maybe 1 or 2 questions, Nadeem, and we can be done. But I think it's been a great panel. Thanks a lot for making it. So it was very practical, at least, from this thing. We know what to do next. So right away to all the bankers in the panel. And of course, Tyagi is here to guide you to build with banks. Thanks, everyone.
Thank you. It has been a pleasure. Thank you.
Thank you.
Kind conversation where the banker, Mr. Ajay Rajanji, actually gave an open proposition to the fintech product creators to come work with him. So I think this panel discussion has been a milestone and a repertoire of ceaseless opportunities. Thank you so much, Ishwarya, for facilitating and maneuvering this panel discussion so well, so practical, such matter-of-fact insights that emanated from this conversation. Ladies and gentlemen, at this point, I'd like to acknowledge our partners who played a pivotal role in making sure this event sees the light of the day, beginning with our theme partner, WhatsApp, our co-powered by partner, Amazon Pay, our spend management partner, Encash, our in association with partner, Perfios, our payments partner, Cash Free Payments, our CEO dinner partner, HSBC, our communication partner, Calidra, our banking partner, Standard Chartered Bank, our diamond partner, PayU, AWS, Kia.ai by Infrasoft, Paytm, and our networking partner, Buddy Loan. All right, ladies and gentlemen, as we've been telling since morning that the Global FinTech Fest is aiming to showcase and poise India, which is going to take the G20 leadership in the coming year, to showcase the prowess and capability of India as a leading fintech disruptor, which is ready to handle the requirements of 1.4 billion unbacked adults all over the globe, and also the banking needs of 1.6 billion people all over the universe and the world. So with this context in mind, the next conversation and panel discussion that we'll be bringing forth is on the topic of frictionless customer journey versus fraud detection. Is it possible to have both? As we are aware, delivering a frictionless customer experience is a top priority amongst businesses today. To adhere to anti-money laundering policies, organizations implement identity and fraud detection systems. However, adhering to this need poses the possibility of interrupting the flow of real customer on day-to-day business or banking activities, commonly known as creating a false positive. Proceeding ahead, we have a panel discussion on an important and compelling and most importantly a relevant topic in the realm of frictionless customer journeys versus fraud detection. Is it possible to have both? And as we promised, we have industry practitioners, thought leaders, influencers who've been dealing with this day in and day out. So please fasten your seatbelts as they're going to share some really perspicacious insights with all of you. Beginning with our moderator, Mr. Abhijit Gaur, General Manager Bureau, and joining him on stage are the following speakers, beginning with Mr. Prajesh Bhardwaj, Product and Growth, FamPay. We have with us Khilan Haria, Senior Vice President, Head of Payments Product, Razorpay. Mr. Saurabh Sharma, Co-founder, NeoEyed. Mr. Varun Bhalla, Country Manager, Pro Venir. So on this note, I hand over the stage to you, Abhijit. Over to you.
Yeah. Am I audible?
This is fun.
Definitely. Folks, I think, yeah, some of you guys are putting your headphones on, so I'll wait for that. Yeah.
Hi, can you hear me?
You're audible, Kilan, yes. Yeah. Varun, you're not audible.
Can you hear me?
I can hear you, sort of, yes. Yeah. Yeah, I think that mic is not working. This should be a product for solving this mic check, for sure. Or really, it feels like Zoom, you know.
We are in a metaverse, man.
Oh, yeah, the NPCI booth. I think all of you guys went there, right? I'm sure you guys had fun. Yeah. Awesome. Cool. Let me just kick it off this session, and I think this is one of those topics that we a lot of you would have read a lot about, okay, this is how the customer should be in terms of the way they should pass by the product, kind of friction they feel. And I think almost everyone who has worked on the digital onboarding journey or digital journey of any kind of application that's out to the consumer, drop-offs are a big issue. Customers, they abandon the product flow in the middle of the funnel. And, it's part and parcel of the way that you build the product. While at the same time, fraud is something that has emerged very recently in our ecosystem. It's been around for a lot of years, but we have started now talking about it. And when you talk about the journey and the ease of the customer experience, there are two words that come to you. That is faster and simpler. But another word that's now into picture is secure. Like how secure is the journey, how safe is the customer feeling, and how safe is your business while the customers are interacting with you. So kicking off this discussion with this thought, like what exactly how do we strike a balance between having a smooth customer journey while at the same time tackling fraud? I would like to point my first question to my colleague Brijesh here. Now, Brijesh, you have extensively been working at FamPay, and you've worked in Dunzo, and with your experience working in these startups, like, is there a specific pattern, is there a specific insight that you can share with us that helps somebody understand this problem better? Like, and how difficult this problem is, and what a thin line that exists between like the kind of good customers and bad customers?
Sure. One of the most interesting insights that I've gotten over the course of working at both Dunzo and FamPay is that hilariously, both your bad actors, people who are trying to defraud your system, and the people who are your best customers, your power users, kind of behave the same way at a very high level. If you don't look deeply enough, they kind of look the same in their engagement patterns, which is very hilarious to us. But there's a very core meta difference between both of them that we use to sort of detect who is who. And for us, it comes down to, okay, the fraudster or the bad actor has a very different goal. They're trying to get in and get out as quickly as possible. They're trying to defraud your system in the most efficient way possible. Whereas your best customers are curious, they're excited, they're exploring your app. And this is like the framework on which we try to identify what behaviors are pointing more towards efficiency and getting out of the system quickly, and what behaviors are sort of pointing towards curiosity and exploration. And that's how we sort of differentiate the two, sort of like bad actor versus like your good users. At FamPay, of course, there is one more trait that we sort of use. One is that they are kids. Our best users are kids, and kids have very different goals and very different behaviors from fraudsters, because most of the fraudsters are not kids, they're adults. So these are the frameworks on top of which we sort of try to come up with like ways to identify who's who.
Oh, that's interesting. That's actually, this reminds me that serial that we saw on Netflix of Jamtara, right? Having that pattern, and I mean, a lot of them are like teenagers that are growing up, but that's very interesting insight, Brijesh. And which makes me move to the next question to Khilan, right? And Khilan, I mean, Razorpay has, the recently launched Magic Checkout product, and it's out there in the market. You guys are going very extensively towards e-commerce system and, the kind of frauds people see while purchasing products online. So would want to understand from you, like there are two concepts, right? One is kind of like a bad friction, which leads to drop-offs. People are, dropping out of the funnel. But then there's a good kind of friction that kind of establishes a little more trust in the minds of the user. So how do you perceive this problem, like while working on these problems?
Oh, very interesting question. I mean, in the world of payments, one of the things we realized early on is that India still continues to be a cash-heavy economy, and cash continues to be a competition, but we still got to embrace it. So we started really helping businesses accept cash in a manner that it is, ROI viable. And when we used to speak to businesses, and when I was, a merchant on the other side, 5 years back, on any cash order, we would see a lot of propensity to fraud. Inventory would get blocked. Essentially, you lose a lot of revenue. So I think this is one of the things we've been now kind of trying to solve for 4 years. Part of our Magic offering as well bundled in is how do we enable businesses to accept cash in a manner where, generally the frauds are as low as possible, where you don't end up getting your inventory blocked. Now, as Abhijit spoke about, I think when we started thinking on the problem, it was very counterintuitive because we wanted to make the journey very frictionless, where user experience suggests that once a customer wants to purchase something on cash or COD or, pay during, transaction, go through it. But we actually introduce more friction. And that, was a fine balance between how do we minimize, frauds as well as optimize for conversion. Very surprising learnings that actually did not hamper conversions if we prune out the bad customers in a right manner.
Wow.
And at the same time, it kind of helps in reducing fraud. So I think most customers in India actually today embrace some sort of safety signal and symptom. Where, one of the things I used to wonder is, 5 years back, Uber never used to ask me a pin when I used to, get my ride done or start my ride. Ola used to ask me, I used to wonder why, right? Because there are ways to triangulate this better. But customers in India, when you do research, actually feel very safe and feel the power in their hands when they could actually dictate things, right? So I think that added friction sometimes actually helps a lot in expanding your total addressable market and potentially not in, reducing conversion, many a times increasing conversion. So I think we've learned this very surprisingly for COD, where a lot of signals we triangulate to prune out the bad customers. But at the same time, surprisingly, the conversion keeps going up because customers now feel more safe and secure.
Oh, brilliant, actually. So that means that there is a good friction and there is a bad friction, and there are clearly demarcations for that, and we see that coming out with e-commerce specifically, right? That as you see users transacting. So, question to Saurabh here, and Saurabh, I know you extensively have worked with banks and larger fintechs as well, very closely on the problem of detecting fraud that's happening at scale. In these endeavors, like specifically when you're trying to create a consumer-centric flow, what kind of role do you think new age techs like behavioral biometrics or ability to know like what's like the behavior pattern of a user, like as Brijesh mentioned that there are specific behavior patterns you can detect. Have you seen that kind of as a differentiator, as a way to solve the problem?
So we come from a very interesting country, okay? So the first point which Brijesh was also mentioning that most of his customers are young customers and all. But even if you go to villages and all, so 99% of the people in villages, their password even today is 0000 or 1111. And most of the people who used to use ATMs, they could not access ATM at some point of time because their ATM password was written on the wall there. And then when the wall got repainted, these people are not able to use the ATM. So that's the reality of where we come from. Then comes the physical, that was the physical world, then comes the digital world. So when the digital world, like of course we have all been talking, the frauds are increasing day in and day out. And one very interesting concept or very interesting way what we looked at was, it's called authorized payment frauds. So what happens in authorized payment fraud, it's not the fraudster who's doing the fraud. It's I am doing the fraud and I am enabling the fraudster to get the fraud done from me. So meaning, so when I'm like, for example, then that's where the technology like behavioral biometrics comes in. So what we look into multiple factors now. So we look into the cadence of typing. Like for example, typically your typing pattern is something A, B, C, D. So now your typing cadence has completely changed. It's not A, B, C, D anymore. So there's a lot of space in it. There's a lot of hesitancy in it. The pressure pattern changes. The way in which you're holding the phone, it changes. So that's one very critical pattern we look into. At the same time, for example, if you look into the way, like for example, there's a transaction happening, and the time of OTP, there's a call coming behind the scenes, and the call is repeating multiple times. So this is a very, very classic case of a phishing attack kind of which is happening. And these are the kind of signals we look into, and we kind of immediately tell the bank or immediately tell the fintech provider that there's a potential phishing or the potential fraud happening here, because the cadence of the customer authorizing this transaction has completely changed from his past behavior.
I just like to want to add something to what he said. Just an example of behavioral patterns, right? So one of the things that we see in our best customers is that kids really love to customize their UPI ID. They really try to get the name that they want, like the character that they want, right? We don't see that in fraudsters. Fraudsters just want to like get rid of that, like get away from that step as quickly as humanly possible. But kids spend an inordinate amount of time trying to find like the right VPA that matches their persona, right? So and that's one pattern that is very like specific to us, but I'm sure there are more like such examples.
I just hope no fraudster is watching this panel discussion. So luckily it's a silent one, so yeah. Yeah, but thanks for the insight, Saurabh and Brijesh, right? And again, and just to add on to us as well, while working at with Bureau, we have seen several industries incorporate device fingerprinting solutions, and a lot of these areas where you try to identify like how many users are tied to how many devices, and those kind of fraud patterns emerge, and we try to triangulate fraud there. So my next question again to Varun, who has extensively worked in this industry, being like decision analytics with Experian. Varun, the underlying question with any kind of fraud prediction machinery is the false positive, right? And any which way the question comes down to how much advantage your system is bringing to the table and how much loss we are incurring while we are trying to, get this problem out of the root. And then adding on to what, again, Kilan also mentioned in terms of good friction and bad friction, right? So how do we know that the false positive rate that we have is actually helping the solution or not? Like just from a product perspective, want to pick your brains on that?
Very interesting point there, Abhijit. So when you think of false positives, you first start thinking about different kind of customer journeys, okay, and how that customer is coming into my environment. A lot of the times when people are implementing their fraud management solutions, the first day that they implement, you will see that the false positives is a huge number out there, which is blocking a lot of the customers, and there's a lot of friction. The way people need to start managing, and a lot of people do that in our experience, both with Experian and now with Provina people, they start looking at the rules that they have put in the fraud management space, reevaluate which of the rules are getting triggered at what point, and try and pinpoint specific ones. And there's a lot of analytics which goes behind it in terms of identifying those specific features which might be, while showcasing something which Bharadwaj was talking about from power user perspective, right? So which are kind of mirroring the same kind of things that other fraudsters are trying to do. So both of those characteristics are similar, and that's the kind of analysis which goes behind it. A lot of our when we used to work with lenders, a lot of the customers would implement fraud management checks, specifically looking at application behavior. In that application behavior, the kind of things that they would try and identify is, how do I segment my good and bad customers early on and give them a seamless experience while blocking from a review perspective the other set. And a lot of this exercise depended on the kind of rules that they were putting in, the kind of weightages that they were putting on each of those rules, on the specific parameters over there, and that makes for a big difference if you really want to have a successful approach towards reducing the false positives.
Interesting, Baran. So now, so with this iteration, what I understand is that okay, there is a very there's a core similarity between a bad actor and a good actor. Then there is a good kind of friction and there's a bad kind of friction. There are instances where you see some behavioral pattern emerging, and then there are ways to understand like how false positives are actually estimated and how would you build a framework in your head. So doubling down on this framework, because a lot of people in this audience, they are product builders and they have been building for the consumers. They have been trying to build it for the businesses as well. So from a consumer perspective, Brajesh, my question to you is that, is there a framework or is there a philosophy or a first principle for that matter that you follow in your head while you're thinking of fraud as a problem for FamPay, right? And just want to understand how you guys approaching the problem.
I mean, I think really a lot of data tools come in handy when you're trying to sort of hypothesize what I'm doing leading to a good result or a bad result. One thing that we've used Experian before, we've used a bunch of other tools like Bureau also before. What really helps is having a profile of the user until the event happens, right? Like for example, we start tracking right from install. Where did you come from? A lot of our fraudsters don't come from referrals because one fraudster is not referring another fraudster, right? So they don't come from there. They come from organic sources. Even things like what time of the day did you join the app? Kids go to school, right? So a lot of our activations actually happen during the evening. And if you signed up in the middle of the workday, that's a negative score in terms of risk profile. So we have a bunch of these things that we sort of track up till the point of transaction. And when the transaction actually happens, we also look at what is the context of the transaction, right? So what kind of categories are typically known to have fraud? Like, so payout, right? So if you are taking money out of the system, that's a more suspicious sort of transaction compared to, let's say, you're trying to recharge your phone. Then also the most important and interesting thing that we sort of notice is what happens after the transaction, which is something that people don't sort of look at usually, but we sort of track that as to say, okay, a normal user would make the transaction, they get some FAM coins as rewards in FamPay, and they then try to explore the app and see what to do. Whereas a fraudster would just leave. Like as soon as the transaction is over, the fraudster just leaves. So we try to sort of look at all of these parameters, and at any given point in time, every action in the app is sort of either giving you a +1 or a -1. So if something that you're doing is something that we've known to be good, you get a +1. If you're doing something that is known to be shady, then you get a -1. So at any given point in time, every user has a plus or a minus or an overall score. What every experiment is trying to do is reduce the net negative score of the system. So if you're trying to introduce a feature into the system, did that at an overall MTU level, did it reduce my system's negative score or not, is what I'm trying to track. The other interesting thing that I mentioned before is that, bad actors kind of look like good actors, and unless you're tracking the right sort of things. What we also try to look at is, yes, some features that you are going to build to control fraud will affect your best users. But what we've noticed is that it affects engagement. Like, for example, it affects the transaction volume. What it does not affect is retention. A good user will never leave your platform because you put a restriction on, hey, look, you've done like 5 transactions today. Suddenly in the next, whatever, in 10 minutes, it looks kind of weird. As long as you're communicating clearly to them as to what you're trying to do and how you're trying to protect them, they don't leave, right? But that immediately deters fraudsters and makes your platform less interesting to them. If I start adding these like friction points, they're also quite a close-knit community from what I've seen. We are part of WhatsApp groups and Telegram groups with fraudsters, so we know how close-knit that community is. So when you start adding these friction points, you start seeing that, hey, we are becoming less and less interesting to them. And that's another way we sort of measure if like we're doing is doing the right thing or not.
Wow. And again, YouTube becomes your go-to. If there's a fraud, you'll know how to work that up for sure. Awesome. And again, so routing the same question to you, Khilan, but from a B2B2C spin, because as a fact, Razorpay now supports 10 lakh plus SMEs and businesses all over India, right? And this is something that I want to know your perspective from, because with the scale that Razorpay has, ensuring that a business that is getting onboarded on Razorpay as a platform has to be sane as well. But at the same time, the business, how they're treating their customer has to be right as well. So you are actually having 2 layers of the same problem on your end. So I want to know your perspective, how you're thinking about it.
No, I mean, I think the first job is to ensure that businesses who come on the platform are vetted, right? Because we are a regulated entity and we have to go through compliance and as well. So I think that, of course, builds in a lot of safeguard, right? Having said that, a lot of fraudsters get into stuff which looks like a genuine user, right? Which has all the genuine accounts where account names everything match, etc. Right? Sometimes they defraud end consumers, sometimes they do social proofing, all of that to still for people like us signify as genuine users. And I think that is where other signals similar to some of the examples Brijesh, Saurabh were sharing kind of come into play around the behavior of some of these folks. Where the origination is happening, is it looking like an anomaly versus a norm? The speed at which form is being filled, right? A lot of that is very unique and different when we see someone with a malicious intent. So I think the core aspect is to figure malicious intent, and then basis that we figure the level of access that we give to merchants and businesses. In many a cases, we block it; it goes into manual review. So essentially, our purview is to figure basis the data you've given to us. While all of the data is validated from what regulator also has on your PAN, Aadhaar, and multiple sources. Even after that, if there is a dispute that happens, we are financially liable. There's a brand reputation risk as well. So I think how do we, build in all the checks and balances, and also at the same time on the consumer side, enable this for businesses. Thankfully, India is a 2FA market. I think regulators saw this in 2009, and I remember when I was running a business, we thought this is going to tank our conversion big time. First startup I was a part of, but yeah, I think the foresight was there that the number of users who participating in the digital economy will really grow. So that's why you got digitization from 0.9% 2009 to now close to 10%. So only going to keep increasing. So I think 2FA really helps big time, which is a safeguard, and now most transactions are under that purview, and now slowly we are seeing solutions being built out to bypass 2FA, but in a very secure fashion. Where networks, participants in the ecosystem, us, issuers, everyone's trying to come together to find different ways to build it, and you will see more and more innovation where tap and pay is a great example, right? I mean, you're carrying your cards, you just tap a Wi-Fi card and go away, right? More and more of that will start happening online as well, where it is safe and secure. And slowly you will start seeing restrictions going away. But I think building that safety was very important. Cross borders are a different game though. And I think that's where 2FA is not there in many cases, right? And I remember a decade back when I was running an e-com platform for Yahoo, it used to be a cost of business. I mean, you got to assume that you get X percentage of disputes and fraud per sale. and it's baked into your business. So I think it's very similar for cross-border, that there is only so much folks can do, because now you're going to be varying between success rate and declines if you're doing international. Uh, I think for folks like us who've been in this now for 3-4 years doing cross-border, we really evolved and learned to find the right balance, and to tilt towards declining or reducing frauds as much as possible, because businesses in India, if they are in the export business, they don't really understand disputes. So the mindset is different from a US business, and I was at Yahoo where the business knows its cost of business. Here it's like, a 2-3% lower SR is acceptable compared to a higher dispute and a higher fraud per sale. So I think the mindset is unique. And I think as we potentially look at other geographies, this will flip back to, what we've seen, where people would want a different balance between frauds and conversions. So yeah, I think it's a fine line, especially in cross-border transactions. Indian transactions are fairly simple that way, and thanks to a regulator's foresight.
That's very insightful, Kilan. I mean, and definitely we talk about this divide between the growth persona in a company and a persona that is out there to save money or prevent frauds from happening, right? And again, to you, Saurabh, like I mean, you have worked extensively and built your system from ground up, that is risk detection system in the first place. And you definitely have to convince the person who is purchasing that product, that is the risk manager or risk operator. But if you talk about solving the fraud layer at onboarding layer itself, you have to also convince the growth manager. So like from what I get from Khilan and Brajesh, there's a 10,000 feet view that, okay, it has a problem, it has to be there. But from what I want to know from you is that at a user persona level, right? Like how do you go about convincing either parties? Like, oh, this is good and this will help. At the same time, this will not compromise your growth or this will not stagnate your growth. So
I mean, that's a very, I mean, the discussion can go on for hours and hours. But anyway, let me start with two examples. So like I was talking to one mid-sized bank, and they were doing most of their onboarding, which was happening manually, or so I would say semi-automated way or whatever. So what they told me was, with all the automation they have built in, or whatever manual process they do with hundreds of people sitting there, they even today they detect 20% of onboardings which are happening on a new customers which are coming in. 20% of the onboardings are still fraud. So this is one example which I'm just telling from a pure consumer perspective. They're high growth, and 20% is probably the 80% is still there. There's a lot of money. So 20% fraud is happening. So that's from the B2C side. So let me tell you another other actual example which happened from B2B side. So when B2B onboarding is happening, so although there is a lot of KYC which is happening, there's a lot of things which are happening, but when the actual person, the transactions also started happening, but when the actual person went to the spot to see whether the shop was available, they were like surprised to see there was no shop available. Okay, so that means, so we are truly in a metaverse here. Okay, so we're sitting there where there's no actual shop. Hello, can you hear me?
yeah, we can. Yeah.
So these are two classic examples again by which I really feel that there's some amount of although there's a lot of automation that needs to happen, but there's a lot of monitoring also that needs to happen behind the scenes. So coming to a question, let me put it into two ways. Let's say we are onboarding a customer. Let's take an example of lending, because that's what everybody, most of the people, I mean that's the flavor of the season. So from a lending perspective, let's say somebody is doing a small ticket loan versus a large ticket loan. Okay. So if it's a small ticket loan, again, a product manager can come and say that, okay, let's try to make it as frictionless as possible, because it's anyway a small ticket loan. We already have let's say a credit score coming from behind the scenes and all that. So now in this case, what might actually happen is, because there is friction is as low as possible, it might happen that from a marketing standpoint or from a sales standpoint, you're meeting your quota, meaning you're getting as many onboardings happening as possible. But when the thing starts hitting the fan, when the collections start happening, so there may be a case wherein a lot of people stop paying that because there was no friction there. Okay. So now let's flip it other way around and see what happens in a large transaction. So there the KYC is so much, the onboarding is still happening, the KYC is happening, everything is happening. But are the frauds going down? No, still there are frauds happening there also. So in both the cases, what we clearly believe, and that was your question, like how we convince the buyer rather, is you are doing everything that's there today. So there is a set of data, or the alternate set of data, or the behavioral set of data, which is sitting there, which is so unique and so pure that when you start putting those unique parameters, like your typing pattern, okay, like your mouse movement pattern, the way the device you are coming from, the location you are coming from, Or so all these patterns, when you look into them in an individual manner, probably they don't make any sense to you. But when you start putting them together and when start putting it behind like onto a strong AI and start coming out with the scores around it, then the kind of data which comes up is very unique, and the kind of scores that you can come and come, kind of prediction you can do to the end, to your risk, let's say risk manager, is pretty high. So there he can take a call. Yes, there is a probability that this particular customer is a fraudster, or because we understand human behavior so well, what we can also say is, boss, the guy who is actually onboarding the form is not even a human. It's a bot, which is actually creating the form for you. So why should that even those kind of accounts get into the ecosystem?
Absolutely. Like, thanks for the insight, Saurabh, because like talking to a lot of people, again, outside of the conference as well, like we saw that problem, right? You know, onboarding taking time, onboarding completed, lead generated, but then the user turns out to be a bot, you know, and that's kind of like, you know, it kind of like a reverse effect where you are spending a lot of marketing dollars and getting the customers, and then you figure out that they are actually bots in the first place. So it's a bummer for sure. So and speaking about cost specifically, and any kind of analysis that we've been talking about, that you should understand your user, you should see the data, and you should be able to visualize it. Now that's a sizable investment, right? You have to set up the right data layers, you have to set up data infrastructure layer, you have to set up the right precedents, get the right people in. I mean, there's a very significant chunk of time and money that you have to put in, right? So Varun, want to understand your perspective this way, like a lot of companies, they do keep a budget for it, or if they don't have it, then they try to find external solution. While they're keeping a budget for it, they might get it right, they might get it wrong, right? Like, I just want to understand from you, in your experience, what are the areas where companies generally make a mistake? What companies should not do or should do in this case?
So Abhijit, very interesting point, and Saurabh actually touched upon this piece when he was talking about the kind of models and pieces that go in. Now, whenever organizations are, say, moving in this direction, now first, normally it happens is that there is someone in the organization who's more of a proponent. And there's the rest of the organization which is a hesitation, which is very used to doing their BAU, the kind of things that they were doing through which they were onboarding B2B and B2C customers, which Saurabh just referred to, right? So they all are onboarding all of those customers, and they're very happy with the BAU process. The first piece that most of the time when we have seen a successful implementation has been where organizations have actually come on board the idea of utilizing data and analytics and technology to solve for these pieces, and then go ahead and build a comprehensive or cohesive architecture and strategy around this piece. So it's a lot more around people and culture from an organization point to be able to address or make a successful implementation from a starting point. And that's probably the baseline from where as a best practice that we've seen. And wherever that is there, that increases your possibility or probability of getting a right kind of implementation and the useful output out of that implementation a lot higher compared to anything else. The second piece then starts coming in from building up an architecture. A lot of people actually, we see this with a number of clients depending on the maturity curve that they are on. There are solutions which are built in a patchwork manner, where each time that there was something, it came up either as a compliance requirement or either as a journey requirement and became a patch that was trying to solve. On the other side, when an organization looks at it holistically and tries to address and see how a fraud prevention exercise aligns with my customer experience, at the same time aligns with my customer acquisition strategy, and then put a architecture and strategy in place, makes for a very different journey. So while the patchwork looks easy, it looks quick, it looks a lot of time even faster, what it normally leads to on a long-term cycle is a broken system, and a lot of times poor customer experience, sometimes even increase in false positives, inability to manage the experience of that customer in terms of engaging with that side. The third piece obviously is a lot more around investing, or there's always this debate about build versus buy, right?
Coming to that,
but it is also about evaluating a lot of the stuff that is out there in the market. There's a reason why there are organizations which possibly spend years and years and years and millions of dollars in terms of R&D. And while, as I said, you can go ahead and build a lot of patchwork piece which will solve an immediate problem maybe at a startup. But if you are trying to build an organization which is there to scale and which is there to grow, there's a level of market intelligence and knowledge that we have seen successful organizations pick up very well. And those would be the three pieces that I would put across as best practice.
I have an interesting story. So it's usually portrayed as, it's growth versus risk, right? Like these two people are shown to be always conflicting with each other. But if you've done growth for long enough, you sort of realize that the risk person is your best friend. At Dunzo, I remember having this conversation, and when we concluded that, look, I think the risk budget should just come from the growth budget, because if I don't solve this, all of the rewards that I'm giving and all the things that I'm trying to do to like improve conversion is just going to be eaten away by fraudsters. And tactically, I think the best thing that you can do as a company is make the growth person the same as the risk person. So that's like the quickest way to solve this debate.
Yeah, and also a therapist, For reals, for reals. I think, in the interest of time, I'll bring this discussion to conclusion and open the floor for any questions to all the panelists. We started off by discussing, okay, how a good user differs from a bad user. Is it a good friction or a bad friction? We delved into, different aspects of how, companies visualize fraud, tackle fraud, different new techniques and new technologies that are coming in. We also delved into the user personas that surround a company, which make this decision, like how different companies, B2B and B2C, perceive these problems in their own. And we finally concluded again with Varun's example on how to basically, what kind of framework and mindset somebody has to have when you're making a build versus buy decision on this. So I would, open the questions for anyone in the audience, if you'd had for our esteemed panelists. I see a hand there. Can we just get the mic there? Yeah. Sorry, we can't hear you.
No.
How about now?
Yeah.
Yep, perfect.
Hi guys, what's up? My name is Sachin Ramchandani. In fact, my question was for Saurabh. Saurabh, you were talking about behavioral biometrics, right? And I think that's very interesting because, I'm building a platform and I think that would definitely be a solution we were looking for. And it actually addresses a huge problem for us. So I want to know that, I'll definitely come see you once this is over to ask you how your product can apply to us. But besides that, I want to ask in the behavioral biometric space, or even apart from that, what other innovations do you see, coming up in that side?
So I was first asking Abhijit, like he was asking me with the buyer needs to have money, okay? I'm coming and talking to you for that.
110%, I'm here with you, my friend.
Sorry for that. But let me just come to that. Like we have been watching movies and all. So most of us have been growing up on Mission Impossible. Most of us have been growing up on X-Men, for example, Professor. Okay,
Right.
and most of these things are no more X-Men and no more MI. Like for example, the gate pattern, the walking pattern, which was there in MI2, MI2, MI3, whichever.
Yeah, where
So
the body was like being mapped, right?
exactly. So at that point of time, it was camera technology which was used, and there were multiple cameras, the 7 or 8 cameras lying around, and those cameras were monitoring you. But now come to behavioral biometrics. So if your mobile is sitting in your pocket, and if you are monitoring your gate pattern, let's say, then your
Correct.
gate pattern becomes actually your identity.
Oh, wow,
and
that's
that,
unbelievable, huh?
absolutely. So that gate pattern can be used to, let's say, give you a priority into your apartment, let's say. Okay, that was one of the case that we were trying to talk to. And even one classic example where you can prevent frauds, because it's a fraud session, is the gate pattern can be used, and your laptop can open only when your gate pattern or you are very near to your laptop. Until then, the laptop will not even open. So that was something which we did and which we also showed to a lot of people out there. So this is one example. And then there are a lot of things, like for example, I've heard US military working on heartbeat pattern, and they can detect a person's heartbeat from as far as a kilometer or 5 kilometers away. So I don't know the right range, but it's definitely in kilometers. So from a kilometer range, they can detect a person's heartbeat, and they can detect that this is this particular person. Okay, so this is something a work in progress.
That's really cool.
And then coming to Professor X, past thoughts or your thoughts which are in your mind are no more. So there are a lot of universities working on your past thoughts. So your past thoughts actually become your credentials. So I have a lot of work into it. So I don't know when we'll start building some of them, but gate pattern is something we are definitely start working on.
That's super impressive. We should definitely connect after this.
Sure, Sachin.
Suddenly want to remove my Apple Watch.
Yeah, totes. This
I
sounds
think
like
we
a
all
plot
need
of
to
MI
remove all
movie
our
first.
devices, guys.
But that's protecting you, okay?
Thank you. Hi, I'm coming from True Balance, which is also a lending platform actually, and my name is Deepak. And so, what I wanted to ask you, I mean, the panelists like Saurav, Abhijit, and even Bro. Okay, anyway. So the main trigger is we discussed about the onboarding of a fraud, still how people are getting into the fraud sectors and how they are getting what do you call encashing their lending products, and or in for example FamPay is giving them the initial funding and they get into the system. But there are certain users who also get into the fraud system, like detecting DPD 90, DPD 150 also. I mean DPD in the sense I'm talking about, who did not repay their loans actually, okay, for certain amount of days, certain amount of premiums actually. Even those guys are also categorized into the same funnel, because that's where we go to the brewer and we say to people that these guys are fraud detected users, so please don't give any other further. So what is that something which we can make those people to repay, or do you have any good solutions or recommendations for that?
I can take that. Yeah. So I'm sorry, I didn't get your name.
I'm Deepak
Hey,
actually.
Deepak. Deepak, so it's a point in question, right? And I think lending as an industry has always had this challenge, right? Where you have to understand the intent of the user to pay and ability of the user to pay, right? And estimation of both of them require like a very unique approach, because you're not just looking at a bad actor signal, you're also looking at a good actor signal, right? And alternate data has been like, one of the areas where people are, moving towards beyond the standard credit report, because again, believe it or not, but credit report only has an amount of coverage that is again not applicable to the lot of unbanked people and people who don't have already existing credit lines before their name. So with advent of alternate data, including your phone, your digital identity, your digital footprint, your social signals, right? These additional data factors, like, if put in context, they add a lot of additional value that you can derive, right? Now, that's like the problem, again, you're trying to determine the trustworthiness of the user, which, again, a lot of companies are working on. We at Bureau also are in the space where we help you aggregate all the solution as part of the journey. What we also realize is that having a strong fraud machinery while the user is getting onboarded as part of your system, that also helps you tackle like the fraud from the very beginning itself. So knowing that the user is coming from a dedicated device, whether this device has been found in the previous system or not, knowing what are the behavioral patterns of the user associated with the device and the phone number, what the name of the user associated with the device and the name and the phone number itself. So all these 3-4 things together help you build that kind of a model or a muscle on your end that you can start building out. But having said that, generally a lot of fraud specifically happens in clusters where you find like, okay, there's a set of people who are trying to exploit your application, and those are the kind of spikes that you see in your data which you can go tackle. So maybe after this conference we can have a deeper discussion on it and substantiate that.
Small thing. So before you start, so please, because that is the difference between a traditional bank and a digital bank. Actually, that is the main trigger. Actually, but traditional bank is very successfully utilizing that service, and in person they are making that successful. What I wanted to tell.
Yeah.
So yes, sir.
So, Deepak, I'll just add to some things Abhijit mentioned. You will normally define that, so at 150 DPD, not everyone is a fraud. There are two kinds of people out there. One set are people who are intentionally fraud and not going to pay, or never intended to pay when they took the loan. The other set is a set of people who defaulted because maybe their repayment ability went away, or maybe their income source went away. And those are two different problems that you're trying to address, and those are two different bucketing things that you have to look for when you're even bucketing your customers. So not everyone sitting in a 150 DPD would be classified into any of these into only a fraud bucket, but they would be classified into two of those buckets, essentially saying which some of those might be intentionally fraud and some of those might be inability to pay, essentially repay, right? And that is where the second set of the information which Abhijit referred to, in terms of understanding what is available from an alternate data perspective, or from an additional data perspective regarding probably around his income, probably around his expenses, or probably building a lot more behavior attributes around that customer, becomes a lot more important to see where are they doing or where are they sitting on a scale of ability to repay back the loan that I'm going to give them.
Hi, my question is for FamPay and RazorPay. When you're looking at third-party tools to integrate and figure out like fraudsters, what are some of the top tools that you have experienced and found to be good?
Is this the time where I plug you? Is this it?
Yeah, totally not stitched.
No, I think one of the biggest things that we look for is that there are network effects at play when you're trying to detect fraud, right? So somebody with the most, who has seen the most amount of transactional data is a great sort of, that's a great sort of way to sort of look at who should you pick. Because if they've seen the most number of like transactions, most number of users, they're more likely to have more patterns about what is fraud, and they're also more likely to have patterns about who is a fraudulent sort of user. I've always, again, I didn't come prepared to make this callback, but I've always wondered why they call themselves bureau, and it sort of hit me while I was thinking about this talk, that you look at the credit bureau and you sort of look at them for like giving you information about, hey, is this a credit-worthy user or not? But now you have multiple sources of information that you can use to now, even before you sort of, like decide to do anything, should I even let this user in? You have so much information about the user that you can sort of look for and then decide, should I even let this person in? So I think one of the key sort of things we look for in partners is that what is your scale? Like, and it's a chicken and egg problem for them, because buyers are like asking them to like say, show me scale. And on the other side, they're like, okay, we need people to sort of give us scale before we start showing you scale. So, but yeah, that's what something that we look for when we are trying to buy.
I mean, at our scale, we generally prefer to build a lot of this in-house, given the number of users we've seen and the patterns and all of it. But specific cases, we do still use third-party tools, case by case, such as, trying to understand whether the merchant is in the right business category, that is, something we would want to service, right? Bunch of that we try out, we understand, again, look at folks who've seen bunch of data, who've done work around that to prove some accuracy and all. But many of this at the scale at which we are hitting now, with the number of merchants and the number of consumers on both sides of the networks that we see, we prefer to build most of these systems now in-house and, write algorithms on our own to keep learning and keep iterating. So over time, as you scale, I think many of these you are going to start doing, especially if you got the data prowess. If you don't have the data prowess, then I think it's great to rely on folks who will help you augment a lot of that. And I think the challenge on data augmentation is going to be data privacy laws. A lot of that is going to become tougher and tougher. It's not going to go away with consent, with the many other ways, etc. So I think small nutshell about how we operate. Happy to share more offline.
Nadeem, are we out with the time? I'm so sorry. I think we can take the questions after the conference for sure. I'm so sorry the time is up. But yeah, thank you so much, everyone, for this. And thank you so much for the panelists, for the valuable insights. Thank you. Yeah.
Thanks.
Thank you.
Thank you.
All right, very engaging conversation once again in the form of this panel discussion. At this point, ladies and gentlemen, we'd like to extend our heartfelt thank you to our partners, beginning with our country partner, UKFCO, our Kingdom of Netherlands, Credit Score partner, Pesa Bazaar, Conversational Commerce partner, Carix, Lending partner, Faircent P2P, VIP Lounge partner, Cred, and Insure Tech partner, Cover Genius. Ladies and gentlemen, in the financial year 2021, over 35 billion digital transactions worth over 60 trillion Indian rupees across India were carried out. Do you know how much percentage profit several companies make from these transactions? Let's find out the different aspects of digital transactions and payments on this topic called Payments Profit from It. And to render this address, I would like to call on stage Mr. Rajiv Agarwal, founder and CEO at Innovative Payment. And before he actually comes on stage, I'd also like to remind you all that at 6 or 6:30 p.m. sharp in Jasmine Hall 1, we also have address by Honorable Chief Minister Mr. Devendra Fadnavis, and he's going to be in conversation with Mr. Kunal Shah, who is the founder at Cred. So don't miss out on that very stimulating conversation that you can be witnessing as spectators in almost the next 75 minutes. So stay tuned. And on this note, can I call on stage Mr. Rajiv Agarwal, founder and CEO at Innovative Payment Solutions.
Can you just check the mic? Can you hear me? I'll just check the... Can you check the clicker? Okay, tell me when to start. So very good evening to all of you. We have an interesting topic here, payments, profit from it. I believe over the past couple of days, people have been saying there is no money in payments. So I thought it will be interesting to take a contrarian view and show you where money is. So hopefully you'll enjoy this, and happy to take any questions if we have at the end of it. So let me start with a disclaimer on what this talk is not about. It's talking about profits from customers, not investors. Okay, I have no understanding about that. We're talking about how you can make money from customers through genuine value addition, where eventually, hopefully, your cost is less than the revenue and it translates into profits. So very quickly, what does Innovity do? So we are a company which is actually helping businesses reduce their cost of acquisition by partnering with other businesses in creating purchase tools which can help them to get customers to convert faster and at a better ROI than possible otherwise. I'm just going to take 2-3 slides and jump right into the topic that's of a discussion here. Quickly about us, we process about 60,000 crores of GTV, roughly about 9 lakhs per point of purchase, which is about 2x of India's average. We have the highest weekly average users in the country at greater than 85%. The industry average is about 40% across 3 months. 70% enterprise market share. Net negative churn. We don't lose customers. We don't like to lose customers. And of course, we are operating-wise profitable. Quick snapshot of kind of customers we have. But let's get into our topic. So we're going to talk about 3 things. Firstly, where do profits lie in payments? Where are the profits there? Secondly, if we know where the profits are, how do we tap them? And thirdly, what are the kind of capabilities that are required in order to extract these profits out? There's definitely money in payments, but let's try to understand, break the problem down into parts and see how we go from there. So let me start with a quick snapshot on what the whole digital payment rails in India looks like. So Indian consumption is roughly about $1.6 trillion in FY22. What you will interestingly see is that the digital portion is just about 500 billion. The rest of 1.1 trillion is actually cash. India is still predominantly a cash economy. If you take that the 500 billion, it breaks up into offline and online roughly half. But here is an interesting thing. If you take a view 4 years out, and you would tend to believe, if you were to think about the kind of projections many people talk about, that the whole world should become online. But that's not the case, because digital payments in online are already saturated. There's no cash in online. Online is fully digital. So the growth in digital payments that's happening is all happening in offline. The cash portion that you see here of 1.1 trillion, that's the one which is converting into increased volumes. The normal online is already 100% penetrated digitally, and it's only growing from the perspective of its natural growth. Very contrarian thing, but it is important to understand. There is no cash in online. Online is already digital, but offline has cash. So anyway, broadly, let's look at it. So it becomes, say, about a $1 trillion market by 25, broken up into offline, about 600, and into online, about 400. That's a kind of market. So let's start getting into this interesting topic of making money from payments. So in fintech, you hear of lots of companies. They're talking about 1,000 crore revenues, 2,000 crore revenues, $500 million revenues, and then 2,000 crores of losses, 500 crores of losses. Because in fintech, showing revenue is easy, profit is hard. And let me try to explain why that is the case. So you take payments, and you have this interesting concept of bank MDR. So banks charge MDR. Revenue is roughly about 1%, and your gross margin there is roughly about 10% for the bank. And then you have aggregators. What are aggregators? They combine lots of payment options and create another payment option. Let's call them Bank MDR Plus. So they charge a little bit more, and suddenly the margin drops down to 5%. And then you have super aggregators. A lot of new startups who have got formed who are saying, we are great value adders. We are going to, give you some tremendous experiences by combining together lots of payment options. And they further increase that, and the margin drops further. If you see the net margin here, moved from 10 basis points to 5 basis points to 2 basis points. But the revenue that they're showing is the 1.07%. And that's the 1,000 crores and 2,000 crores and 3,000 crore of revenue. And then obviously the total profit you're generating from there is 2 crores. And that is just not sufficient for you to even pay salaries. Forget creating even a business out of that. So that's the first problem when you look at payments. But then everybody has this very famous story about saying, oh, payments has nothing to do. It's all about lending. And there are, I think maybe about 500 companies, fintech companies talking about lending. Let's build a lending layer on top of this and do lots of stuff. So let's look at lending. Where is the money there? What's the bank's ROI? I'm being generous to the banks. Blended ROIs are not that much. They're about 10 to 11%. But let's say revenue is 15%. Fantastic gross margin because your cost of funds is about 6%, 7%. So you have gross margins of 50%. Then you have a bank ROI plus, a fintech lender, as they call it, right? A guy who is going to take a loan line from a bank and go ahead and distribute it out to customers. His revenue becomes 17%, and suddenly the gross margin has dropped to 10% because 15% he has to pay out. And then he carries a risk of 20%. What's this risk? What is called as the popular FLDG, the first loss default guarantee, in order to be able to make sure that the bank is ready to work with you. And then you have a loan distributor. We had some very interesting business models coming up over the past few years, called loan distributors, who were adding even further value on top of that, where the revenue goes to 18% and the gross margin further drops to 5%. So the problem in this space has been that people have piled on revenue by what we can call it as topping up, or you can call it as just aggregating the revenues from multiple layers to create massive top lines, 2,000 crores, 4,000 crores, 5,000 crores. But the bottom lines are missing. With the exception of 1 or 2 companies in the country, virtually no other company is able to post profits. So what's happening here? What is really going inside this? Why is this so challenging in India? So let's take just a minute to understand the fundamentals of payments, the fundamentals of commerce. And I think that will set the stage for where the value lies. So if you look at commerce, commerce is all about a company, a manufacturer creating products. It could be a soap, a mobile, a pin. Maybe somebody is providing surgery as a service. Somebody is providing a dress. And there are trade channels through which the products reach the consumer. And the payment channel is the reverse of that. There are different kinds of payment channels the banks provide, whether it is an IMPS, cards, UPI, what have you, all kinds of interesting payment channels which move the money from the consumer back into the trade channel. So that's fundamentals of commerce, right? I think all of us know that. I'm just leaving this view here for you to relate to orange being payments and purple being trade. So let's look at the conventional payments model. Now, the conventional payments model is all about moving money. Payments means move money from a buyer to a seller. What are the kind of services? So you provide payments acceptance infrastructure. You go ahead and provide aggregation of payment options. You say, look, I'm an aggregator. I can do UPI, and I can do cards, and I can do so on and so forth. And you provide lots of MIS and reports. And what does this lead to? Ultra low margin. It's very low-tech stuff, so there are no entry barriers. There are probably, in this floor itself, about 50 companies who can claim this right now. And heavily funded. This area is heavily funded by VCs and private equity players, and leads to what? Therefore, heavy commoditization. Everybody is out there to discount the next guy to be able to make an entry into this and create potentially a market which, like I showed you earlier, was still 2 basis points. But why? Why is it that it is so difficult to make money from this conventional model? This conventional model, incidentally, is a Western model. This is the model which got created in the United States of America. It was copied a lot in Europe. It has translated to Australia. This is the model around which primarily payment businesses move in the world. There are companies like Toast, which are multi-billion-dollar companies generating cash profits of $500 million every year. There are companies like Square, which are generating huge amounts of cash profit every year. Visa, which is generating huge amounts of cash profit. They've been built on this model, exactly on this model. And the core difference there is this. The Western model, the Western economy, is in an efficiency mode. The Western economy, the growth in the economy has been stagnant for well over 2 decades. All the changes that are happening in the Western world are happening around efficiency. Technology is being used to drive efficiency. Whether you are at a retail counter, whether you are checking into a hotel, whether you are boarding a train, anywhere, it is all about efficiency. India is in a growth phase. India is in a phase where there is tremendous aspiration. There is an unbottled fueling of wanting to do more. And therefore, it's in a growth phase. In a growth phase, efficiency solutions don't make sense. And that's what is happening. If you just take the Western models and apply it to India, that's not going to work. Because those models were created for an economy which is in an efficiency mode. India is in a growth mode. That economy is growing at best at 1%, maybe if they are very, very happy at 1.2%. We are growing at 7%, wanting to grow at 10%. It's very, very different. So let's start looking at where the money is. And this is where our personal belief is, that if you move from payments to purchase, you suddenly start seeing value. So what does this mean? What does this mean to move from payments to purchase? Payments is all about moving money from a buyer to a seller. Purchase is peeping behind the payments. You try to see, why did the payment happen? Whenever you go to a shop or you go online and buy something, there is a purpose. There's a story behind what you're trying to do. And that's the purchase. And that's the interesting space. The space when the trade and the payment channels start interacting with each other. You don't take them isolated, you start interaction. Look at the interactions. And what does it create? It creates tremendous opportunities. First, opportunities of managing mismatches, and I'll talk about that. Secondly, opportunities of enabling measurements. And thirdly, opportunities of creating collaboration. Lots of opportunities open up as soon as you start looking at trade and payments together. Don't look at payments in isolation, the Western model. Start looking at them together. What do you create? You create multi-layer earning. You're not earning from just a single source, but multiple layers of sources. You create very sophisticated tech that's not easy to copy for somebody else. So you have massive entry barriers. And you create very, very increased kind of interest that you are seeing in the venture capital and private equity community, who have burned their fingers and hands and all other parts of the body in trying to fund all Western models, and suddenly figured out that they have only wasted thousands of crores out there to large profit pools. So let's try to understand, what does this thing mean? What does this mean, managing mismatches? What does it mean, enabling measurements? What does it mean to enable collaboration? So first kind of a mismatch is what I call as a mismatch in time. What's a mismatch in time? We often, of course, call it in many other ways, but it is simple, that the time at which the goods exchange hands is not the time at which the payment exchanges hand. Very simple. When the goods exchange hands is not the time when the payment exchanges hand. I'm sure all of you have probably seen this in your own local neighborhood, that you buy medicines from a common pharmacy shop, and every time you buy medicine, the guy in his little khata, he keeps writing it, and at the end of the month, he takes it. So there's a gap. The goods come now, the payments come later. What are the benefits here? It's sales growth with risk. Of course, there's a very popular concept of BNPL, buy now, pay later, or EMIs. All of this fall into that space. That's a space where you can make money, definitely, 30 to 40 basis points. There's an interesting space where you pay now and the goods come later. And many of you might have seen this also. So for example, this is very common in the jewelry segment, where they have these schemes where you keep on giving, say, 1,000 rupees every month, and after 11 months, you can buy something for 12,000 rupees. The payments come in advance, and the goods come later, right? Again, it is something which is built around payments. What are the benefits here? Is assurance-driven sales growth. The fact that you are already paying upfront means that there is a sale that's going to happen later. So for the merchant, it's great. And these are extremely, extremely profitable businesses. Gift cards fall into that category. Prepaid cards fall into that category, right? A lot of Forex cards fall into that category. All those kind of instruments where you pay first and the services come later come into that kind of a category. This is mismatch in time, when the goods and the service don't match. The second is a mismatch in amount. This is again a very interesting kind of a mismatch. So for example, the very common thing that is there is when the bill amount is equal to the payment amount. That is, you go to a shop, you buy something, and when you buy something, you pay for it, and therefore the bill amount and the payment amount are exactly equal. And this is what is commonly called as transactional reconciliation. You are reconciling at a transaction level, and there's money to be made there. But here is another kind, when the bill amount is not equal to payment amount. And you will see this again in the example that I was giving. Your local kirana guy. In India, it's a very, very popular thing, the khata that the local kirana guy maintains, right? You keep buying, and the person keeps adding, and once in a while you pay some amount. So you may have accumulated for 3,500 and you just pay 2,000. And then you again keep accumulating, and then you pay again some more amount. So the sum of customer purchases over time are equal to sum of customer collections over time. But they never actually match. And this is called relational reconciliation. Interestingly, this is a reconciliation which is required in B2B payments. If any of you are entering into B2B payments, it's all relational reconciliation. It's not transactional reconciliation. And that's why one of the reasons why most B2C payment companies have miserably failed in B2B. Because B2C starts from transactional reconciliation, and B2B is all relational reconciliation, right? Lots of money to be made there. These are very complex areas. Very, very complex amount of ledger management that need to be done. But that's a great area of payments. Enabling measurement. So one of the very fine points of payment is that ultimately whatever business initiative that you may take from a sales perspective, any company, whether you are a grocer, whether you are a fashion guy, whether you are a healthcare provider, whosoever you be, ultimately any initiative that you take towards sales will eventually land up in a payment. Because if that initiative is not translating into sale, which means money, what's the point of that initiative? It was just intent. So all your marketing initiatives have to finally consummate into the flow of money. And therefore, if you look at any marketing campaign, and obviously businesses keep running lots of marketing campaigns, lots of promotional tools they will try to build into place, coupons, cashback, loyalty points, etc., and they give it off to consumers. And then consumers come and purchase. Consumers also will use and redeem that particular token out there. And if that payment can be used to attribute the marketing campaign, because the point of payment is when finally the transaction happened. Finally, I can relate to saying that this marketing campaign led to a sale. So if you can use payments for attribution, right? And attribution is one of the most complex area of marketing management, for which marketeers will pay you like anything. Because the biggest worry for a marketeer is, I spend a lot of money and I have no way to figure out whether it translated into business, right? So if you can go ahead and use it for attribution, you can prevent fraud, close the marketing loop, and get a real-time visibility into how that business is progressing. And again, there's a lot of money like inside this. This is a highly underserved area. Nobody really looks at using payment channels for the purpose of attribution. Finally, creating collaboration. So you have multiple parties, right? You have, when as a consumer you go to a shop and buy something, you may think that you are only taking a decision of paying to the merchant, but actually behind the decision there are multiple things happening. You are making a choice of which merchant to go to. Should I go to shop A or shop B? You are making a choice of what goods to buy. Do I buy a Britannia bread or do I buy a modern bread? You are making a choice of how do I wish to pay. Should I pay through an HDFC card or should I pay through a Google Pay? You're making choices. All these parties are talking to the same consumer, but they have no easy way to talk to each other. And that's the third area where payments brings them together. Because ultimately, all their marketing programs come together at the point of payment. And again, a lot of money to be made. So having done this, let's start looking at, what can you do to tap into this world? So I'm sure, in this crowd out here, there are probably many aspiring new fintechs who are there, many who are already probably running companies and raising their next round of funds, or probably running companies and trying to figure out how do I match the unit economics. It's important to understand revenue is decided by your customer, at least cost is decided by you. So going through those things, how do you tap into this? How do I finally make money out of this? The first piece, in my belief, is develop software for banks. Okay? It's a very, very important area. Develop software for banks. And there are very large, successful companies that have been created in India which have done that. They are licensing SaaS models, highly profitable. It's a very technology and sales-led growth. So you need massive sales teams, enterprise sales teams who are going, tapping at the doors of the banks, convincing them to go ahead and take up your services. You don't get any limelight. Your name will not come on the front page of Economic Times. Okay? Your name is not going to come in Startup Street or whatever is that show on CNBC TV 18 at 10 o'clock in the night. Okay? But yes, definitely you'll make profits. Definitely you'll get great outcomes. Okay? You'll definitely make money for yourself. And unfortunately, there are less than 10% fintechs in this space. I was just roaming around here, and there are probably only 4 fintechs in this entire hall which qualify into this space, unfortunately. The second, distributing banks' products. So you are a bank prepares lots of products. There are insurance products, there are loan products, there are mutual funds. There's so many products being created. So you acquire customers for bank. I personally find this as a ridiculous business, simply because it's highly commoditized. Why do you think that you have great digital marketing capabilities which nobody else has? The same set of big ad tech tools are available to you as to your competitor, right? So you can spend lots of money on IPL, you can spend lots of money on the television, you can create lots and lots of noise out there. Absolute junk business, in my view. This is all marketing-led growth. So all you're doing is, you are marketing on behalf of the banks. The banks are, of course, happy because they'll pay you when you get them a customer. So you'll make them more profitable, and obviously you'll increase your losses. Lots of limelight. You will be on the front page of Economic Times. Lots and lots of revenue you can show up because, of course, you will pile up revenue. Lots and lots you can show up. Very, very little possibility of driving profits. Unfortunately, 80% of the booths on this, in the stall here, on the exhibition here, fall into this space. So this is the marketing-led growth, where all you're doing is building a brand ahead of a product. There's nothing else there. All you're doing is going ahead and telling the bank, I'll acquire customers for you. Bank says, great, cost is yours, revenue is mine. Why should I have a problem? And the last is design experiences for consumers. Now, this is a very different space. Here, what you're doing is you're taking together various services of banks, stitching services into experiences. This is hard to design. This is hard to market. And it is product-led growth. But this is the growth which we miss understanding in the West. The Twitters, the Facebooks, the Googles that we take example of, the Stripes, the Squares that we take example of, are all product-led growth. Hard to design, hard to market. It has low limelight because till it becomes successful, you don't come on the front page of Economic Times. Great profits, great outcomes. And this is a space which is growing up now. There are lots of things that are happening in this space. So let me come to my last slide here to hopefully summarize what I'm talking about. Don't copy Western business ideas in India in the payment space. Indian payments is unique. Please don't copy it. You will definitely get funded, very high chances that you will get funded, but it is very unlikely that you will keep getting repeatedly funded. Because at some point, the investors will also figure out that, look, this model is not translating into profit. Don't copy. Indian payments market is unique in its own ways. mere distribution of regulated entity products. We are a regulated entity, but mere distribution of regulated entity products. Taking a loan of a bank and distributing, saying, I'm going to get customers for you. Taking a mutual fund and distributing, I'm going to get customers for you. Taking a policy and distributing, I'm going to get customers for you, is not going to work. It will lead to a lot of revenue, no profits. Okay? Digital marketing, everybody has the same tools. Please remember. Same big ad tech access, Google, Facebook access is not restricted to anyone. Everybody has access to the same set of tools. That's all nonsense. Doesn't work. Money is in managing mismatches, enabling collaboration, enabling measurement, a lot of stuff there. And finally, develop software for banks or craft experiences for consumers. These are the two spaces. The rest of it is all vanity. Right? Rest of it is all vanity. If you're fond of vanity, great. There's no profit inside it. So that's what I wanted to share with you guys. Thank you. The whole idea here was hopefully to stimulate your minds into thinking that there is money in payments. Thanks.
Ladies and gentlemen, can we give Rajiv a huge round of applause? I think it was really educational, engaging, meaningful, incisive, all at the same time. The simplicity with which he actually explained the entire facet of making profits from payments as a source was simply mind-blowing. It's true that Innovative Payment Solution has been doing awe-inspiring work, and they also got a lovely recognition last evening for which they couldn't come. And the category in which they won is called the Best Bill Payment Solution Award. They won this award last evening at the Global Fintech Award, where we sought nomination from more than 150 organizations and got more than 700 nominations. So I think the winning recognition that they got last evening is a complete testament to their high quality products and services. So I think it's time to recreate their moment of recognition here and to give the award to the Innovative Solutions team. I'd like to call on stage Ms. Ratika from PCI to felicitate and recognize the entire team. And can I call Mr. Rajiv Agarwal, founder and CEO at Innovative Payment Solutions, and his entire team to come on stage as we recreate this moment of glory for you. So Rajiv and his team, can you all come? A big round of applause, ladies and gentlemen. All right, here is the team, the tribe that makes it possible for them. So a big congratulations to all of you guys. Lovely, awe-inspiring work. And the fact that you won it. Thank you, Latika. This is one of the most complex thing to getting the photograph right. Congratulations, team. All right, ladies and gentlemen, at this point, I'd like to acknowledge our theme partner, WhatsApp, co-powered by partner Amazon Pay, our management partner, Encash Spend, our in association with partner Perfios, our payments partner, Cash Free Payments, our CEO dinner partner, HSBC, our co-agenda partner, Lyra, our co-agenda partner, PayPoint, our session partner, FeedZai, and Bureau.id, and our session partner, Rico. And our gold partner, Jokata, our gold partner, Payten, Innovity, and Beams VC. Ladies and gentlemen, next up at the Global Fintech Fest is another relevant, pragmatic, and a very practical topic that will be chaired by our eminent moderator in a few moments from now. But before that, I want to reiterate and reinforce that at 6:30 p.m. this evening at Jasmine Hall 1, we have a very riveting and stimulating conversation being exchanged between Mr. Kunal Shah, founder at Cred, and Honorable Chief Minister Shri Devendra Fadnavis. So I'd request you all to make sure that you line up in front of the hall because it's surely going to get jam-packed. The session starts sharp at 6:30 p.m. So make sure that you're there because this is going to be an acknowledgement from the government itself about what kind of plans they have for the fintech space. So I think it's a very opportune time for all the people, all the audience who will be viewing it there. On this note, let's quickly set the context for our culminating panel discussion, which is going to unfold here. The topic of the panel discussion is empowering India for sustainability using digital financial ecosystem. Because in order for fintech to support the UN Sustainable Development Goals, adopting a progressive approach for developing an underlying infrastructure to support digital transformation becomes relevant, required, and remarkably important more than ever. So, to maneuver and lead this conversation, we have with us our moderator. I'd like to call on stage Mr. Naveen Chandani, who's the Regional Managing Director, India and South, CRIF. So can we give a huge round of applause for Mr. Naveen Chandani, ladies and gentlemen. And next up, I'd also like to announce the set of speakers, those remarkable practitioners, influencers, thought leaders who will be sharing their diversity of experiences and depth of expertise with all of us in form of very sharp, crystallized insights. I'd like to call on stage Enrico Lodi, Managing Director, CRIF. All right, welcome. And then I'd like to call on stage Mr. Nitin Chugh, Deputy Managing Director and Head of Digital Banking and Transformation, State Bank of India. And joining them on stage is Mr. Siva Subramaniam Raman, Chairman and Managing Director, Small Industries Development Bank of India. And finally, Mr. Sameer Shetty, Head Digital Business and Transformation at Axis Bank. A big round of applause for a stunning and remarkable lineup of our speakers, thought leaders, influencers who will be sharing their perspectives with all of you. So over to you, sir.
Do I need to use this also?
Yes, sir.
Okay.
You will need to, yeah.
Okay. A very...
Audio check. Yeah. I think
Hello. Check, check.
Check,
Okay.
check, check, check.
Okay, great. A very warm welcome. Most of you have already been here yesterday. Today we are the fag end of the day. But I'm super excited to be moderating a panel with stalwarts in our financial service industry. We have a mix of, the panelists who are both from India as well as in abroad. We're going to be talking about three things: sustainability, financial ecosystem, and digital. The idea is how it comes together. I think that is something which we want to deep dive into. It's a very new, evolving subject. And in order to, set the tone, I would like to invite actually Nitin to share his thoughts on what sustainability actually means. A lot of us use the word sustainability, ESG. We talk about various things, but if you can demystify what this means, that'll be great for the audience, and then we can deep dive.
Thank you, Naveen. The pleasure to be here. So let me first, caveat this by saying that I'm no sustainability expert, but let's look at it perhaps in the context of digital, more in terms of inclusion and whatever else. So there are 3-4 things that I'd like to talk about. So sustainability, I would imagine, is part of every single responsible corporate's values, or whichever way you want to look at it, the key themes that any organization follows. So almost every organization, like in SBI, we've got 5 values, and one of them is sustainability. And I would imagine most large corporates or even any kind of company would have sustainability. But extending that to sustainability beyond the obvious, which is related to climate, etc., I think technology is now becoming even more discussed topic, that how can technology play a role, and especially digital technologies can play a role in extending this whole discussion and practice around sustainability. All this time, I would think last few years, the emphasis has been on reducing consumption as an output of digital technologies, or let's say reducing use of paper, which is very straightforward. So all of us take pride in saying that we avoided X, million billions of sheets of paper or trees, etc. But that's fine. But then how are we taking this ahead is really the whole thing is. So I think now what's happening is that digital is becoming the core of all sustainability initiatives from a technology point of view. More and more of this is getting embedded, and the immediate use cases that have really come about are really having the ability to forecast and predict outcomes using data science, or using sensors, or using some kind of high-powered, streaming at the end of it, which helps in both planning for more sustainable outcomes, and certainly enough also including a whole lot more people for long-term sustainability of even business outcomes. So I think that's my understanding at the moment.
Thanks a lot, Nitin. So yes, I think technology and data, you touched on two things that is going to actually help reduce the carbon footprint. And sustainability, like you said, is everyone's role as a corporate. Enrico, if I can, get you in. Nitin spoke about what it means. If you can share what it means, from a European standpoint. You come in from Italy, you work in various markets in Europe. But what does sustainability mean there? What does ESG mean there? If you can show or share some light on that, please.
Thank you, Naveen. Talking about Europe, the first point is that the regulation is paving the way, no? Because the European Union set a number of rules in order to implement the ESG. That's number one. Number two is that for a couple of years, people started walking around in order to understand how to materially implement this approach. Number three is that, and that's our experience as a company in Europe, is that moving from theoretical to practical, the best way to approach ESG is helping businesses in qualifying themselves. So what we have done and we are seeing in Europe is the setting of some kind of self-qualification of companies in terms of ESG compliance. This is something that works very well. There are, for example, big corporations having hundreds of suppliers that call the suppliers in order to qualify in terms of ESG. Company like us, we do provide the platform where the suppliers can qualify filling in a questionnaire. The questionnaire generates a score, an ESG score, and this ESG score can be spent in the ecosystem by the company. And the first way it is spent as a supplier, it is spent to the corporation, in front of the corporation who these suppliers serves. But this kind of certification can be spent in the ecosystem anytime it is needed. So this is a practical example on how ESG can be materially implemented.
So I will reiterate what he mentioned. He said that there are corporates, like Nitin mentioned, not necessarily financial institutions, but corporates who want to embark or have already embarked, because in Europe it's ahead of us, in trying to get their supply chain actually certified or scored or ranked on ESG. What I would like to do is, who are these suppliers? And the supplier chain is usually, I think, MSMEs. And we have, Raman over here. And I would like to invite him to share what he believes MSMEs and India, because I know the regulation is yet evolving. There is nothing that is in place, but it's such an evolving and more importantly, I think I would say a differentiator that MSMEs in India, if they become compliant and also think about sustainability overall, it will help the entire ecosystem. And from a financial service perspective, what do you think we, from a fintech perspective, what we can do in this journey? So,
thanks, Naveen. It's a great topic. You've brought in three terms and they all sort of fit into each other. My biggest fear at one level is what would happen if European Commission standards were to suddenly come into India. So we're all aware in this room that the West, especially Europe, is much ahead of the rest of the world when it comes to introducing standards for ESG, and in the ESG, it's really the E part, which is being focused upon for very good reasons, as we all know. Let's look at the other end of the spectrum. In the area in which microfinance institutions work, in fact, Naveen and Krif, they do a great amount of work in collecting the data of microfinance institutions. They are really looking at giving money to that section of society where it is all S. So in India, we have been doing the S part very well for a very long time. We have been doing, the empowerment of women, the number of women entrepreneurs that are getting finance, maybe just in the MFI industry, far outstrips anything else that's happening in other parts of the world. So as far as, the MSMEs are concerned, they range from the very small to a company that's got turnovers of about 250 crores. Where do we really, start this entire aspect of bringing in the understanding of ESG? So as I said, when SIDBI does any work in the ecosystem, we are certainly taking care of a lot of the S part, and there I link in the SDGs, because the SDGs are an easy way of figuring out where is it that you're really coming out in terms of impact. So the biggest fear, as I said, is the E part in India. We know that MSMEs are burning coal furnaces to, get their, metal to melt and create it into whatever they are creating as artisans. Now that's a very small example, but a huge possible impact on the environment. How do we get them to move when there's really no incentive for them to do so? There's nothing in terms of a gas linkage or any other alternate fuel. So, just think about it, that if in a couple of years we were not to take action today, you might just have some standards that are imposed upon the industry in India, and you'll probably end up, unable to export whatever little you're exporting today. The supply chain is a great way of making this happen, because the ability for large entities in India to get their supply chains to become sensitive to ESG is a great, and I think one of the easy ways of going about it. From a SIDBI perspective, I would look at providing cheap credit to large buyers to be able to pass on that credit to their suppliers, and in some manner get them to start working on better ways of manufacturing. So I think I'll stop there.
No, thank you. I think this is the second point. The first point was what Enrico mentioned, large corporates looking at the supply chain. And now we see a financier, a bank, who is looking to provide probably a few bips, which is cheaper if they are embarking on that journey. So, that brings about how this comes together. I would like to get Samir in. Samir, you are part of a team, a council in Axis Bank on ESG. Just, further deep diving into the topic, because you're also looking at digital. How do you see this for entrepreneurs, the small businesses? What can we do digitally to improve this sustainability, ESG growth within banks? What are your thoughts around that?
Yeah. So Naveen, firstly, thanks for having me here, and a good evening to everybody here as well. So I'll come to your question, Naveen. Maybe I'll take a little bit of a digression,
Sure.
because ESG is close to personally my heart, but also to our bank. So for us, ESG is in multiple parts. The most obvious one is the environment part, wherein, as Nitin said, as an example, last year we saved 20 million sheets of paper, 245 tons of CO2 just by being digital. But that's just one part. The bigger influence banks can have on ESG is by promoting sustainable finance. So as an example, we have a public commitment to incrementally disburse 30,000 crores of loans
Wow.
to ESG positive companies in the next 5 years. And so on. And there are many other sub-targets as well. So there is the environment part of this, where actually a big part of banks' contribution will come from what type of companies and what type of entities they are financing, both on the negative side and on the positive side. We have, by the way, stopped financing a large number of ESG negative industries. Second is which is sustainability. Sustainability obviously is in many formats. But one thing that, or actually two things that we picked up is, one, the workforce, which is making sustainable for employees, and they're particularly looking at the contribution of women in the workflows, and also contribution of all kinds of, like, diversity in its truest form, right? And this is in simple things. As an example, healthcare benefits in our bank were available to immediate family, which means parents, spouses, or children. Now healthcare benefits are also available to partners, and same-sex partners, and so on and so forth. It's just very simple things like this which make the workforce more sustainable. Earlier, if you were opening an account with the bank, you had to say Mr., Mrs., Miss. Now you have, like, you don't need to necessarily kind of state your gender. So it's simple things like that, and bringing in kind of particular focus on diversity in the workforce, that works. And the G is the governance. So as an example, we have a ESG committee of the board, and we are the first bank actually to have it, and that brings specific focus into ESG. And I think kind of a combination of all this is what can drive ESG forward.
Got it. No, so Samir, I think 2 points again that I'm taking from the panel. The first one was even urban, rural. The second, you said diversity. So these two are important. Here, Nitin, I would want to again get you in. How should a financial institution, may it be a small fintech, may it be a large bank, may it be a mid-sized NBFC, it could be a microfinance company, how should a financial institution think about ESG or sustainability overall? What should be the thought process? Because I think, like you said, it's evolving, it is new, but what should they be thinking about?
See, I think anybody who's getting into business now as a new entity, whether a bank or an NBFC or a fintech, and especially fintech, since we are in the fintech environment right now, if we are not setting up the business with a sustainability set of objectives around ESG and more specifically around sustainability by use of technology, maybe some standards like in Europe will come, or better standards will come in India. We have a reputation for doing that also. And suddenly you will find that that business is unviable. It doesn't stand scrutiny of any regulatory framework or any kind of that kind of a framework. So 2-3 things, again, more as example than anything else. Now there is a huge move towards cloud. Okay. Now there is a debate in the CTO community, for example, that is cloud, data centers in cloud, are they more energy efficient? Are they more greener than, on-prem data centers? By all means they are. Just for the fact that the design is such that you consume only when you need to consume. You are not consuming energy when you don't need to consume. And that energy is passed on to somebody else. So it's like a grid balancing that happens in electricity distribution. But the same thing is coming in in data centers. Cooling, again from a data center point of view. Now, what do we use for cooling? We obviously use air conditioners for cooling. But people are thinking of digging deeper or even going to colder regions, which sometimes is unviable. But now these kind of things, if somebody is getting new into the business at a large corporate level, large bank or any tech company, is obviously thinking like that. Now, coming to your point on the smaller businesses, or let's say more specifically on the microfinance, for example, which you guys are specialists in, and we've learned that business from you. I can say that. Now, like Raman was saying, sustainability of the enterprise, the sustainability of income and sustainability of cash flows is far more important than sustainability of environment to that segment of the population. Okay, but should they be linked to green or climate-related metrics, like the way we've started lending to corporates, or stopped lending to corporates, like Samir was saying? Most banks have started to put some ESG or at least climate-related risk into the risk management policy, and there are credits and there are discredits, and you decide whether you want to lend or you don't want to lend. But what do you do with microfinance? So do you really want to give loans to somebody who's burning a coal furnace? Do you have an option of not doing that? Or do you have the option of working on the side and helping that user to move into better outcomes? So again, I think that is where technology plays a role. And you are familiar that in microfinance, a lot of the workflows are already digital.
Right.
So they are in some manner contributing, but the end user perhaps today is still, there is some distance that has to be.
Right. No. Thank you. I think this is a perspective from India. What I would like to do is now get Enrico, because we spoke about green energy, we spoke about green financing, and I read a lot about green financing, green banking in Europe, right? What is that, and how is it connected to the carbon footprint score? If you can just explain that for all of us, that'll be great.
Yeah. Okay. A company has to qualify in terms of sustainability, and that's about offer, sorry. The other angle is, as an individual, based on the choices I do make, so the angle of demand, I can, in some, my choices might influence the effects in terms of sustainability. So, a simple example coming from the European experience is the introduction of what is called the carbon footprint score. So, the answer to the question, my choices as a consumer, what kind of impact do have as generation of carbon dioxide equivalent? Anytime I do buy something, I do generate a certain level of carbon dioxide equivalent. So, number one is about awareness. If I do have a tool which might be embedded, for example, in my banking app, telling me, hey, based on your current account data, this is the overall carbon dioxide equivalent consumption you made in a week, in a day. And that's number one, awareness. Number two is from awareness to behavior. So maybe next time, instead of buying this, I can buy that, knowing that this different choice might have a lower impact in terms of carbon dioxide equivalent generation. So at this point in time, we do close the loop, because we have behaviors as consumers that might drive qualification of companies in order to make the ones more involved in investing in sustainability rewarded by the choices of consumers being able to understand the effect of their choices in terms of sustainability.
Thanks, Enrico. So I think the use of alternative data and creating an awareness for the consumer. Great example on the internet banking or on the app is a great example. But that would mean some amount of alternate data that could come in through digital, through open banking, and it's marrying, I think, financial services to an extent, also via consent, better understanding and giving that awareness back to the consumer, right? So if that is all going to be digital, I wanted to again bring in, Raman, and see what can we do on the digital front, on the open banking front, on the alternative data front, especially MSMEs. For example, while we have the account aggregator ecosystem that is playing out, and Enrico just mentioned about alternative data through the current account, right? If you have that account in a bank, it's great. But if I take SIDBI, for example, you don't have current accounts, right? But that could be one option. The other option could be using of, creating this carbon footprint score if we get embedded into what they are purchasing specifically for, creating, manufacturing something, right? So it is eventually data that is being used. There is obviously lots of other data like GST data and all that, which we could use. But what are your thoughts around this open banking digital in the overall sustainability of green financing, green banking?
So as already said by earlier speakers, I think as a banking system, we are clearly headed to becoming paperless. I honestly believe that, if on this stage we can commit once again to all of you that as bankers we will become paperless, we'll do a great service to this country in terms of just driving it towards a greener country. And that's actually going to happen. So, one of the biggest pain points is the development versus sort of ESG debate. So India is continuously taking this position on the world stage that, we have not developed over the last so many years because of issues that are, largely external. And today it's unfair for the rest of the world to deny India the opportunity to grow. So, but the brilliance of, and I'm saying that very, carefully chosen words, is that we have been able to, cut through a lot of stages of development because of our prowess in the digital sphere. What have we done? The sheer dominance of the jam has led the entire banking system to be able to provide banking services as you and I are all using today. The unmet credit demand of the MSMEs is something like 25 lakh crores in the next 3 years. It's about equal to the total exposure of the banking system to MSMEs today. How are we going to meet that? The unsecured loan is something which is rarely given by the banking system. We've today moved to something called GST Sahay, which is entirely based on a GST invoice accepted by a buyer, a bank account coming from an account aggregator framework, an income tax return which is soon going to be available on an account aggregator framework very similar to what is known in their terminology as FIP. So you're putting together data points of companies that are, of course, in the formal system, and within a few minutes creating some sort of a, yes or no based on a rule engine, and you're then providing credit. This is further brought in from a repayment concept through an eNACH, which is nothing but an NPCI product. And therefore, you have the sanctity of an entirely digital process, giving a loan and ensuring a repayment, on top of which there is now a seamless integration to what is known as the guarantee scheme for MSMEs. And that will provide 75% of you know, guarantee for a loan if it were to go bad. So, you know, I'm trying to put together the ability of the entire banking system. It's not just banks, it's NBFCs, to be able to provide seamless credit at small ticket sizes. So this could be 10,000 rupees, it could be 1 lakh, it could be 5 lakhs. But these are unsecured loans which till yesterday were not really, you know, sort of talked about. A few people are doing it on the consumer side, but then that's a totally different story. We're talking about, you know, business loans. And it's the business growth engine that's going to take India forward. We're also bringing out a score. So many of you might be aware there is something called a CIBIL score or a, you know, bureau score. These scores are available for the commercial sector too. We're now fitting in a bureau score along with triangulation of data from the same set of GST, bank, income tax, MCA if needed, and we're coming up with a fit rank. So, you know, very soon you'll be able to offer a very highly tested and well regressed rank. There's a bureau rank, there's a fit rank, and it's being called fit rank. Between the two of them, there'll be a probability of default which bankers could freely use for just deciding whether to give a loan or not and how much of a loan to give. So, you know, we are hurtling towards a much better way of giving credit. And that, I think, is really going to take us, you know, on the ESG scale, several notches higher than probably where we are today. You know, the carbon footprint part, frankly, is difficult areas to sort of tread, but I think we have to make the best of what we can in terms of, you know, the technology that's available, in terms of, you know, working with the clusters and the industry associations. SIDBI's got a huge cluster development program. We're trying to make that into green. Just a case in point, Moradabad, famous for its brass works, works entirely on coal kilns, and it's sort of the worst example of ESG. We're trying to work with the ecosystem to convert all that coal furnaces into gas. It's a huge project. It's just one amongst probably, you know, several hundred projects like this in the country.
Thanks for sharing this experience. And, you know, I think you touched upon paperless, you touched upon digital, you touched upon specific clusters, and you touched upon possibly remote areas of the country. But all were related to entities. So I want to move from entities to consumers, and that's where I want to bring in Sameer. Sameer, digital, and all of us are, you know, over here, 7,000 people today, virtual, hybrid, everything is working well. We are lucky and privileged to have this on a digital platform, wearing what we are wearing. You otherwise would see in movies where people are dancing without hearing music. It's, you know, their own private music happening. But what about the semi-urban? What about the rural? I know your one of your teams is you know, kind of focusing on that. A lot of banks have already focused on that. But from a digital perspective, what are we doing to increase sustainability around semi-urban and rural at Axis?
Yeah. No, thanks again, Naveen. So look, I think what we call Bharat Banking is a major priority for us. And again, the sustainability angle there is from a economic development, which is how do we kind of ensure livelihoods kind of an angle, right? And so one big power of digital, in addition to paper and so on and so forth, is that digital enables sachetization. So earlier, if you had to do a ticket size of 100 to be profitable, because you make it digital, maybe you can do it at 20, right? Because the costs are variable, and, you know, you don't have paper and you don't have people running around and so on and so forth. And so, so if you are able to bring sachetization to financial services, our ability to kind of dramatically increase inclusion goes up, you know, significantly, because then, you know, significantly higher number of people can avail and so on and so forth. So that's one principle that we are working towards, which is how do we make same products but suited to rural environments and in smaller ticket sizes available.
Digitally?
Digitally, fully digitally, right? Now the digital nuance in rural is that you will require some kind of assistance. Because there is obviously a customer journey and people will become aware over time and so on and so forth. So there is some angle of assistance involved, but the journey is fully digital. And some of the things that we are trying to do, and by the way, there is lots happening in the country, which is great to see, is as an example, if you were to look at most products in the rural area, so as an example, let's say KCC. Now to offer a digital KCC, you need to figure out how to do security creation digitally, how do you get land records digitally, and so on and so forth. And so we are now working with several players to build these, which is, can I go into a village and the person just tells me his land and so on and so forth, and I'm able to digitally get the record, and B, digitally also able to create a security. Now the security creation part is a little bit away, but the ability to get the land record digitally, etc., already exists in many states, and that's what you're working with. We also have, by the way, capabilities now that, as an example, you have satellite imagery, which can tell you which crop is growing and what is the health of that crop. So we are trying to get that information. So by bringing this together, or the other great example is gold loans. Can we offer a gold loan fully digitally? Is the other kind of example, right? So our thirst around this area is to see how we can provide credit to people, which they can then use for better livelihoods generation, and then the entire economy benefits from that.
Thanks, Samir. Nitin, if I can get you in, SBI has the YONO app, but I'm not going to talk about SBI. I'm going to be talking about you as a digital marketeer, and you have done that extremely well throughout your career. Small finance bank, large private sector bank, large public sector bank, but the consumer is the same. We heard about how semi-urban and rural consumers could be looked at from a digital perspective. Can we get your experiences about how probably the urban consumer and the business owner, because there's a slight difference sometimes, and sometimes it's the same person. A business owner is also a consumer and vice versa. So what are your thoughts about that, creating awareness and digitally doing everything? Because some of them are so used to calling up and saying, I want an RM in front of me. And they can demand it, but what are your thoughts? Because you've seen all the three spaces.
So only talking from a consumer attribute point of view, not so much from whether it's private sector or public sector. I don't think anybody has the time anymore for long conversations. If this panel went on for 2 hours, I'm sure you won't have anybody sitting here. Okay, we would be the ones talking. Nobody has that kind of time and attention span. So even today, when people say that I want this, I want that, I want in writing, I don't see that happening anymore. At least across customer segments, people are happy to, do things in a manner which does not require them to have physical interactions all the time. So you will have obviously customers who will say that I want to see my RM and I want somebody to come and meet me, travel, burn some fuel and all of that, which is okay. But it is something which we are seeing very clearly that people are preferring to be on their own. Because the biggest thing that we must acknowledge specific to India is that the India stack or whatever we call it is at a population scale. The entire country benefits from that. Now, when the entire country benefits from that, it is obviously being created for long-term sustainability. So anybody who latches on to the India stack for any kind of service is building capability for long-term sustainability. Okay, users are obviously gradually, they have consented, they've agreed to use those credentials, and the workflows and journeys have been designed in a manner that you can use that information. And now we've heard from Raman also about moving into the other spheres also, whether it's income tax or any other kind of documentation, or what Samir talked about, land records, and there is digital document execution that's happening in almost 18, 19 states now. So this is happening because consumers are ready. So I don't think banks need to go and make consumers aware that, listen, not using paper is in your interest. People are understanding. All of us are collectively evolving as a species also. And we have to help each other understand some of these nuances better from each other. That's all.
Well said, well said. So, before I open it, I got 11 minutes.
I want to give a little example, just to highlight this point. 2 weeks back, there was this event that Hindu Business Line had in Delhi called Game Changers Award. Okay, so they basically pick up people from different spheres of, different spheres, not necessarily, any specific industry. There was one young girl, 24 years old, and she's already not a climate activist, but she's developed an app, and she's got some 35,000, 40,000 users across 108 countries already. Okay, only to tell you that what is my carbon footprint on a daily basis. Now, this is the generation which is so very aware of these things. So, what are people like grey-haired and no-haired people are sitting and
Correct.
talking about?
No, I totally agree. Our children will not want to visit a branch. And that's good. They will want to do everything digitally, which is, I think, what we all want. Enrico, I have one last question before I actually will open it up to the audience. It's already 10 minutes, so if you can keep your answer to possibly 2 minutes, and then we'll give 8 minutes to the audience. We heard all of you talk about sustainability, ESG. We heard Nitin just tell us about this consumer who may or may not want to, get an RM in. However, wants to do everything on the app. And I know open banking in Europe has taken off faster than other economies. And somehow that personal finance manager, business finance manager are terms that are being spoken about. Some banks are ready to launch it. But what is that experience for the consumer, and what is in it for the consumer? I understand from a bank or a financial institution perspective, but what is that that the consumer gets? What is the plus point?
In 2 minutes, I'm old enough to tell you that I'm in the data industry since the 90s. And in the 90s, it was include the excluded ones. Then it has been, after having included the excluded ones, engage with them. So, credit reporting industry created infrastructures in US, in Europe, in India, and now in the Far East, in order to allowing people to get access to credit thanks to the data sharing. And that was the inclusion, okay? Now it's time of engagement. Why? Open banking in Europe started some years ago thanks to the Payment Service Directive to regulation. Now is here in India, allows Enrico to, if it is monobanked or multi-bank, doesn't matter, to, even if I'm an old guy, in a simple app, my current accounts connected in order to do what? Number one, understand which are my inflows and outflows, which is something that we think we know, but we do not know. Come on. And you might be, oh, I'm scared, they would like not to know. No, it is. Number two, I can make choices. And, for example, my bank, based on this transaction I do perform, might also engage me, which is the new step. Engage me with the right offer when I do really need that offer. Not, pump me the offer that the bank want to sell today to the customer audience. No, customized to my real need. That's engagement. And this is the big revolution that financial management and business financial management, personal financial management and business financial management apps can offer. Easy. It is not rocket science.
So thank you, Enrico. In fact, one of the use cases while I was just hearing the panelists could be that if somebody has to buy an AC if we can have what could be the carbon footprint, and if we want something which is going to be creating less carbon dioxide, and they have that option, and they require finance in real time, if the app can actually say that. So it is using alternative data, it is using carbon footprint data, and it is using engagement at the same time to say that, you know what, you need 5,000 rupees extra. Here is an option. I'm giving you a credit for X number of days and move on. So yeah, I think digital is going to be helping sustainability. And before we actually close and say thank you, I wanted to open, we have 6 minutes before our session ends. So audience, any question for our panelists? I think there is one there.
I'm sorry, I thought he had a question. Gentlemen, thank you so much for giving us the insights. Though we know that in the banking ecosystem, creating an account, depositing money, and everything has gone digital to a larger extent. Just wanted to understand out of curiosity, how far are we from claiming the money in a particular death case? How can we make it possible digitally, or what are the roadblocks, if any, in that process?
If you want to direct it to either Axis or, yes.
It's going to be a generic scenario, I think, for all the banks per se. So
either Nitin or Samir or...
It actually depends on what is the claim. So, in the banking system, I think it's a matter of, a legal documentation, which is fairly simple. And in the capital market situation, it's about, the joint ownership of a demat account. So I really didn't understand why there should be a problem, because the digital flows are anyway in place. So it's more of a legal issue. Now, if you're talking about better digital and smart contracts, I'm totally with you. We need to probably completely reconfigure the way contracts are taking place, such that upon a particular event happening, it's virtually like a blockchain, where event happens, it is notified, validated, and then it triggers a payment. So if that's the point, you've got a great point. There's a lot of work that can happen in that space.
Thank you. There was a question up front, yes?
Hello, sir. It was very grateful to see you, all the legends of year, actually. So I'm Deepak. I'm coming from True Balance, actually. So I had one small thing about empowering the entire digital ecosystem, actually, over here. So this question is not for our Indian people, actually, because we have been developing this, and we have been making people to go more financial ecosystem, where we are building this PAN and Aadhaar card and making them everything digitalized. But this question is more over into the futuristic for what 10 years further is going to happen. So, Naveen, sir, it could be you, and Enric, for this question could be you, two people actually. So the question is, we have seen n number of people digitalizing all the platforms. Like, earlier, like 5 years back, we used to provide our bank, give a PAN card or Aadhaar card and being IT to them. So they serve us actually. So these days, there are n number of digital applications of coming into the fintech, and everybody asks us 3 questions that, give me your PAN card, give me your Aadhaar card, I will get all the informations and I'll provide all the services. So this is exactly is happening, and I see this trend can go with another 10 more years, what our Enric exactly said actually. But where do you see ourselves in 10 years, so that we should not make certain mistakes which digitalized applications are taking advantage, where we trust bank more than digitalized people actually, which is the application. So if you can tell us what is happening in Western countries, like South Korea is happening around, UK is happening, US is happening, where people have digitalized everything. If you just enter the mobile number, they get every information. So how effective is going to happen into India, and what should be the security level for us?
Got it. I will obviously ask Enrico to share the experience from UK or Europe as a whole. However, I would say we are not far behind. Whatever I have seen, Enrico knows more, but whatever I have seen is, like Raman said, Jam was the big change for us. I always see, so I worked with Visa, and I also appreciate what Amazon does. They have said that there will be self-driven cars, and if you want to fuel up, there will be a debit card already in the car, and there will be a phone which will also tell Amazon that I want this parcel ready, right? So now that is the future which they have thought of. All this is not going to happen without an ecosystem of fintech, banks, and the regulator coming together. So it is going to be a jam of all these three to make that happen. Technology of the use case could be Uber, could be Amazon, but unless we come as an ecosystem together, I don't see that happen. But that is my personal take. Enrico, what is happening in Europe?
Totally agree. Let me just make a simple example. European Union, is going to implement a new directive which is called AIDAS 2.0, which is about the setting across the 27 EU countries something which is called European Digital Identity Wallet. Okay? It means that I will have an app as a European citizen with my identity information, plus what they do call attributes, which are all the relevant information I can, in a secure way, share, for example, my medical information or my creditworthiness information, whatever it is. Okay, back to the point, the title is trust. Trust. Because the ecosystem of players is there. Trust means, what Naveen said, cooperation among all the players, but they must trust each other. Stop thinking, banks are not committed, fintech are therefore being sold. You know what I'm saying? Stop it. Trust.
Thanks, Enrico. Thank you, everyone. There's a
there is a
red light over here which says time's up. So thank you so much, panelists. Appreciate it. Thank you, organizers, and thank you, audience. Oh, we have time for one more? Okay. Because this is red and flashing, so I said, okay.
Yeah.
Yes.
So there are two statements that were made. One statement by Mr. Raman, who said there's no need for paper. Okay, so when the bankers completely give away the paper, that's when the ESG happens. And the second statement that Mr. Nitin said is no one wants to speak. Suppose the panel discussion goes on for 2 hours, you will not see anyone. Now, coming to these 2 points, now tomorrow if there is a digital hack happens, you know, everyone is pushing to the to digitalization, and if there is a digital hack happens, what we see is the bankers are not ready to speak, because if you go onto the IVR, you know, of any call center, it goes on playing, and actually no one wants to give trust to a customer by answering his genuine doubts, because they don't want to speak, and that's the reality. So in this scenario, how do you expect a sustainability to happen using digital financial ecosystem? And if you see one side, there is a private entities, and other side, there is a government entities. Government entities believe in stamp, paper, signature, and other end you have banks which are everything digital. So if you want to ask for a account statement, the statement comes without signature, and that is okay. But when you go to the government institutions, they don't accept it. So how do you see that gap bridging? So maybe the panelists can give their views on it.
Yeah, most certainly. First of all, let me correct you. I didn't say nobody will speak. I said nobody will hear if we talk for 2 hours. You won't be sitting here listening to us for 2 hours. So calling an IVR because banks don't want to speak is slightly, you know, a different context altogether. But see, banks are not the only ones who use paper. Otherwise, banks would have had their own paper mills, no, captive, if we were the only ones using paper. So paper being used for any kind of, like, would you go to a school and say that stop using notebooks? We don't do that yet. Maybe there'll be a time when that will also happen. So that's a different debate, that's a different discussion, which as a race we have to evolve to. Collectively as a society we have to evolve towards, and banks will do their part, all other industries have to do their part. Like airlines, we've seen they move to paperless on boarding and all of that. So good things. I am not commenting on private sector doesn't give you a statement. Public sector gives you a paper statement, but some other public sector entity does not accept it without a stamp. Okay, those are regulations, rules which are also changing with time. We have to give it time. Nobody's sitting there to say that no, I can, but I won't. It's not that sort of a situation. Okay, if there is, then those are aberrations. So I don't think we should be excessively worried about that. And see, these are changes. Now, who are most of the people sitting here? And from the distant view that I have of you, you seem like somebody who's been around for a long time in the industry. We have contributed to a lot of this environment degradation ourselves as a generation. And now we are expecting ourselves to change that for the next generation. And the next generation is already asking us that, why did you do that in the first place? Right? So rather than saying that you did it, I didn't do it, I did it lesser, you did it more, we have to collectively work towards that and make sure that the next generation and the next generation doesn't have to live with that problem that we've only created, or maybe the generation before us has created. The same point that was discussed earlier, that we are going to the global stage and saying that we are developing now. Why are you preventing us from manufacturing and what you guys have already done and contributed to the emissions? So please, I think my only request would be that this is a change that is gradual. It is certainly happening, but we need to be patient, and most importantly, we have to be patient with each other. And only then we'll create something which is good for the generations which are younger and will be there.
So let me just quickly mention that we are already paperless. So, it will be different in different organizations, but I can assure you, sitting here, that every single public sector bank will be paperless in the next 12 months. It's happening as we speak. So, the distinction between private banks, public banks, it's all going to go. Between what Nitin was talking, digital execution, stamp paper is completely digital. Today there is a EBG. You don't need a bank guarantee on a piece of paper with stamping. All that is completely done. State governments have bent over backwards to make themselves digital. So it's a complicated country, but in that complicated country, we've managed to chart a course which is actually going in the right direction. So again, do push wherever you are, whichever financial institution, push them for becoming digital is my only suggestion to you.
Very well said. Over to you. Thank you, everyone. Really appreciate it.
Ladies and gentlemen, a big round of applause for a stunning line-up of luminaries from the banking industry sharing their perspective on how digital financial ecosystem is going to help enable, equip India for sustainability in a long term. I think incisive, cutting through the clutter, remarkably simple, and having a definite course of action on how these mavericks see the digital India and the digital ecosystem shaping India. A big round of applause once again, ladies and gentlemen, for this round of panel discussion. On this note, thank you so much for being with us in this hall at the Global Fintech Fest 2022, poised to become one of the largest fintech events in India. I'd like to remind you all that there's going to be a wonderful and a highly engaging conversation that's going to take place between Kunal Shah, founder at CRED, and Honorable Deputy Chief Minister, Mr. Devendra Fadnavis, in Jasmine Hall 1. So make sure that you go to that hall and lay your eyes, ears, and all your senses in an incredible conversation that's going to unfold there. On that note, this is your host, Ridmavali, signing off. Thank you very much.
You like it like that. like that. like that. like it like that.